All right. Good morning. So it looks like we had some profit taking yesterday. Make sure you check out the gamma this morning. All right. Resistance 6260, 6300. S&P cash 6260, 6300. And we have Captain Condor out again today with a fairly large position. 13,000 contracts. Right at 6260 and just below 6200. All right. As you know, if you've been around for any length of time, we take profits first 15 minutes of the trading day, 15 to 30 minutes. Later, we're looking at what the trend is telling us. Yesterday, we had a fade, and according to options activity, it was most likely a lot of profit taking. We faded throughout the day. Now we're back up this morning, starting to fade a little bit with 11 minutes to go. We're trading right at 62.80, futures 62.81. We're up 5 handles. We were up 20 earlier. Okay, around looks like 3:50 a.m. It looks like we made the high of the day, and then we faded from that. So we're up like 20 handles earlier. Okay. Talking solar on Yahoo Finance, solar stocks. Those were looking pretty good to end the week. We'll look at that in a minute. Suggest yesterday's selling was more of a profit-taking consolidation versus a start of something bigger. Okay, that's pretty much what I was thinking as well. We had just a little fade. So let's go take a look at the way we closed. Okay, S&P 500. Okay. Okay, yesterday's high and low. Okay, so far we're up 30% from the April 7th low.
Well, I think we saw actually a prime example of why in June, right? We saw some breath coming back into the markets. We think this, the rally that we're seeing probably does have legs to continue to be broader. It's not just the Magnificent Seven that we're seeing make out on this. I mean, look,
MACD's starting to peak a little bit, so momentum is slowing, definitely. We had stochastic still embedded. All right, so we're above the 21-day. We tapped the 9 EMA. Let me just put the 9 EMA. Well, that's the 9 EMA. That is the 9 EMA.
It's a very, obviously, very picture, and we recommend diversification in general, but in the face of
21
the
day.
uncertainty that we're all looking at in these markets, the volatility, you said it yourself, right? The
21 day.
in the news, which by the way, I don't think was a big surprise,
Okay,
right?
21 days here. Okay, so
It's not surprising at all.
I've been sitting here with a
coming back into this because they've
error on my charts. This is a 21 day there.
during those 90 days. So none of this is incredibly surprising, but it does inject a lot of uncertainty, and diversification really is kind of the antidote to uncertainty in investment markets.
So where do you think the best place to look for that diversification is right now?
Yeah, I mean, a lot of portfolios, we oversee obviously big portfolios that retail investors, right? So retirement type portfolios, what people are living on and expecting to live on in their old age. And, there's
In their old age.
But in the last, several
That's
years, because of just the predominance of
not
US
politically
markets,
correct.
we've seen a lot of
Can't-
large cap,
Can't call
large
old
cap
people old
questioning around,
age.
do I need something in the S&P 500? Do I need to be in small cap stock? Is there a good argument for international diversification? And we think there definitely is, right? I mean, at the end of the day, the market is pricing what the value of those future cash flows is from all of those different sectors. So having international positions, including emerging markets positions, we think pays off in the long run. And as a starting point, even if you're just looking at,
All right, let's get ready.
We have as a weight to these places. If nothing else, that's a nice starting point. Small caps as well. I mentioned them before. There is, they've struggled for sure. There's a profitability issue in the U.S. However, if you look internationally, small caps have, stood up a lot better. There's less of a profitability issue, and there's also a lot more easing going on internationally. So those companies have done better this year. Again, a sign of why you want to be kind of diversified in these different parts of the market.
Yeah, international small caps. That's an interesting one. We haven't talked as much about. When we look more broadly at the U.S., sort of more macro.
Okay, now that I'm finished diddling with this
we talk about sort of the other
9 EMA, 21 day,
and earnings. How long do you think
50 day.
uncertainty lingers before we sort of turn our attention to, say, earnings, which are coming down the pipe?
Okay.
So how you worded that question is super interesting to me. I think we turn our attention probably pretty fast. I think President Trump is already kind of.
Okay, so it looks like a big cup and handle. All right, so we got the breakout. I posted a chart last night, which was pretty interesting, from a trader. Why is that way over there? Oh, I did made a little change there. Okay.
How long do we stay focused on it question? I think you're going to see a shift to earnings. Corporate earnings really have continued to buoy this market. I mean, we are not looking at recessionary conditions right now, in spite of all the uncertainty.
Okay, let's get ready for the opening bell. One other thing I wanted to check was junk bonds. Did junk bonds see any buying at the low of the day? It did not. Not much anyway, just short covering at the end of the day. So junk, keep an eye on that today. Let's see what junk is doing. Junk is a bit off of yesterday's low. Okay, junk bonds.
What's not coming up? Well, of course, we'll dive more into all these tariffs, potential winners and losers from Trump.
Okay, 3 minutes to go. 3 minutes to go.
And then, of course, we'll take more to Apple reportedly losing a key AI person as it's trying to develop more AI functions to convince a skeptical Wall Street. And then last but not least, we'll probably talk tomorrow. No, it's their day. It is not marketing. It's just their thing. It's their thing. So you can't buy Amazon Prime.
Yeah, so you could see right now there's more people long yet and short yet. So it's not a security trade, but yes, we could see.
Okay. All right. So we've got about 30, 40 stocks advancing at the moment on the NASDAQ 100. We have about 10 to 12 decliners. So this looks much better. The S&P 500 is majority advancing or unchanged. We have about 40 to 50 out of the 500 that are currently declining. Okay, so that looks good. Let's see what Netflix is doing. Netflix, I did sell a credit spread on Netflix yesterday, looking for Netflix to bounce. Okay, Google moving up. Okay, Netflix, the break even on that one's 12.58. It's currently trading 12.89. Okay, so Google is popping up a little bit here. Google, with less than a minute to go. Let's get ready. Take profits first 15 minutes. Reassess the markets after 9:45, 9:50. Look for stocks with high relative volume for candidates to trade. Security stocks doing good, doing well. CIBR, ASST. Okay, ASST. Okay, IREN is trying to push higher. IREN, IREN. Okay, give it a few minutes for the markets to settle down. Okay, Broadcom pulling back. Broadcom pulling back a bit. Okay, the gaming stocks. I'm looking at Win for the follow through. Win. Follow through. We've got Las Vegas Sands looking for a bounce. Las Vegas Sands. That's gapping up this morning. Las Vegas Sands. I did take a trade on Boyd Gaming. That's making a profit and moving higher. Currently 3 days in the same area. That's up. That's a profit so far. Robinhood being mentioned yesterday. Trending. Robinhood. Hood trending. Oh, sorry about that.
Which may add further near-term pressure on shares. Like, we don't know how serious he is, or
no, we don't. He's cryptic, as he has every right to be cryptic. That the one thing that most CEOs are really beholden to the board. In this case, a lot of people feel, wait a second, he is the leverage, not them. And if that's the case, then the stock goes lower. Can you imagine if he reads? Well, he's not going to read, obviously, but the board reads odds.
All right. Good morning.
And again, Jonas, then the stock's a $40 stock almost instantly. So these two pieces are very important. And Adam, who might, I don't got the specs, but Adam might.
All right. So the New York Fangs are all over the place at the moment. Okay. Coinbase looks like Coinbase is going to follow through. Robinhood looking pretty good. Casinos. When Elvis higher. Tesla pop in there.
get you to 4 trillion, which would be the first step.
Netflix. Netflix just kind of hanging out here. Okay, I have like an 1165 credit spread. 1160, 1150, right? Yeah. Okay, so futures are kind of sideways at the moment. We're off the best levels of the session. I was talking, and didn't realize I didn't share the link. SoFi gapping up. SoFi looking good.
Don't count them out. And Nokia, I mean, I'm sorry, NVIDIA, the one thing I would say about NVIDIA is people have to recognize there's so much in a platform that this company is worth.
Okay, Coinbase looking good. Coinbase grinding higher. Okay, Bitcoin, let's see what Bitcoin's doing. Bitcoin is still trading right around 108, 109, just below 109. Apple's lower. Coin fading from the high today. Meta fading from the high. Low profit taking. Google profit taking. Palantir low profit taking. Had a nice little run yesterday. Apple. Okay, we already talked Apple. Apple. Tesla moving. Okay, Tesla on the move.
It doesn't sound like you begrudge some of the downgrades.
Tesla. Okay, looking for Tesla to get something going here. Okay. Tesla. Congrats, Bobby T.
Tried to say, listen, we're making the best chips. We're going to take care of this. Got to ship the 1,000 power versus video. But then when I didn't confront him, I suggested in a convivial and conversational way. But isn't it?
Okay, so Bobby T did take a big position in Tesla near a market on close.
If you've got NVIDIA, you're okay. You're a made man. Yeah, you're a made man. I mean, it does feel like that. Now, people can say, hey, come on, it's just a semiconductor. I have to come back and say,
okay, Coinbase.
The stock would be at 58, not 158.
What's Core Scientific doing? Core Scientific starting to move a bit higher.
Where the next iteration doesn't work. They don't seem to understand that the previous iterations still do work.
Okay, Iron ripping. Okay, Iron. It's up 5.13%.
Okay, now we can put men on Mars instead of the moon. I said, well, what are they doing on Mars? And the thing is like something to do on Mars. Now, of course, we think about, well, maybe Mars, possibly one day.
Okay, Circle inside day.
I think people do not understand that things have switched. That the software business, whether it be, unfortunately, because
what's Supermicro doing? Supermicro just waiting for the markets to settle down. Supermicro trending, booking again at the top of the NASDAQ 100. It's up, 1,500 points, 1,600 points on the year since the April 7th low. Okay, Iron going. Iron looking really strong here. Iron's going. Okay, pushing a bit higher.
So you do think that software needs to catch up to hardware in general?
Iron moving a bit higher.
I believe in Mark. Very
Hiron's on the move.
But there are a lot of other people say, don't forget, Jim, there's all these other products that they have, and they're not winning on those. And who's winning on those? Well, ServiceNow's decided to come after them. Now, that's important because I think that if you're a Mark, you'd say ServiceNow, give me a break. We're very entrenched. But
Okay, New York Fang components, profit taken on all of those for the time being.
But let's step back. Versus equities. I think I still favor a lot of the great.
Yeah. On Samsung's results, these are preliminary, but is this a comment on the cycle right now?
No, they're just kidding. They're like, they're just kidding.
Broadcom, okay, a little drop on Broadcom, starting to get a catch a bid. Microsoft a little bit lower, Apple's lower. All the New York Fangs are lower at the moment. Okay, so we'll come back. We'll look at something else. Let's go take a look at the Dow Industrials. That is something that Farmer Jim likes to look at as well. Okay, Apple day 2 on the change in trend. We're not going to go straight up every single day, so we should anticipate a pullback and a retest of breakout areas. Okay, but we're looking for institutions to show signs of picking up more shares on the dip, so we'll keep an eye on Apple for that. Okay, the other 30 on the Dow Industrials, the other 30 Caterpillar, inside day. Boeing had a good day yesterday. Boeing sitting on top of yesterday's close. Chevron looks like it might follow through. Okay. Merck retested the 21-day. You know I like these pullbacks. Retest the 21-day. 9 EMA starting to bounce. Merck looks pretty good.
And then we just always forget it. If David were here, I think he would say, well, Jim, don't forget that Broadcom is a $1.2 trillion company. And Broadcom is, well, they own VMware, but Broadcom is a semicon company.
Jim, you mentioned Amazon. We'll see what we get. How much
9 EMA is 80.71.
That's a great question. I think that those who complain about inflation, they should go and look at what they bought and what they be paying now. Now, I know that we're doing pieces with saying that the tariffs are bumping it. We know that Jesse said that's just not the case, that there was a lot of pre-buy. But I think if you go, and I've spent some time going through it. I mean, I got up early and went through it.
Okay, so that looks good. Merck looks good.
Everything I bought.
Microsoft. Inside day. Walmart looked really good yesterday. Watch Walmart. Walmart had a good day yesterday. Trending. So you don't want to buy the high of the day. You want to buy the dip. Okay, so let's look at stochastic. Stochastic's still pointing higher. So let's tell you, look for a close in the upper half of the daily range. What's the Walmart upper half of the daily range going to look like today? Okay, so let's look at. Okay, so that little dip is probably going to get bought.
Your prices in many cases on Prime days are going to be like 2018 prices when I look at it.
Very significant discounts, and not, our stores team, our retail team worked very closely with our third-party selling partners because we know people are very sensitive about price right now, but we also want to make sure we gave them.
Iron, all right, that had a nice little pop. We saw some profit taking just now. Okay, so we got Amazon Prime week, whatever it is, 8th through the 11th.
It is, and by the way, now when you go to Alexa just wants to talk about Plus. I want to talk about any of that. No way, doesn't know it. Talks to me about Alexa Plus, and Alexa Plus is here, and Alexa Plus, by the way, they were losing $8 billion in that.
Okay, SoFi looks like they're going to continue to pile into SoFi. SoFi piling in. Okay, so watch the volume here. All right, so we got some significant volume. All right, we got a little pop, and look for a fade. If you're interested in buying SoFi, do it on a dip. Don't buy it at the high of the day. This dip might just be some profit taking, most likely is.
But there is the top 100 deals. You're like, are you kidding? There's a lot of are you kidding? And I haven't seen that. I have not seen.
All right, super micro. Looks like that might be trying to accomplish something here. Super micro. Okay, SMCI. Super micro on the move.
Have you seen the Ryan Reynolds with Richard Galanti? No. Yeah. Okay, Richard Galanti was the guy who did a lot of pricing. Yes. He's the guy who had the $1.50 hot dog. Well, there's a Galanti Ryan Reynolds. I wish we had Galanti Ryan Reynolds app where Ryan's talking about the great bargains.
Okay, looks like we're going to get a trend day on. Looks like a trend day.
And these two people are not considered to be why I think they're just not. They're not getting the value in terms of what they're providing for America. I mean, this is the what you look at. This is the cost fight. This is the CPI. It should be in the CPI.
Trailing stop.
I bought half the Gillette razors and I paid twice the price. But for the refills, now, by the way, you do want to slit your throat when you see the price.
Okay, yesterday's lows around 46. 46. Okay, so that looks pretty good for a day trade. Super micro looking pretty good here. Okay, super micro might get something going here. So look at SMCL too. Super micro, SMCL. Oops. SMCL, SMCL. Okay, that looks pretty good. SMCL. Can we get a point out of this one? Looks like it. Super micro. Okay, starting to come off of the 9 EMA, looking for the bounce. Okay. We've got an 8-day range, 8-day sideways between 16 and 19, 8 days. Okay, all the New York Fangs are lower at the moment, so we want to focus on other things. Let's go take a look at what is moving the markets right now. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, Super Tuesday. Okay, Albemarle on the move. Albemarle. Albemarle is on the move. Moderna. Okay, Moderna looks good too. Moderna coming out of a squeeze. Let's see. The Dow. The Dow's okay. Delta Airlines. Delta. Top of a range. It could break out.
Now, this is the kind of thing, and I attacked this last night on Man. The analysts who play this game, like you downgrade Goldman to a sell. But what are you going to do? You're going to upgrade it to a hold when it goes to 683, and then a buy when it goes to 646, right? That game doesn't work. You're out. You're out. And not because Solomon called you. I mean, I wish Solomon would do that. I wish he would call and say, listen, you're out. Right. You know, you can take your wife and your mistress. You know, he's not going to do that. He's not going to do that. But I do think that when you downgrade a company like Goldman with a 15 molar to a sell, what world don't you see the multiple?
All right, so watching the New York Fangs, they're not doing much of anything right now. Neither. Aluminium. Why do the British call it aluminium? I know it's a word. It's just, I guess that's the way you pronounce it, right? Aluminium. I saw a comedian speaking to a British audience, and he was a young guy. I forget his name. Brown hair. He's popular with the younger crowd. Matt something. Anyway, he was in front of this British crowd, and he was talking about, I don't know, he said something about no, the one of the audience members said something about aluminium, and he said, "That's not a word." And of course, the whole crowd like yelled back at him, "Of course it is!" And he looked it up on his phone. He saw it, and he was like, his reaction was pretty priceless. All right, watching the markets, the New York Fangs are still mixed to lower. Other stocks on the move, like Delta, Lionel Bassell looks good. A lot of industrial Lionel Bassell.
Did you see Netflix? Yeah. Netflix is like Camelot. Yes. Well, it's been different go here now. Summit.
Yeah, but you said you don't have a problem.
Good morning, Frank.
Yeah, you said yesterday.
Not at all. Not at all. Netflix remains something that can still take mind share, and they're still buying all these things from overseas. And I do think that other than the bear on Hulu, Netflix game set.
Yeah.
And if you're not watching the bear,
Yeah, I have some Core Scientific too.
But I do think that Netflix remains the gold standard. And you sell that stock, and then again, what are you going to do? You're going to get back in. Yeah, you have to be thinking about getting back in. Where do you get back? Because the individual investors buying the whole way down. It's the institutions who have lost. It's true. And you know what? They want to just take a sabbatical. Little more has been.
It has been one of the hallmarks of this year so far. By the way, speaking of bonds, we mentioned the curve. 30-year back to 496, 10-year 442. That's about the highest since June.
Okay, Tesla's starting to go green first. Tesla. Okay, Broadcom is green. It's trying to hold on to the gains. It did see some profit taking first thing in the morning. People quick to take profits. These momentum traders, people that swing overnight. Micron looking pretty good. Micron squeezing. It's not an entry just yet. We need to start to move. Oracle continuation. Oracle with a continuation.
Too early to know if that actually comes out, right? It's certainly been a technology that's been transformative.
Oracle looks good.
Don't forget,
Moderna is up 6.2%.
feels like yesterday did. Yeah, it does. But I think for Wall Street, they see this and they go, "Ooh, we got a pure play here."
SWK, Stanley Black and Decker.
That companies are looking towards, especially companies that don't necessarily want to build on-prem or
Starting a bullish trend, it looks like. 1, 2, 3, 4. Looks like it could break out above 73. Of the 200-day. 200-day is up there at 78.50.
Everybody has to go whole hog into AI. I think we'll find out if it ends up truly washing out. All right, let me get over to because I think we're all close to land on this one. Price to sales ratio on CoreWeave, 27.4 times trailing. Price to book 25 times trailing. And look, always not alone. I mean, these AI trades have valuation.
Okay, so the New York Fangs are still dippy. Let's see. Okay, Tesla trying to bounce. Tesla trying to go here. Tesla. Okay. Very gappy. Needs to get back above the 50, 200-day. I do have Tesla shares. Bobby T bought Tesla shares at the low, almost the absolute low yesterday. That was kind of cool to see that conviction. Okay, Tesla with the bounce. Okay, looking for a nice trend here on Tesla. Could be a nice mover. Get 10 points out of this. Let's see. I'm going to buy some Friday calls. These are throwaway. I won't let 100% of it go away, but if I get a 50% stop, let's see what these can go for. Let me go for Friday calls. Can we get back to the high of the day? Possible. Yesterday's fill this gap, maybe. All right. I imagine that momentum traders will try to take it back there. So let me look at 315s. 315s. are $1.50. I'm gonna buy 4 or 5 of these just for giggles. Okay.
Might be an interesting chapter for autonomous if they come to the Northeast, but certainly that's relevant to Uber too. Meantime, relatively muted tape. That's the piece of 6. Don't go anywhere.
I want to bring up our question of the day. It's a simple question, at least I think I put this up. The answers that all tie back to federal reserve policy. Where are the economic fireworks? And Barbie, let me go back to you here because if that does happen, what will happen to the outlook for interest rates? Because the argument can be made, this market is trading at record highs because of views that we might get 2 rate cuts this year.
I'd sort of say that we're trading at record highs, not just because of expectations.
Okay, Tesla looking for a pop.
What we've seen in earnings and the expectations of earnings being at around, call it 7 to 8% for the entirety of 2025, perhaps even 2026. So it is twofold there. But coming back to your question of the week around, sort of economic fireworks, I think all eyes staying on inflation is really important.
Okay, junk bonds. Let's look at Tesla, Iron, Tesla. Okay, let's look at Tesla. Looking for a pop here. See if we can get something going. Okay, I would like to see most of the time I would like to see a buy order block. There was a buy order block after hours. Once we started to see a higher low, there was a buy order block last night at around 1750. Okay. So with those buy order blocks in mind, we'd like to see more buy order blocks. I don't see any supply until we get back up there near the gap 313. You see a little red line overhead. Okay. So looking for this to maybe catch some momentum. It could still fail. All right. So keep in mind that it could still fail. Okay, watching that. Tesla. We'll see what happens. We got supply overhead. We got the 200-day right there. Okay, 200-day, 50-day.
First, congratulations to Michael Semblis, 20 years out of the market. I think that's probably the most important influential.
Okay, watch Tesla here. Okay, I'm going to post something on StockTwits to see if there's anybody interested in trading Tesla with us. Let me just mark up a chart. Let's go here.
Remarkable stocks, and I think that's going to be a lot of fun because wow, what a winner! And I remain steadfast that Ford and GM, that Ford multiple expansion, Ford is the winner. I think that if we had Jim Farley on, he would say, look, they're the biggest beneficiary of this.
Do you envision Friday's meeting bringing a lot of moves?
I am talking about a little controversial stand on the president, and separating the president financially from the president that people have mixed views.
I see.
Because this is incredible for America, for the fire hose of money that's going to be coming, not just from the individual investor, but for the accelerated appreciation. I don't think people realize what that means. It means it's like you got to start building. You save a lot of money to start building. And the industrial America, I mean, you can look and say Honeywell today would make it easier to do the split up. Industrial America, that went up yesterday. The analysts are all missing. The analysts don't really not pay attention.
No. We every time the XLI makes a new high,
just find people want to get off the train, and the train is, well, it's the Broadway Limited.
We'll see it tonight. Mad Money, 6 p.m. Eastern time. As we got the Dow down slightly, down about 35. S&Ps with the green. Don't go anywhere.
Okay, Carl Catania. Okay, let's see.
Strike calls. So maybe capping some of your gains, but also reducing your risk in this bullish position. With IV percentile rank only about 35%. So we're in the lower 1/3 basically of implied volatility levels that we've seen over the last 52 weeks. So this might be the way to play it if you think it's going to continue to grind higher into that earnings event while avoiding the earnings event.
Okay, so that's a more bullish example. What would a more sort of neutral trade look like, Tom?
Well, I think a lot of traders, investors out there feel like they've missed the boat here on Uber on this rally higher. So I looked at another strategy, a little bit shorter term as far as duration goes, where I'm going to look at a cash secured put in this name where I can sell something that's out of the money to the downside on the put, taking advantage maybe of a pullback where I can buy the shares cheaper. Or if it doesn't pull back below the strike that you sold on this one, you still get to keep the credit that you collect. So I went out to the July 25th weekly cycle. So just 17 days to expiration, about 2.5 weeks in this one. And I looked at selling one of the 95 strike puts. You're going to collect a credit of roughly about $2 on that. So that's what you can make.
What's he looking at? Uber puts, put credit?
This type of
Oh, I like that idea.
strategy is twofold, right? I either want to keep that credit that I collect on this
Okay,
one,
let me look at Uber. He's talking Uber. I like to buy. I like to sell credits on July 1st, July 25th, 95 put. Oh, he's selling a straight put for credit. All right, so Uber. Could do a put credit.
Hey, I missed the run up, but I'd be willing to buy it if it pulled back here a little bit.
86.
Takes advantage of that with the cash secured put.
Okay, I like the idea of a put credit spread on Uber. Okay, Uber, little inside bar. Looks like it's going to stair step higher. Earnings wise, let's take a look at the earnings on Uber. Earning, yeah, it looks really good. Composite rating of 97, which is really good. Group relative strength A+, obviously. It's funny because if you're walking about and you think, oh, let me catch a ride. You don't even think taxi anymore. Taxis, at least I don't. I think, oh, let me just hit my Uber app and get a ride, whatever. We did a couple of those. First night we were in DC. My son wanted to go check out the Lincoln Memorial at nighttime. And I was like, oh man, this is probably pretty risky. And then I realized how good the security is in DC. I mean, there's cops literally on just about every corner, every other corner. And so we went to Lincoln Memorial late at night. It was really kind of cool. Look out over the reflecting pool. Next day, of course, we were back for the fireworks. Crazy fireworks. Watching the futures here, not doing much of anything at the moment. All right, markets continue to fade. All the New York FANGs continue to fade.
No overdraft fees and enhanced security features to keep your money safe. Also,
Uber.
Checking account is linked to your Schwab One brokerage account. You can manage your checking and
Sales margins and return on equity is an A. IBD ranks it an A. Sales percent change from the last quarter, 14%. 3-year sales growth rate, 24%. Annual pre-tax margin, 9.4%. This is Uber I'm talking about. Okay.
Spotlight the biggest market trends on Trading 360, 11 a.m. Eastern, only on Schwab Network. doing Morning Trade Live. I'm Sam Barnett, live at the New York Stock Exchange. Let's take a look at the markets at this hour because they are looking pretty range bound for this Tuesday after that sell-off we saw yesterday. A bit of a
Okay. Okay, futures fading a little bit more. Okay, we're down for 5 handles now.
I think we're all getting used to this pattern of President Trump making threats to impose tariffs, then delaying them and giving people more chance to negotiate some kind of solution to satisfy him. I think the question is, what kind of deal is going to be possible? Japan and Korea, I think, are scratching their heads because they've been working very hard to come up with a deal that will satisfy Trump, and they don't seem to be there. So it's all a little bit.
Okay, what's Tesla doing? Tesla just sitting here, not doing anything. Okay, looking for shorts to cover. No signs. Well, a little bit of short covering on NVIDIA. NVIDIA short covering.
Yeah, I mean, it's really hard for these countries because they are so dependent on the United States as a market.
Okay, short covering on NVIDIA, Meta, ditto. Okay, so New York Fangs are kind of like out of it for right now. Okay, Uber. Uber. All right, let's go take a look at the Dow Jones now. Again. Dow Jones. Chevron back above the 200-day. CVX. Chevron. IBM. IBM trending.
This is again part of the mystery of all this. I mean, both Japan and Korea have trade agreements with the United States. Korea actually has embedded in law for over a decade now.
Okay, CRM, Amgen, higher low, NVIDIA, 3M, Caterpillar, inside day, Caterpillar up 0.5% today, Merck up 0.5%, United Health still consolidating above 300, Honeywell flagging at the highs. Okay, small caps, S&P small caps. Okay, these are the stocks up on the small caps. Okay. Okay, CC Rider. Okay, big base on PG&Y. SNDK, SanDisk. SanDisk. Clean Spark, CLSK trending, just came down to the 90 and bounced. Okay, Google still fading. Google down below yesterday's low, back to the 21-day. Okay, let's go take a look at. Okay, so right now we can see that the markets, we have the dealer hedge flows are just kind of sideways to slightly lower. We've got an iron condor. These big strikes here are an iron condor. Okay. Long and short. They sold an iron condor. So short and long overhead. Short and long below. Okay. So one of these strikes could be tested. Looks like at the moment, looks like we could test the lower strikes at around 61.95, more or less. Okay, so if you're looking for a move in the markets, watch the hedging flows on the S&P 500. Okay, starting to see some movement in Apple. Let's keep an eye on Apple. Apple is in the process of a trend break. It's going to create higher highs and higher lows. All right, so right now it's trying to produce a higher low. Okay, so it's trying to produce a higher low. Do we get a buy? Or 2 days in a row, we had buyers down here. So watch Apple. This could be an opportunity. I already have a position in Apple that expires July 25th, I believe. Let me just double check. July 25th. I got the 210s and the 220s. Okay. 220s are a little bit out of the money. 210s, I could see us getting back to 210. We're right below that right now. Okay, so maybe a trade on Apple for the bounce. Make sure you have enough time. Apple, do I want to add anything here? Let's see. I do want some time. So rather than this week, maybe next week. So that'd be the 18th. Apple. 210s. 215s are a 20 delta. 27 delta. The 21250s are a 38 delta. And the 210s are a 50 delta. We're at the money. Okay, let's take a look at Apple, see if we got any buy order blocks. Okay, we had some buys over here, but not today. So we could ping pong between these levels, Apple. Could ping pong between these levels. Okay, watching Apple for a follow through.
And we're all expecting there to be some implications in possible inflation, certainly in price increases, possibly even in corporate profitability. But we haven't seen that happen yet. So I think we're still on the watch for that type of stuff before we're able to sort of put real numbers on it. But again, when the market sort of started out very widely.
Okay, so right now we're just watching this fade. And we took profits over the previous 2 weeks, and I'm very very slow to add a lot of risk on because we could see a couple of more days of this kind of modest fade in the S&P. Let's look at SPY. SPY looks like we're just kind of fading ever so gradually back to the 90 EMA. Look for a pop and a move in the opposite direction. July is seasonally one of the stronger months of the year for tech. Okay, tech XLK is still trending. SMH, semiconductors. Okay, we did take profits on semiconductors on Thursday. SOXL. I felt we could see a little pullback. We did get the pullback, and it's trying to bounce a little bit right now. I had this week's calls, so they will expire at the end of the week. Okay, watching now. See if nothing's going on right now. Apple's trying to do something. It's not moving. Apple. That was a sell. That was a limit order that just got taken out. Okay, looks like a slow day. IWM, Mondo trading IWM for the past few days. Calls quick in and out.
Right now, because as you mentioned, we're still largely the same. Our fixed income team sees fair value.
Yields bouncing back to 4.42. Technically speaking, this should put pressure on IWM. So we're looking for that. NVIDIA starting to bounce. NVIDIA with buyers at the low of the day. NVIDIA. Okay, NVIDIA, nice little pop off the low. So 158 back to 159. So a point move there. Okay, Tesla.
We'll likely see a cut, but I don't think that's the most important part for the moment. I think it's going to come back to the earnings, the technology, and the resiliency of corporate America.
Keith, do you not feel like there's any fragility in this market? I mean, in your note, you talk about the bull just keeps charging, even though things are broken along the way. Can we really use history as a guide when there are so many cross currents at play? It just makes you feel a little nervous to say, well, the trend has been your friend, so let's just keep going this way.
Yeah, well, we definitely focus on the weight of the evidence, and the weight of the evidence, I mean, it's not all bullish. It's somewhat mixed, where in our overall allocation, we're more aligned with long-term.
Okay, the SPY continues this fade at present. Okay, we're looking for buy order blocks. We got sell order blocks right overhead. Okay, let me just update these data points here. Okay, so hedge flows are still sideways to lower.
And the technical trends, are somewhat improving. So you put that all together, I'm always nervous. I'm always worried about the downside, but I think at least you have to give the benefits of the doubt and have some things in the portfolio to hedge. We're more focused on large cap. We're more focused on growth. We do have fixed, some high quality fixed income, and we've been positive on gold all year long as well. So it's, I don't think it's an all or none situation. You should still have some hedges for some potential disruptions or more broken glass along the way.
Yeah, those rallies in the past, 20% in 2 months. I was looking at the history. Only the 1998 low did you really go right back to an all-time high, right? Usually it's kind of coming out of.
That's interesting. Let's take a look at a couple of things here. Here's SPY.
99 scenario is kind of the bull's friend.
Okay, SPY.
Thank you very much.
Okay, the current look to SPY.
For the rest of the hour, former US
Let me
Trader
just go
Greg Lundberg's
here.
with us on the Trump administration's
SPY. That's what SPY
changing
looks
tariff
like. All
policies,
right,
which he
so
says are more
this is
performative
SPY
than
currently. Now let's go look at. It's actually, the same time of the year that COVID hit and we had that big drop. I posted that in the chart in the room last night. So from August to June. All right, remember this chart, okay? Let me just take a snapshot of this. Actually, you know what? Let me just pull up what we had last night rather than recreate it. But anyway, 2020 looks very similar. Okay, 2020. Okay, 2020. No, 2019. 2019, August. And 2020, June, July. Okay. So this looks exactly, this is 2020 for COVID. All right, we had the same drop, okay? And the same follow through. Of course, what happened after 2020 into 2021, we had that massive rally and we took out these highs. So I posted a chart last night. Let me just look at that from last night. I think I posted it in the trading room. There it is. Okay. All right. Okay, so it looks very similar to the current 20-50-day cross. Okay, so if we go back to current and do the same thing, 20-50-day cross, looks very similar, except we've already broken out now. We've already broken out. Very cool. So that was, someone mentioned that, I think it's DJ Rick on StockTwits. So anyway, SPY, we're just sitting here looking for buyers. Like 620 looks like a support level here at L1, level 1. Watching Tesla for a bounce. Market's not doing anything. So if the markets aren't catching a bid, I don't want to step in front of that. Same with yesterday. Take little risk. Okay, so we have other stocks that are moving on the Dow Jones Industrials and Super Micro. Okay, do I want to add to that one? All right. Super Micro. I have 1,000 shares of SMCL. I have 600 shares of SMCI. SMCL.
Do you think this really moves the dial on the trade deficit with any of
SMCI.
its trading partners? Is this accomplishing
SMCI
any
trying
of the
to continue the trend. 8-day range. SMCI. Core Scientific. Core Scientific looking for follow through on the bounce. Core, we offering them $20+ per share, 20 plus. I think it's $20.60, something like that. The offer.
Are beginning to reciprocate, but secondly, frankly, other countries just
You would think they would have gapped up to 20 already and stayed up there instead of gapped down. So that was an opportunity that Mondo's son mentioned. Soundhound is on the move. Okay. Soundhound on the move. Looking good. Coming out of a squeeze. Looks good. Okay, let's take a look at the buy order block situation on Soundhound. Okay, so far we got a buy order right at the open. Okay, we got profit taking now. Got profit taking coming in.
Once we get the market reaction that we did on Monday, when the president sent all these threatening letters, you saw the same predictable and swift downturn in the market.
Okay, this is Soundhound.
Signal to this administration time and time.
We'll keep an eye on this one for a minute. Soundhound. Iran had a nice pop. It's faded.
Are not going to help with the reshoring and the manufacturing that the administration says that it's committed to. And
Tesla's starting to move. Watch Tesla.
like it's more threatening. It doesn't feel strategic. These numbers are just being pulled out of there. We have focused quite a bit, obviously, on China, the Asian markets, and Europe. But I was at a conference last week with a number of African countries, all of whom we have trade surpluses, and they were absolutely.
Tesla's been rejected at 300 so far.
To do in order to avoid increased tariffs when they already are at a deficit with the U.S.
Ron, you mentioned that this does not necessarily promote the idea of reshoring or kind of changing the manufacturing balance globally. The talk of that really has receded a fair bit, hasn't it? I mean, the administration's focusing on the revenue that's so far coming in.
Okay, watching Soundhound. Tesla getting something going here. Tesla. Okay, just looks like, you know what it looks like on Tesla? It looks like because of the lack of volume, it looks like the volume's tapering off on this move higher. Just looks like momentum players. Okay, at the open, looks like some shorts covered, and now we're looking for. I'd like to see these volume bars start to take out, spike higher. That would indicate new money coming in. Watching for it right here. I'd like to see a buy order block on Tesla. Tesla. There goes Tesla. Starting to move now.
Ultimately by American businesses who import and American consumers who use these products. And it's just a fancy word for tax. And you're getting at an underlying point that I think the administration does not want us to connect. That on one hand,
Tesla looking for a rip higher.
We've just given you the biggest tax increase ever. But buried in that is a reality that they're expecting $3.7 trillion in tariffs to pay for that. And it's not going to be paid by Japan or Mexico or Canada or Korea. It's going to be paid on the U.S. side. So on one hand, they give you something. The other hand, they take it away. And so I don't think that argument would have been persuasive.
Tesla pushing a bit higher now. Okay, volume is starting to pick up. Watch Tesla. Volume starting to pick up. You can see right here. These volume bars are getting larger. Okay. Okay, you can see the volume right here is starting to pick up. This volume bar right here. Okay, I'd like to see it spike up to this level here. That would indicate that we've got some new money coming in, some momentum players. Looking at the same thing I'm looking at. Potential move into the gap overhead.
To what degree do you think China and the BRICS in general have been persuasive?
S&P still no bounce.
Well, fortunately,
Netflix still fading. Netflix.
but the easiest way sometimes is to get your enemies organized is for you to become the antagonist, for you to become the protagonist. And to me, one of the greatest casualties of this is the president is right. We are the most desirable economic market in the world. But that was based on not only our economic strength, but because other trading partners believe we respect the rule of law, that we adhere to a deal when we make a deal. And the more that we depart from that, we just feel like a bully trying to throw its weight.
All right, enough of what you think. All right, so yeah, okay, whatever. Whatever. Talk about price. I don't want to hear your opinion. Everybody has an opinion about what's this and what's that. Okay, Netflix still moving a bit lower. Netflix.
Yeah, 5 years sounds like a long time when you say it, but with all the activity that's been happening recently, it really feels like more of a recent phenomenon than it is. Strategy was clearly the pioneer here.
Okay, Bitcoin still not able to break out of this range that it's been in. Bitcoin. Let's take a look at Bitcoin real quick. Tesla. We'll come back to Tesla in a minute. BTC, USD, Bitcoin. Okay, so you can see the daily over there on the right. Okay, let me zoom in. You can see the range. Okay, so this needs to get above the top of this range. It's basically a triangle, I guess, or a channel down. Okay, you can see the channel down. Okay, that's a parallel line. Channel down. 50-day price above. We're looking for a break to the upside. With all these Bitcoin initiatives, I think that institutions have a desire and an incentive to get this higher, obviously. So watching this channel down in Bitcoin, looking for a breakout. Hey, sweetie, what's up? Kitty cats came to visit.
This has legs, and it has legs for a long time.
Okay. All right, Tesla. Back to Tesla. We'll go back to Tesla. It's starting to get a move on. Okay. This is Bitcoin. All right, so Tesla. Bitcoin's not doing anything right now. Tesla's on the move. Okay, Tesla. Can we got rejected up here at 300 earlier. Watch that volume. Watch this volume. We need some buy order blocks. I don't see them yet. Maybe they'll form if we break above this pivot. I think that's the way it's calculated. Okay, Apple with a higher low. Apple.
Where are you seeing the most excitement around that?
Well, you're seeing a significant amount of excitement in Japan. Japan has been a yield-starved country, but it's also one of the largest economies in the world. So a small hotel company called Metaplanet launched in Japan, and what they found was that they had an opportunity there because of the tax treatment of Bitcoin. So in Japan, if an individual is holding Bitcoin, their tax rate is going to be around 50%, but if they're holding it through their
Okay, Tesla watching for follow through on the bounce.
Exposure through a corporation like Metaplanet, their taxes drop down to 20 to 25.
All the New York fangs, with the exception of Apple with a short covering off the low. Apple short covering off the low. We got Tesla looking like it's gonna go so far. I think everybody's looking at the same thing, Tesla.
Being able to take advantage of the growth rate of Bitcoin relative to the devaluations of the dollar and provide those yields to the market is a huge service that's onboarding capital at a really rapid pace.
Yeah, it's interesting because we sort of started this conversation off with the world becoming a little bit more digitally savvy as well. And Japan's a funny one because I mean I think they only phased out floppy disks a couple of years ago. And it's such an interesting anecdote. So what's sort of next?
Voice. All right, so we're watching Tesla at the moment. I'm your host, Cousin Benny, coming to you from the closingprint.com. It is Tuesday the 8th, 10:30, almost 10:30 on the East Coast, 1 hour into the trading day. One hour into the trading day. Snowflake, all of these New York fangs, for the most part, except for Apple and Tesla, are moving lower, fading. Apple's trying to get back to break even on the day, flat on the day. Tesla's green.
Meta hosting another big week for its super intelligence lab, this time from Apple.
Okay, a little selling now.
Mark Zuckerberg's latest big hire.
Hey, good morning. So that would be Romain Pang, the architect behind Apple's
SoundHound looks like it's going to go again. I'm going to buy some shares of SoundHound here. SoundHound.
Pang ran a 100-person team that builds LLMs powering Apple Intelligence. So that's Genmoji, writing tools,
Okay, bought some
photo and video
SoundHound.
editing, and what is supposed to, or at least was supposed to, power the new Siri. So essentially, Pang is at the center of Apple's bet that on-device models could compete with existing AI leaders like OpenAI and Google. At the same time, though, Apple has been undercutting his team's mandate by leaning more on third-party models. Remember Eddie Q's praise for Perplexity and Anthropic as part of his Google testimony. There's reports that Apple's in talks to replace Siri's backend with Claude or ChatGPT. That's gotta hurt morale. And it's not surprising then that when your company starts shopping for a replacement for the work that you are doing, you leave. And then there's Meta and Zuckerberg ready with a new package, reportedly worth tens of millions of dollars, and a bench that is quickly becoming a who's who of AI talent, and a mission that hits at the perfect
SoundHound. I bought some shares of SoundHound. Let's see how this goes. I'm going to limit my exposure still. I'm not eager to put on a lot of risk at the moment. There goes Tesla. Tesla's on the move. Okay, so SoundHound, I just bought on this dip. I had a limit order if it came back towards VWAP. It did. It tested it and got a nice bounce. There goes Tesla starting to move, coming out of a squeeze. You can see the TTM down below, giving us cyan bars. Okay.
I wonder, given the fact that obviously Mark Zuckerberg is interested in just pulling in talent from all corners of this emerging world, is everybody's AI research effort pretty much interchangeable with the others? In other words, are they not on different tracks, trying different modes of figuring out what works? Or is he just sort of maybe collecting them all and seeing what ends up coming out the best?
Okay, Tesla.
The mission that they all share is super intelligence, or AGI.
Okay, there goes Tesla.
That is even better, even smarter than humans. And sort of that's what a lot of folks here in Silicon Valley and tech talk about is whoever owns that, whoever gets to that first, sort of owns the next leg of the
Look at the volume. Okay, this is what we were looking for. We're looking for that volume. Tesla into the gap. Oh, there it goes. We got a nice entry.
What these researchers are all interested in is being at the frontier, pushing that, and creating products once you get there. But of course, there is sort of that phase before then, which some of the folks I talk to say that AGI doesn't really matter. It's about how you monetize these things, how you get them in consumers' hands, how you scale it. But you can work on both, and I think that's sort of like the holy grail for serious, really, intense AI researchers is they want to do both. When you have an Apple that's sort of really failing on the AI side pushing the frontier. You can go to a place like Meta that says they're going to focus on both. Really powerful stuff. I thought to myself this morning when I was getting ready, I hope my kids are interested in learning about AI. That could be a good career field for the long run. Thank you so much. Appreciate it, Dee. It's now time for a CNBC News update. Savannah has that for us. Savannah?
Hey, Courtney, good morning to you. The death toll from the devastating floods in Texas has reached 104, and hope for survivors is fading as search and rescue operations stretch into a fifth day. Now, the vast majority of the deaths are in Kerr County, where officials say 56 adults and 28 children died.
All right, Tesla on the move.
7 campers and counselors at camp.
Yeah, that really sucks. Can you imagine sending your son or daughter to camp and something like that happening? It's wild. So terrible. I can't even imagine. I look at my son, I was just like, there goes Apple too. Apple's on the move too.
And the Minnesota state senator injured in a June shooting spree that authorities called targeted political violence is out of the intensive care unit. Senator John Hoffman and his wife were both injured in the rampage, which took the life of fellow lawmaker Melissa Hortman and her husband. A spokesperson confirmed Hoffman is now at a rehab facility. Courtney, what about you?
Tesla going.
To that point, Savannah, thank you very much. Well, after the break, we will talk Tesla tracked to rebound after losing $68 billion in value.
Every time they say that, seems like every time CNBC or anybody, any of these stations talk about Elon or how much he's lost, 2 or 3 weeks later, it's back higher again. I sympathize with these media outlets because I want to say they balance telling you what the markets are doing and, these portfolio managers coming in and talking their book. But it doesn't really give you a sense of where's the money flowing and why. Occasionally, Mike Santoli will come on and he'll talk. He's really good. Mike Santoli's good. And if anything to do with bonds in the economy, Rick Santelli is good with that too. But the rest of the time, unless it's halftime report, I guess they call it, the 12 o'clock show, those portfolio managers are pretty good about telling you why they're doing certain things and what they're looking for in terms of appreciation. There goes Tesla. But most of the time, CNBC is just full of, they're just selling advertising. They want to get people to advertise. And the way they do that is they scare the crap out of everybody. So telling me that Tesla is down 60% or that Musk has lost 60 billion doesn't do me any good. It doesn't tell me anything about how I'm going to trade it. So the way we try to do it here at the closing print is to tell you, okay, what to look for. All right. Like example, SoundHound. All right. I took a starter position here on SoundHound. Now, I fully expect that this could pull back a little bit more and give me a BNC pivot. So I'm not going to take 1,000 shares right here. I'll take 100. If it drops a little bit more, it gives me a B pivot. Looks like this. Where's my media? It looks like this, a B pivot. All right, so that's the A pivot. You can see that's probably A right there. And then looking for B and C. So B and C shows up. That's great. Tesla giving us a nice move. So this is going to create the A pivot, this move to the upside right now. So we're looking for this A pivot. Right now, it doesn't look like it's going to stop. You got on the breakout, you got a fair value gap. Okay, we're always looking for a fair value gap on the breakout. Okay. Mm-hmm. Mm-hmm.
For certain.
Welcome back. Wall Street reacting to Tesla CEO Elon Musk's latest political gambit, the creation of the America Party, which did send the stock tumbling yesterday. Wedbush analyst Dan Ives today says the Tesla board must act and create ground rules for Musk. Joining us this morning is TVX Venture CEO John McCain.
Get him to listen to them. That's pretty funny.
Lyft executive, as well as the current GM and Lululemon board member. John, it's great to have you back. Thanks for the time this morning.
You bet, Carl. Good to see you.
I want to get you on auto sales and I want to talk tariffs and a bunch of stuff, but the street's really wrestling with how much Elon is willing to go forward on this side gambit, I guess, and what that does mean for his time spent at the company.
Yeah, I think one of the things that, the board would look at is what's happening on the competitive landscape. And one of the criticisms has been that Tesla lacks newness in their product lineup. And you just look across the numbers for the first half. GM doubled its EV sales and is growing at about 5 times the rate of the rest of the industry, largely due to the product lineup. And so I think one of the questions the board's got to, I think, be wrestling with is how do we get the product lineup modernized and fresh so that Tesla can compete?
Okay, I hope everyone's having a good day.
Auto sales matter to Tesla when there's so much, at least in the actual price, built into the promise of robotics and robo-taxis?
I think auto sales matter in that they provide the cash flow.
Okay, there goes Tesla ripping here. Okay, nice move on Tesla.
You could make the argument that Tesla has, $30+ billion on its balance sheet, so it doesn't have to care. But I think with the evaporation of greenhouse gas credits potentially, Tesla really does need to care because more than 100% of their earnings comes from those credits. So if those go away, you've got a company that's losing money. And that may have negative cash flow. That can't last forever. And I think most of us agree that we're years away from robotics being meaningful in terms of the earnings of Tesla. And even Elon has said that 2030 is really an aim for the humanoid robots to really make a difference and begin to show an impact on Tesla's financials. So yeah, I do think auto sales matter, and they're going to need to matter for the next 5 to 10 years.
Do you think some of the damage, John, potentially from Elon's political involvement is it short term? Is it long term? I mean, how much of this is about brand damage when for so long Elon was sort of the driving force, no pun intended, for many reasons investors did pile into the stock?
It's a good question, Courtney, and I think maybe I'll answer that question just with data. About 80% of Tesla's sales historically have come from Democratic-leaning zip codes. And so when you alienate your core customer, it does become very, very difficult to recover and grow. Alongside the challenge of rebuilding a brand for that core target customer is very daunting.
John, you mentioned the Tesla's reliance on various credit programs and obviously the push of
Tesla, big trade on Tesla. Taking a 40 or a 50 Delta call, you should be up quite a bit right now. Okay, so that's $4, right? No, that's $6. Sorry, $6. So that's $300 on a 50 Delta call right there. So I believe LA probably took a 50 Delta or something closer, deeper in the money. So nice move on Tesla. So buying those lottos working very well, Tesla. Okay, so big complete change from yesterday. Are you sleeping? Hmm? Are you going to sleep? My favorite kitty cat's up here visiting me. She's a lucky cat. There's never a cat guy, but these little guys grow on you. They're both females. Anyway, continue to run here for Tesla ripping.
Trying to decide or figure out whether or not autonomous can work in dense urban environments. What you thinking on that?
Well, I think it's, first of all, it's exciting, Carl, because for those of us who live in the Northeast, we constantly ask, when is autonomous happening? And the answer is, well, it's already happening. And it's happening in dense cities. Waymo started in the densest of environments in San Francisco, where you not only have city density, but you've got hills that really affect the visibility that the car can achieve. And it has handled those just with enormous success. And so I'm excited when I see that Waymo is now mapping in Philly and in Boston and New York. I think it's going to be a challenge regulatory from the regulator standpoint to get into those markets. But I quite frankly can't wait to hail a driverless.
Nice move on Tesla.
In the Northeast cities.
Finally, of course, busy week on the tariff front. Is your general advice to people that if they are in the market for a new car, that the sooner the better to get a deal?
I think so. Like, we just don't know. There's still uncertainty, as we see kind of every week or every month with these tariffs. The car companies are scrambling and scrambling their plans each time a new announcement is made. But what that means for the consumer is the best priced cars are available now, and this gives another month of reprieve to some cars in the market. Not all cars, because the 25% tariff with Canada, et cetera, is still in play. But there is the best time to buy a car is now.
Okay, nice move on Tesla. I'm going to scale out here. I bought 10 of these, so I'm just going to like scale out a half. Yeah, let me take half off here. Okay, sell 5 of these. Nice profit there. Nice. Okay, looking for an A pivot. Okay, right here. Okay, I just took half of my Tesla off. Tesla just took half off.
Today, but the Trump administration's trade policies could weigh on this year's discounts. Those details are next. And NVIDIA pushing closer to a major milestone. We'll tell you what could drive the stock to the $4 trillion mark.
Okay, so what I'm looking for is potential for this to come back and fill one of these or both of these fair value gaps, because there are people here that didn't get their order filled. Okay, that's the premise with a fair value gap. The speed of the move is so quick that it leaves orders behind. When it comes back, dealers are filling these orders. Okay. Market makers are filling these orders. Now, it doesn't mean we're going to have to pull back, which is the reason why I only sold half. Doesn't mean it has to pull all the way back. It just means that we could come back and tap some of these levels, fill some more orders, and then continue the prevailing trend, which I believe is probably going to be a gap fill. Now, if we bounce quickly, I can always put the same strikes back on or do something a little closer to the money instead of doing like a 30, I think it was a 30 delta, 35 delta. Do something like a 40, 45, 50 delta if it starts to go. So I'm just watching this right now, Tesla. Apple also turned the corner. Apple, if you took Apple on the dip, that was a great setup there. Apple, very similar. Short started to cover. We're up against supply. So keep an eye on Apple. This could go more. If it does, that would be a nice trade as well. Don't see any buy order blocks except for what we had from previous over here. Looks like that was 2 days ago. It looks like Thursday, maybe even further out. Okay, it looks like it was Thursday or maybe Wednesday. This green bar right here, that's liquidity. Okay, there's resting orders sitting there. It takes days and weeks for institutions, portfolio managers. It takes them days and weeks many times to fill their orders. So if they want to buy Apple on this trend break, they'll wait for it to dip back. You see how that works? This should be pretty obvious. It's obvious to me. So you get the breakout last week. You get the pullback. Okay. These people, these portfolio managers want to fill their positions. So they hand their orders off a lot of times to someone else to fill, a market maker, the big institutions anyway. And the pullback brings you right back to this green bar at the bottom left. Okay, bottom left, this green bar. okay, where you see 53% of the current volume. You see that number there? 53% of the current volume traded right in this area. Okay, so think about that for a second. What does that mean? It means that this push to the upside just, well, these are fair value gaps basically. No, they're not. They're overlap. Um, this quick push to the upside, we don't think that the momentum will continue like that because institutions don't want to buy too much because it's going to make this thing launch very quickly. It's not like shorts covering. So I hope I'm explaining my thoughts effectively. So the pullback is letting us get back to this area where institutions are sitting here waiting to buy because the average investor is going to buy at the high. They get excited, they buy at the high, and when it doesn't follow through, they're trapped in a position. The stock pulls back to that area of liquidity, and institutions are able to buy again. They're not going to buy up here; they're going to buy down here on the dip. So now, once a few more institutions get their fill, more positions get filled, we can start to resume the trend higher. So there's the trend, unless something changes, the trend has reversed. Okay, the trend has reversed. We're above the 50-day. We have supply overhead. We got liquidity down below. Momentum is clearly bullish. The Bollinger Bands are opening up. Everything is set for Apple to continue to move higher. So if you're a swing trader, you want to be looking for these opportunities. That's what we try to do every day at the closing print. I'm proud of what people do in the trading room. Many of you do take the ABCD pattern. No, LA has been trading ABCD patterns for what, 7, 8 years or more, as long as I've known you. I think you may have actually come up with the graphic. Somebody came up with the graphic, posted the graphic in the trading room, and I looked at it and I was like, wow, this is pretty much the way we trade anyway. So ABCD pattern is an effective way of describing the trade. Okay, so Apple's trying to push a bit higher. So Tesla's still consolidating. So yeah, ABCD patterns, effective way of describing what Lee Star used to do, Rick used to do when he was on this earth with us. Really miss you, guy. When Lee Star was here, he would look at a chart from a perspective of the Fibonacci's. All right. So a lot of times an ABCD pattern occurs on a Fibonacci. All right. So the reason why these all work is because so many people use these strategies, right? Whether it's an ABCD pattern, the B and C being a 50% retracement or a 382, you've got several strategies that are overlapping that people use. And the reason why they work is because so many people use them. They're all looking for the same thing. Okay, so I know I kind of belabored that, but that's why we use ABCD patterns. We're looking for these breakouts, fair value gaps. There's something relatively new I've been using for, I guess, about a year now. This is Lux Algo. If you're interested, there's a free version that Lenders Run. I think it's Lenders Run. Lenders Run, I think you use one. You can post it in the trading room, the free version of Lux Algo. So if you go to indicators and you go to invite only, you can see this is what I'm using right here. Okay. Price action concepts. Now, this is all based on volume, pivots, buy and sell orders. It's a very effective strategy. Whenever you see the buy, okay, so here's Apple. This wasn't here before, this buy order block. So the reason why is because volume is building, and the last pivot is where this buy order. See how it just disappeared? It come back in again. All right, so we're watching this fair value gap right there, and we're looking for a follow through. Tesla, did it come back? Tesla. Okay, Tesla, you got fair value gaps. This one's being filled right now. Again, the reason why this shows up on the chart is because there's so many traders that have orders sitting in here, resting orders. And as this pulls back, this will disappear. You can see that fair value gap disappear, that green box. Okay, we may come back to this one now and then follow through. A lot of people will buy up here and they'll say, "Oh crap, it's pulling back on me," and they're not realizing what they're looking at. Once you realize what you're looking at, you can play the trade, take half off into strength, look for the pullback into the fair value gap, and then look for a resumption of the trade. I don't think the trade's over with yet. Netflix continues to fade here. Netflix. Bitcoin's not doing much. Tesla looking really good. Tesla. Okay, Apple. Let's go back to Apple. Watch for Tesla to follow through. If Tesla starts to follow through, I'll buy some 50 deltas. Probably Friday or next Friday. What's up, kitty cat? Look at you standing on your hind legs. Ooh. Spilling kitty cat food here. All right. Okay, so we filled these fair value gap. That one right there, we're filling it right now. So if it takes off to the upside, technically this wick right here overlapping that first candle right here. This candle right here producing a fair value gap. So what you have is the first candle, that red doji, the second or the third green candle right there. This produces a gap between these, and this box shows up. So that gives you an idea. You could do this without the script, but it's easier for me because I'm broadcasting for this to be done automatically. And why do all this stuff manually? Enough things for me to think about without having to draw in fair value gaps and everything. Okay, so watching that, Apple pushed up to the high. So if you bought Apple at the low of the day, you're probably pretty happy right here. Apple, that turned out to be pretty good. Apple.
The number of tourists that visit Dubai every single year is about 14 million. So it's a real
215.
target market there. It's double that of Singapore.
Apple looking for more upside. Okay. So Apple, I have 210, 215s. Also have some 210s and some 220s. But I took another 215, 210, 215 when I was talking about it earlier, Apple. I took the July 18th, 210, 215. Again, I already have the 210s for 25 July. I also have 220s for 25 July. So I'm looking for Apple to continue this trend.
NVIDIA rapidly approaching its next mega cap milestone, driven by the AI revolution. Of course, Christina Partsinevelos is here with more hype.
NVIDIA is inching closer to the once unthinkable, a $4 trillion market cap. Shares would need to actually hit 163.93 to make it the first company ever to cross that milestone. Despite the stagnant run of Wall Street.
Okay, Netflix continues to fade.
NVIDIA just raised its price target to 190, citing a surge in sovereign AI demand. That governments racing to build and control their own AI infrastructure and data pipelines.
Netflix back to the 21 day. Okay, so let's look at Netflix for a second. Let me explain something here. All right, so we moved above the 50-day Netflix. We broke out above this high, 1064. And since we broke out above the 50-day and this 1064, every time it comes back to the 9 or the 21 day, 9 or 21 day, it bounces. Now, here's the 21 day. So if for some reason this doesn't hold the 21 day and starts to head to the 50 day, I still have a 40-point margin on the credit spreads that I sold yesterday. So I could sell more credit spreads today, which is probably what I'm going to do. If this starts to bounce, I'm going to sell more of the 1160, 1150 credit spread that I have. Okay, so yesterday I told you that I was going to take a credit spread for $200 per contract. If I double up, I could probably get maybe $300 or $400 per contract. So that'll turn out to be about a $2,000 and $2,500, maybe $3,000 trade. All right, let me go to credit spreads. Okay, so Netflix, I'll show you what I took yesterday. Okay, so Netflix, I have this down here. Okay, so I'm way, way away from my strikes. Okay, sold these for $200. They expire on July 7th. I put it on July 7th, sorry, yesterday. So I'm looking for a bounce. 20 EMA daily's right there. That's that dotted red line for reference. Is a 60-minute time frame. So we're about to get oversold now on RSI. So I'm looking for a bounce on Netflix. If it starts to bounce, I'm going to sell twice as many of these. I have 5 now. I'll add another 5. Probably get about 300, 350 for that per contract on the dip. And I like to hold on to premium. There goes Apple. Apple's starting to move now. Apple's on the move. Okay, so think about Apple for a second. Now, you're a new trader. Let's just imagine you're a new trader. And I imagine many of us, I know I have, in my past, back 30 so years ago, I would buy the high. I'd get excited. I'd buy the high. The stock would pull back. I'd get upset for a couple of days. If I was lucky enough to be on the right side of the trade, I'd get a bounce and then we'd follow through. But I was constantly doing this. I was constantly doing buy the high, get excited, be depressed for a few days, finally catch a break, 9 EMA catches price, and then it turns back up and continues the trend. Why do that? Why put yourself through that? Look for other areas like a move above the 50-day, a breakout of squeeze, a pullback to the 9 or 21-day. Look for those setups. You're going to be a much happier trader, and you won't be sitting here waiting for the stock to move back to where you bought it. If you bought Apple on the breakout yesterday, like I used to do 30 some odd years ago, I'd get excited. I'd buy that high, and then I'd just be sitting here for a couple of days waiting for the bounce. Well, luckily, we don't do that anymore, right? We buy the 50-day breakout, the move above 206 pivots on volume. We look for institutions. We look for MACD stochastics to give us directional indicators, RSI above 50. And we buy the 50-day breakout. We wait for the next pullback to add to our position. We start here. If you're going to do 1,000 shares, we always like to use the reference. Do 100 here. Buy 100 here. If it breaks out, double up your position. Pulls back, add another 200 or 300. So now you're at half a position looking for the break to the upside. If it starts to break out and gets above the 200-day, I'll double my position again, and I'll have a full position in Apple, looking for a move up to 250. So that'd be a 40-point move, 20% from here. Okay, there goes Apple. So Apple's going, okay? So Apple is going. Okay, same thing with Apple. Okay, everybody hating on Apple. I see a theme here. I see a theme. Apple also working.
Between the president and the Fed chair, and delay what Trump says is an imperative need for the economy.
Buy order blocks. Note the buy order block right there at 10:05.
Just reporting June orders and deliveries. We'll get to that in a moment. In the meantime, in and out of the green this morning on the S&P, although we're down about 4 points now. Dow's down 150. Sectors are mixed. Energy actually carrying quite a bit of water, up 2% today as the yield backdrop's a little steeper. 30-year got close to 5 this morning. 10-year at 4.42, about the highest since June 20th.
We will start in Washington with the president's cabinet meeting set to kick off this hour. Megan Casella has the details and hopefully some caffeine and got some rest last night. Hi, Megan. Good morning, Court. So yes, I'll get to the cabinet meeting in just a moment, but first I want to flag that the president just in the last few minutes took to Truth Social to say now that there will be no wiggle room on his new August 1st deadline for country-specific tariffs to kick in. He wrote on Truth Social that tariffs will start being paid on August 1st, and that, quote, there will be no change to this date. He also adds, no extensions will be granted. So he's trying here to firm up this deadline after we just spoke last hour about how he appeared to leave the door open for some changes. He said multiple times yesterday it wasn't 100% firm. And even in the letters that he sent to the countries yesterday, he also says more are coming today. The president had said tariff rates could move up or down depending on how the negotiations go. Now he says the deadline itself.
Okay, Apple looking good.
Would be a third time. So we may hear more from him in just a few moments when the cabinet meeting kicks off. This is the only event on his public schedule today, and it's really a chance for him to gather his department heads at the White House. It'll be the 6th meeting of his term with the cabinet, and we'll have a chance to hear not only from the president, but also we expect the Treasury Secretary, Commerce Secretary, the U.S. Trade Representative, all of them might be able to give us an update on how these trade negotiations are going. So we'll be watching for that. I've also spoken with White House officials who say a big part of the focus at today's meeting will be discussions of how the president's mega bill, the one that was signed into law last week, will benefit each of their departments. So all of that kicking off the White House in just a few minutes. We'll be bringing more when we have it. Guys.
Megan, in terms of trade negotiations, is there a sense as to which one is on the front burner? I mean, the language out of Japan continues to be relatively tough. Maybe the EU too. We keep hearing about India.
Yes, those are the ones we hear about the most. It's really hard to know. They say that Japan has been really tough. They say the EU has been especially tough, even as some EU officials this week have been out there saying they do think they could strike a deal before July 9th. It was before the deadline was moved, but I'm guessing they're still hoping for that. India, they say, has been close, but they've been saying that for 6 or 7 weeks now at least. So clearly there's some sort of a holdup there. We just don't know what it is. It could mean that we start to get smaller deals first. Maybe a country like Thailand or Malaysia, Cambodia finds a way to satisfy the president. That could help them notch some early wins and some deals that we've been waiting for. And then the bigger ones are left for later. The White House says they've been focused on the biggest trading partners, but we also know those are the hardest.
Megan, thanks so much. We're keeping us honest on the pace of these negotiations. Megan Casella. Let's stick with the tariffs and the impact on markets as the major indices come off their worst day since about the middle of June. Joining us here at Post 9 this morning is Citi's research head of global strategy, Rob Rowe, once again with us. Welcome back, Rob. Good to see you.
Thank you very much. Hi, Courtney.
The president says August 1 is the date. Does that introduce new instability for equities or not?
Right now, I think it's going to be up and down.
Apple cruising higher. Apple cruising higher, looking good.
A few things to push this along, and I think there's a lot of back and forth. So it's very hard to tell, as you stated, it's very hard for us to be able to ascertain exactly how these negotiations are going to go.
Right.
That's right in the middle of it.
Right. But we do have the spending bill now in our pockets, right? And I guess Q2 earnings expectations notwithstanding, is there a sense that the second half might be brighter than the first?
We're generally positive and bullish.
Okay, looking for shorts to start covering on Tesla, on Netflix. Looking for shorts to start covering.
Assumes a number of things. We do think it'll be volatile. It'll be going
Apple, nice move. Starting to see a little profit taking now. Not quite, not all the way back to that supply.
Good negotiation period for the USMCA, which are our two largest trading.
Okay, Apple going to take a little profits off. That's me taking profits on Apple. Okay, Apple from earlier. Apple.
And the one thing we would worry about is any additional sectoral tariffs, which could drive that to a 20% effective tariff.
That's what I was wondering is how likely could sectoral tariffs be, especially now, as Carl mentioned, we have the spending bill that's been passed. We have to pay for this in some way. Are we looking to increase tariffs to raise that revenue?
Yes, and actually, some of the CBO projections would state that if we had tariffs in and around the level I was mentioning, but that could actually cut the deficit by 0.5%. So that's a possibility. Although, what I worry about is if you're looking over a span of 10 years, I don't know that you'll consistently get those revenues going forward as other countries work around these tariffs. So I don't know that you'll consistently get that. So, nothing is written in stone.
As the president obviously is just now saying that this August 1st is a deadline, does that change your trading outlook, movement of equities between now and August 1st?
I mean, I think extending this deadline is actually a positive. It means that there's still negotiations going on. And the original argument was that we were going to have that deadline now. And so.
And 90 deals in 90 days, which, as Carl pointed out earlier, did not happen.
Right. I mean, you still have days to negotiate this. So we'll see. They're giving a little.
Yeah, maybe we'll get Dr. Frank. I don't know if he's interested. Doing a talk on ICT.
House view is that the Fed will be constructive. I think your September cut.
That's correct. And we have 3 cuts for the year starting in September because we do think that you're going to see a slowdown still, not a recession, but a slowdown, probably a slowdown to about 1% GDP, real GDP growth Q over Q fourth quarter.
Right.
What drives that slowdown? The slowdown in consumer spending?
Okay, Apple's still going there. Apple looking really good.
Spending, I do also think that the
It's really straightforward. You wait until you see a buy order block. Sometimes you anticipate that you'll see a buy order block at a pivot. It always at a pivot. Okay, whether it's a continuation pivot high, we'd love to see. Whenever you see buy order blocks throughout the day, it's usually accompanied by speed or momentum, where you see fair value gaps during the day. All right, Tesla is another good example. Let's go take a look at Tesla real quick. Tesla's flagging right now. You got that big fair value gap. Fair value gap's that overlap, okay? So you've got candle 1 right there. That's candle 1, that doji. Okay, that's candle 1. Candle 2 is the fair value gap, and candle 3 completes the pattern. You got 1, 2, 3. All right. So candle 2 right here. Okay, candle 1 is the doji. Okay. Candle 2 is the fair value gap. The speed of this move is so fast that the wick from candle 1 and the wick or price action from candle 3 do not overlap. It's just like a gap. If you were to erase this candle, you take candle 2 out, you'd have a gap between the two, 1 and 3. Okay.
we would want to see an improvement in productivity associated with AI, as well as other things, in order to see more upside to the S&P.
Finally, Wells had some nice things to say about Citigroup and a lot of.
You got a lot of orders there. It's anticipated that there's a lot of orders here that are still looking to get filled.
It's the biggest wave of deregulation since the mid-90s. And that they've already.
We had one up here. We had one up here, but it came back and got filled. Okay, so candle 3 actually produced a fair value gap between 2 and 3 and 4. Okay, but it came back and filled.
Personally say that those are the bigger drivers than deregulation. I think deregulation
Yep.
will be positive, but I don't know how extensive it really will be.
We'll learn more about all that next week, of course. Rob, good to see you. Thanks for coming back.
Great to see you.
Rob,
Thank you.
We're getting Boeing orders and deliveries for June. Or Phil LeBeau has more.
Yeah, we need more of a trending market.
Big numbers for Boeing in the month of June, big relative to where they've been over the last several months. In the month of June, Boeing delivered 60 airplanes. Why is this significant? 42 of those, by the way, being 737 MAXs. That is the highest monthly delivery rate for Boeing since December of 2023. First half deliveries, 200.
Okay, fair value. Okay, so you didn't see what I was talking about. Here's candle 1.
Since 2018.
Here's candle 1. Candle 2 produces the fair value gap. It doesn't overlap 1 and 3. Okay. So that's why, if you were trying to do this on multiple different charts throughout the day, it would numb your mind. So it's easier to have a script that does it for you. Okay. And it's always accompanied by volume. Okay. So look at the volume peak right here. Okay. Look at the volume, how it peaks right in here. Volume surges as the stock breaks out above this pivot over here on the left. These pivots over here on the left. We got sold this morning, so we're looking for this breakout. That's why we bought Tesla down here, looking for and assuming that we're going to get this kind of movement. We didn't know ahead of time. It wasn't until the trade started to work that we saw the volume and the fair value gap and price action. Looking really good, and anticipating that this gap might get filled. So still have half a position in Tesla. Apple is still going. Apple is still working right now. Apple's still working.
Phil, appreciate that. Important name as we continue to wait for maybe some clarity on the Air India crash. That's our Phil LeBeau on Boeing. When we come back, former Dallas Fed President Kaplan's with us. Does pushing back the tariff deadline also push back the next rate cut? We will discuss.
And later, Uber hitting a fresh all-time high this week. Is there more room to run? We'll break down the bull case when Money Movers comes back.
Okay, looking for more. Okay, buy order block. Buy order block. Buy order block. Okay. Okay, looking good. No TTM. Okay. Bollinger Band supply overhead. Apple supply. Supply. Okay, and the 200-day. Buy order blocks. Fair value gap. Apple still looking strong. Okay, Apple still strong. Okay, looking good, Apple. Very nice, Apple. Got a ways to go to get back to yesterday's high. Apple's still going, though. Okay, Apple, you don't want to buy up here. Wait for the next dip. Same thing with Tesla. Tesla's flagging. So instead of a dip, Tesla's giving you a flag, okay? So still giving you a flag. It's hot as a MF outside. It is really hot. Okay, that's one thing about the South. It gets hot and humid. We're so close to the ocean. You would think it'd be a little cooler, but you know we got bodies of water in the area, lakes and stuff. It gets really hot down here. Okay, Netflix still fading. Netflix, Apple still going. Okay, looking good. Looking for a. Okay, so we're coming into 11:15, 11:20. A lot of times 11:30, we start to see some pivots this time of day. Tesla's already made quite a nice move here so far.
To Money Movers, the president relenting on that July 9 tariff deadline, now pushing countries to make deals with the U.S. before August 1. But with tariff uncertainty set to continue, will the Fed hold off on cutting rates this month or later in the year? Joining us here at Post 9 this morning, former Dallas Fed president.
Apple's starting to see a little profit taking. All right, like Tesla, it ran up pretty quick, so we're looking for these little dips to get bought. Watching the futures too. I'd like to see futures shape up a little bit more.
It's always a possibility, but unlikely. I think it's a little bit more unlikely. And why do I say that?
Okay, looking for a move above the 105.
Overcapacity globally, and also demand in the United States
Is that
solid but sluggish. And GDP
that's the 1 minute. Okay, 1 minute.
And so it gives you optimism.
All right, tick cumulative is turning up, by the way. Tick cumulative, I just noticed. Okay, tick cumulative on the 30 is about to give us a crossover, so that's telling you breadth is improving. Tick cumulative is crossing over 60 minute.
Some of the other uncertainty, I think the prudent thing for the Fed will be to see get the tariff rate set by August 1st, get a little bit more data to see how the economy processes them, and then get themselves in a position to potentially act in September. And if I were in my former seat, that's what I'd be trying to do.
It doesn't sound like you think the committee is bracing for any kind of price shock, even if it's a one-time move.
I think we're already, some of the price shock is filtering in.
you're going to get a little bit more. You've got uncertainty about the actual levels. But no, I think the thing that was so hard in April, it was so abrupt, and businesses didn't know how to process it. They consumer inflation expectations because they didn't know how to think about it. We've now had 90 days to kind of internalize it, process it. Inflation expectations.
Apple at the high, starting to flag.
And so I think the shock part is probably in the rearview mirror.
When you're looking at both the revenue potentially being generated from these tariffs, whatever the level ends up being, as well as what comes as a result of this spending bill, how does that fare for the economy overall and consumers?
So a surprise, if we were having this conversation in January, it felt like the fiscal policy would be restrictive.
Yep.
We'd be doing these big cuts. We'd be extending the Trump tax cuts. And what's happened is the spending cuts have been lower. The stimulus has been bigger. And so the deficits.
Okay, Google's still fading.
So instead of being
Google's still fading. SoundHound fading.
It means the deficits and the.
Okay, looking for a B and C pivot on SoundHound. Okay, SoundHound. This one has not given us a B pivot yet. Continue to fade. Okay, so looking for a bounce. All right, so.
Which should create some tailwind. And so from a business point of view, I think businesses are cautious and they want to get through the uncertainty, but they're relatively optimistic about the future.
Now, there's some good charts floating around today about R&D expensing, pull forward of deductions, meaning a large cap cash flow tailwind. Do you think that manifests itself to where CapEx intentions start to rebound, that kind of thing?
I think
Okay,
so.
what's the fangs are still looking okay. Netflix looking like it might get some short covering here, maybe. Apple pulling back now. Apple starting to show profit taking, so Apple profit taking back through this fair value gap. Okay, so that fair value gap got filled just now. Now the reverse is the case. We've got a fair value gap forming a bearish fair value gap. So it dropped through this area so quickly that people weren't able to fill their orders for shorts. So we might get a move back into this gap and then a rollover.
So if it's a corporate client, they want to just reaffirm there's unlikely to be a recession. Sluggish growth.
So at this point, we're looking for some consolidation into like the 1 o'clock, 2 o'clock hour, maybe some B and C pivots. The SPY and the S&P are just kind of chopping around now. Let's go take a look at Trace. Okay, so we're looking for signals from dealers hedging flow. Okay, you see real-time hedging flow is that purple line. So that's what dealers are doing real time. Pretty much sideways. It's not continuing the path lower. If you recall yesterday, we had lower lows and lower highs throughout the entire day. Got a little relief at the end of the day. We got an iron condor here overhead and below. Short overhead, short below. So we're looking for price to stay between them. If you're selling an iron condor, you're looking for price to stay between. Often, I would say 50% of the time, maybe 30% of the time, this Captain Condor strikes that they put on get tested the first day, and then they double up their position, the martingale method. So if one of these levels gets tested or we close above or below 6,300, 6,260, and 6,190, if we close above this or below this one, then that trade's going to fail. They'll double up their position. There's 13,000 of these, or 14,000, I believe. They'll double up their position. So let's see. Palantir yesterday was looking pretty strong. Palantir, that's giving back 1.5%. Palantir was what we were looking at yesterday. Palantir, okay. Okay, Palantir, you can see that the flows are still fairly bullish, still rising. Wait a minute. Why is this not updating? Okay, let me see. What's the date here? That's Monday. Why is this showing me Monday?
Services who are very uncertain of their status. And we're hearing from employers, some number of them are not coming into work because they're nervous if they go to work, they may not come home. They may get
Tuesday. Okay, here's Palantir now. Palantir. All right, so this, you can see that Palantir's flows, the green line and the blue line, they just keep moving lower, lower, lower. That's telling you there's consolidation right now. Yesterday, these were moving higher from the open. Now they're moving lower from the open. Let's look at some other names like, let's say, NVIDIA. Okay, we're looking for these flows to turn up. You can see NVIDIA did move higher from the open, but it's been an ebb and flow. Apple pulling back. Apple. Okay, Apple, you can see the flows dipped around 10:15, started to turn up, 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 and now we're starting to fade very quickly. So to skier's point, you have to be quick to take profits. Okay, let's look at Tesla. Tesla flow. Here's Tesla. Okay, from the open, Tesla popped a little bit, then settled down into about 10 o'clock, 10:10. And then you could see the flows started to skyrocket higher. Now they're kind of flowing out again, a little profit taking. If I take away next expiration, you can see the Tesla flows, the purple line just continues to drop. We want to see that turn back up. Okay, let's look at Netflix. Netflix is starting to see a bid. Here's Netflix. All right, so what we want to see, Skier, I know you mentioned Netflix. You can see right here it's starting to show signs of dealer hedge flows turning up. You can see that right there. Okay, so this is Netflix. This is Netflix. I currently have a put credit spread on. I might want to take some longs here now. If you remember, I bought some. I sold some put credit spreads at 1160, 1150 for $200 per contract. I could double up on that, or I could buy a long here. Okay, so you can see the dealer hedging flows. Let's see what next expiration looks like. That's also rising. Okay. The teal color is next expiration. Okay, we're probably going to get some follow through here. Let me buy some calls here, some cheap calls for Friday. Netflix on this signal right now. Okay, so where did we come from? 1292. I don't want to go that far, but I'm going to go not this week, but next week. Next week, Netflix. Come on, Netflix. Netflix 13. Let's see, next week, 1280s or $49, 4,900 per contract. That is a 50 delta. If I do a 45 delta, that's $1,000 cheaper. If I do a 40 delta, that's 35. Let me see, buy a vertical, and read 1250, 315. That gives me, okay, let me go. 17.50, that's $5 wide. And let's see, that's about 52 to 1. Okay, so we're starting to move here. So I bought some 312.50s. That's 40 Delta Netflix. Sold 13, 12.50.
This year on record, which utility companies might stand to benefit? Our Pippa Stevens has that for us this morning. Morning, Pippa.
Good morning, Carl. Well, as Americans are cranking their air conditioners, it could be a boon for utility companies since more power sold increases earnings. But not all utility models are the same. The independent power producers could be the biggest winners from record heat, since companies like Vistra, Constellation, NRG, and Talon own just power plants that sell into competitive markets. When it's hot and demand grows, power prices rise, benefiting those generators. Now, for regulated utilities that own generation and distribution, it's more complicated. But companies that have usage-based models are the ones to watch. That's CMS Energy, PTE Energy, WEC Energy, and Alliant Energy. Since while power prices are fixed, if more is sold, they keep the extra, which positively impacts their net income. Now, longer-term extreme weather is also helping make the case for grid investment, which is good for the sector's CapEx plans overall. But in the meantime, consumers are the ones losing out. Utility bills are rising faster than overall inflation, and the 2025 summer cooling season is set to put Americans back $784 on average, the highest in more than a decade when adjusted for inflation.
Okay, Netflix, nice move on Netflix. All right, so we got a nice entry on Netflix.
Just thinking about that, to your point about the overtime, I mean, there's a lot of discussion about the grid in general, what it can handle with all of the things we're taxing.
Okay, Netflix doing good.
Utilities in particular.
Yeah, so we are seeing demand growth here for the first time in more than 2 decades. And so that is creating a system that is built to operate during those times of peak demand. And one really important point here is that PJM during the June heat wave,
Okay, Apple looking for a P pivot. Apple.
They saw a record peak demand of 160 gigawatts between 5 and 6 p.m. That was higher than their forecasted peak demand for next year, which shows you just how fast it is growing. And of course, from the utility standpoint, even if they're not necessarily benefiting from higher power prices, they do benefit from that higher volume sold, because then that makes the case to their PUC that their customer base is growing, their demand is growing. And so then that allows them to invest in new infrastructure, which is how they earn a rate of return on that CapEx. And then, of course, you add in things like data centers, electrification, and reshoring, and then just power demand is set to grow here. And it's a huge constraint that all these companies are trying to figure out while not placing an unnecessary burden on consumers.
I know I get those text messages warning me about the heat wave and trying to conserve energy, and I want to, but also it's very hot. So I also want to run the AC. Thank you very much, Pippa. Well, it's now time for a news update. Silvana Hanau has that for us. Hi, Silvana. Hey, Courtney. Good morning to you. The number of people killed by devastating floods in Kerr County, Texas over the holiday weekend has now risen to 87, including 30 children. The vast majority of Texas, more than 100 flooding deaths, are from the county where the Guadalupe River swelled more than 26 feet in less than an hour Friday morning. Officials said moments ago there are still 5 campers and 1 counselor missing from Camp Mystic. An imposter using an AI-generated voice to impersonate Secretary of State Marco Rubio contacted 3 foreign ministers and 2 U.S. politicians. That's according to NBC News, which said the AI impersonator reached out to the ministers, a governor, and a member of Congress in mid-June through the Signal app. And the days of taking off your shoes to go through security are over. Well, at least at some airports. A source tells NBC News the TSA will now allow passengers at select airports to keep their footwear on. The source also said the change could expand nationwide very soon, Carl.
Anything to make flying
Oh,
easier.
for sure. Yeah.
Solana, that's for sure. Thank you, Solana. Now, when we come back, companies with gig economy workers like Uber and Lyft.
Looking for the follow through.
New bill in Congress. We'll get some details after a quick break.
What do you want? You're being nice to me. What do you want? Wife is psychotic. Okay, watching the hedging flows. All right, so we're starting to taper off a little bit right now. So the short's covered. Now we're starting to look for higher highs and higher lows. It's not going to go straight up from here. Netflix. Okay, Netflix. Okay, another nice little reversal. Still early, too early to tell, but I'm looking for buy order blocks down here. Look at the fair value gap. See how quickly these are accumulating. Okay. Supply overhead. Okay.
Joining now, Mark Malik still with us at Seabrook Financial. Gil, it's great to see you as always. Is it just that this thing is more diffuse now that it's a few days long, that people aren't as motivated to jump in to get those early deals?
Well, first of all, it's an apples to oranges comparison just because they have expanded Prime Day to Prime Days. So judging by a few hours, it may not give us indication how things are going. Not to mention the fact that that particular service doesn't see all the volume. I just looked at my Amazon app and I had the Apple Watch at 30% off.
Okay.
The Galaxy folding phone, 45% off, iPhones 43% off. That's probably not captured by that particular view. So A, it's extended. B, that's a limited view. And C, there's a bigger picture here. Prime Days has now become what Singles Day was in China, where other retailers are participating with their big sales around the same day. So it's a big boost for overall e-commerce. Amazon will get more than their
And their Amazon Prime Day recommendations include a lot of other retailers. It's not even just Amazon anymore. So how much of a boost is this for Amazon itself? I mean, as you said, it's now sort of institutional, right? So what does it do for the company? How should investors be thinking about it?
It's a positive because they're stimulating demand at a time where insurance wouldn't be done.
Welcome back. There's a new bill that could be a big win for gig worker companies like DoorDash and Uber. Our Emily Wilkins has some details on that this morning. Hey, Emily.
Hey, Carl. Well, yeah, a trio of senators, they're now pushing for more leeway for companies like DoorDash, Uber, Lyft to be able to provide benefits for their gig workers. Now, DoorDash and Lyft, they've already launched some pilot programs in various states to give their contractors these things called portable benefits. That would be contributing a fraction of a worker's earnings into a savings account, and that savings account can go towards things like healthcare, retirement, emergencies, basically whatever the independent contractor wants. Senator Bill Cassidy introduced a bill this week allowing companies to offer these independent contractors the portable benefits without making them full-time employees. Now, DoorDash's head of global public policy, Max Reddit, said that federal labor policy needs to be updated to account for gig workers.
Employment law, which was largely written decades and decades ago,
Okay, watching
penalize companies
watching Netflix.
that want to be
Nothing says this has to keep going. All right, so Netflix, we're just watching signals.
if we
Okay, what's Apple doing? Apple trying to bounce here. Apple came down to that previous fair value gap. Okay, you see that? Looking for a bounce. All right, Tesla's probably going to go again. Tesla's getting ready. Okay, watch the volume. We need another buy order block down up here. Okay. We need a buy order block.
Several states are moving bills to allow for these portable benefits, including Wisconsin, which passed a bill into law just last month. Groups like DoorDash are hoping for support from Democratic governors in Wisconsin.
Watch Tesla here.
Is going to translate to giving the bill bipartisan support here.
Okay, Tesla. I still got calls left. I still have half of the 40 deltas that bought this morning. Let me see if I want to buy some more. What's a 40 delta now for next week? No, this is Friday. Okay, so maybe next week. Maybe I'll buy next week's calls. Same strategy. Tesla. Let's see what a 40 delta is going for now. 40 delta. Tesla looks like it wants to go. Tesla. Okay, so what I had before, that's a 24 now. 315.
From these portable benefits, but also the changes to the way that their tips are taxed. Putting it all together, what does it mean for companies that rely on gig workers?
Yeah, ultimately, more supply that Uber and Lyft, DoorDash, Instacart, all these companies have access to. That's better supply and demand on the platform. Ultimately, that's good for consumers as well too. So, I would say that both we've heard from Uber and Lyft that supply is in a pretty good state and has been now for at least the past handful of quarters.
Okay, watching Tesla.
And so it looks like there's only tail.
All right, New York Fangs. More short covering on the New York Fangs. Okay, let's take a look at a few things here. Let's go look at, say, let's look at the hedging flows for something like Meta. Meta's starting to turn the corner. Hedging flows turning up on Meta.
In terms of what's that supply look like in the future of EVs, and it really comes down to who's the commodity. Is it the technology or is it the demand aggregator? And ultimately, how many different technology providers are there going to be? So
hedging flows are turning bullish on Meta.
Technology providers in the marketplace right now. There's Amazon, Zoox. We spent a lot of time 2 weeks ago with May Mobility, which they're launching with Lyft pretty soon. But then we'll
Okay, let me take a look at Meta. Meta pulled back. Meta. Okay, so you can see it's been sitting here for 4 days. Does it push off today? Meta.
But if that list is small, then I think you have those terminal value concerns.
Okay, I'm going to hold off for now. I'm going to hold off. I'm going to hold off on Meta for now. If you're interested, what I'm looking for is for this downtrend to break above 720, 721. Looks like it could do that right now. So what do we have? What's the possibility here? Meta. Let's go take a look at Meta's situation. Do we have buy order blocks on Meta? Let's go take a look. Okay. No buy order blocks, only sell order blocks. So this is more risky. Okay, so you have supply overhead. This is where they keep shorting it. So we'll look for rejection there. This is not as good a setup as Tesla was this morning. Broadcom, let's see what Broadcom looks like. Broadcom, maybe GL Broadcom. Okay, looking for buy order blocks. None. Okay, so let's go look at some other things. Let's see, Regeneron. Regeneron popped to the top of the NASDAQ 100. Regeneron. Okay, so Regeneron, it's squeezing right now. Note the buy order blocks yesterday, after hours. Regeneron. It's breaking through the 50-day on the right. That's the daily chart on the right, breaking through the 50-day. You see this massive buy order block back here on, let's see, that's about the 20th, I guess.
Very interesting stuff. Obviously, there's a lot of factors at play when we're looking at shares of Uber. And just to reiterate, you did increase your rating to buy with a $100 price target. Bernie McTernan, thank you very much. Thanks for having me.
Okay, so that buy order block was right there. June 23rd, Monday. We started off Monday with a follow through. Okay, Broadcom. Broadcom. Do we want to take a trade here? No. Regeneron. Broadcom. Let's see. Number 2, ASML. They make the machines that make the chips. What do those things go for again? I keep thinking $30 million for one of those chip making machines. ASML. ASML. The ASML EUV lithography system. Okay, these are basically, you walk into these things. They're so big. They're like a bus, the size of these things. Okay. All of that to make a chip and the components. That's crazy. Who would think to put something like that together? That always boggles my mind. It's like, why you need these little wires? Why you need this unit here? Why do you need this rack that's over here on the top right? What are all these things, How do you figure the person who figures this stuff out? It just blows my mind, right? Okay, ASML. What are these? Okay, they make a new machine now, $400 million chip machine. Okay. Wow. ASML's new $400 million. That's 4 weeks ago. They were talking about that, so it's out there, I guess. Each of these insanely complex, high NA machines cost $400 million, and they're now shipping out to the world's biggest chip makers. All right, so that's good to know. That's good to know. Okay, so we want to look at ASML, and let's see. Sorry about that. I clicked the wrong price on my chart, and it interrupted the flow there. All right, so ASML. Okay. So when do they report ASML? ASML. Costco was a trade from yesterday. How's that doing? Costco. We'll have to look at that. ASML reports June 16th, next week. ASML. Okay, so we were looking for all 4 metrics green. All right, so they're introducing a $400 million machine, and those machines are shipping. So that means somebody's buying them. Does that mean sales are up again? Will earnings growth eclipse 87%, 86%? And revenue growth, will that continue to climb? Most likely, ASML is going to continue to do this. Oh, man, ASML. So you got earnings next week. What's that? That's a Wednesday? ASML? It's a Wednesday. The 16th. The 16th, the report. That is Wednesday. Okay, hold on a second.
C+. High took alert plus 800.
Financials sitting just off the 52-week high as the big banks get set to kick off the unofficial start of earnings season next week.
I'm tempted to buy some ASML, but it's up here at the high at supply, so you can buy at supply. Clearly delineated overhead, those red bands are supply, so I don't want to buy here. I want to look for it to pull back, maybe a B and C pivot. There goes the S&P. Okay, looking for Netflix to pop. That'll be the third trade today that's worked. Meta is another trade that's probably going to work. Meta. Okay, it's just off the low. Meta. It's got supply overhead, so I'll pass on Meta again. We talked about passing. Okay, Tesla, looking for that to break out. Tesla, that's number 4 on the NASDAQ 100. Synopsys. Okay. Synopsys. Okay, watching for buy order blocks.
Similarly with the valuations, and I think this is what's behind the JP Morgan and Goldman Sachs calls, which is, yes, they look like they have modest PEs on a forward basis of up around 15 relative to the overall market, but relative to their own history, they have been there 20 years, right? So it's sort of giving them a lot of credit for being able to capitalize on a very active deal environment, just in general, the deregulation. So I think it's interesting that you would say, if you're bullish on the economy, you think deregulation.
All right, watching Netflix. Netflix is probably going to do something here. Watch the buy order blocks on Netflix. Okay. We're looking for buy order blocks on Netflix. Intel is gone. All right, let's take a look at Intel. It's been forever in this range below $30, $25. Okay. I was actually thinking about taking a iron condor on this one. Probably safer to sell, put credit spreads, but I wouldn't do it up here at the high. I'd wait for a little dip. Okay, Broadcom. I'm going to take some Broadcom. Let me take a look at Broadcom. Broadcom could go too. All right, all these New York fangs are seeing short covering. Okay. All right, so can't take Broadcom. I already have some Broadcom. So I'll just take some profits on Broadcom once it gets moving. Broadcom, I have some from yesterday. Okay, that's about, that's break even right now. Broadcom, I have calls that are breaking even right now. Okay, that's the July 18th, next week, 280 call. Okay, so that's just a little bit out of the money, but I'll be break even here shortly. I'm down $35, $15 per chip per contract.
Well, shake up in the restaurant space this morning. Our Kate Rogers has the story. Hi, Kate. Hey, Ford. Wendy's announcing this morning the departure of Kurt Tanner, its CEO, effective on July 18th. Tanner will be heading to the Hershey Company to be its CEO as Michelle Bach departs. Wendy's is starting a conference.
Okay, all of the New York fangs are showing short covering.
Has appointed Ken Cook, Chief Financial Officer of the company, as its interim CEO.
High took alert plus 800.
Played a major role in developing Wendy's long-term growth strategy, the company said. Now, Wendy's stock down 1% this month, down 30% this year, and down over 40% during Tanner's year-and-a-half tenure. BTIG's Peter Slay out this morning.
Okay, so the low is probably in right now. All the New York FANG components are turning.
For at least another year, given the time it takes to identify and hire a new leader. That said, we appreciate the investment that the company is making in additional field leadership and oversight, but remain skeptical of the long-term growth algorithm. We're hopeful that new leadership will double down on remodels to allow the brand to compete more effectively against larger QSR operators. We remain neutral rated. Now, the stock, as mentioned, has had a much tougher run than its fast food competitors. McDonald's, Restaurant Brands International, and Yum Brands are all up on the year. Generally speaking, though, a very tough competitive environment for these chains as consumers really grapple with value perception. So we'll see how they fare as we head into earnings season. I would also mention there have just been so many changes in the restaurant sector over the last year and a half with executives. We had Kurt Tanner to Wendy's, Todd Penegor to Papa John's from Wendy's.
Rob Lynch to Shake Shack from Papa John's, and Brian Nickel to Starbucks from Chipotle. In the last month or so, we should also mention David Gibbs announcing his departure from Yum Brands and Chris Turner, Yum Brands CFO, taking his place, guys. Carl, back over to you.
It has been a crazy,
That is an awful lot.
crazy period of revolving musical chairs.
Last year and a half is something else, right?
Yes.
Okay, we're coming into the lunch hour.
Appropriately named cook, right? Like that. Maybe they should tap Wendy's social media team. You know, they got a lot of talent there too. Very snarky responses for some of their executive ranks.
Okay, thanks. Kate Rogers. Still to come this morning, Meta ramping up its AI hiring push, as you may know by now. Hiring a top researcher from Apple. Why one Wall Street firm is calling it Mark Zuckerberg's Steinbrenner moment. In a moment.
Okay. Broadcom looking a little better. Broadcom, I'd like to see this follow through. Broadcom. Aaron, with a flat, with this flat dealer hedge flow, this is just telling me neutral at the moment. Okay, let me see what up-down volume is saying. Up-down volume. First time checking up-down volume. Up-down volume is also very bullish. Up-down volume is bullish for now. Okay, tick cumulative is giving us a cross on the 30-minute, so I'm looking for the 60-minute to cross as well. Do we have a bullish cross on the 60-minute? Let's see. Survey says turning. Okay, it's turning. Let me go back to the 30-minute because 30-minute is going to give us an early signal. Okay, tick cumulative is giving us a bullish cross. It's telling us institutions are buying more than they're selling. They're buying at the low today. There goes Apple. Apple's turning up. Apple pivot. Apple B pivot. Okay, CRISPR still going. CRISPR. That's one from a couple of weeks ago. I think, Tony, you mentioned it, right? CRISPR still going. Okay. So you had a little flag yesterday, CRISPR. CRISPR gave you a little flag. Now it's following through. Okay, weekly time frame on CRISPR.
Now notching another name in its expensive hunt for AI talent, poaching a top Apple executive for reportedly tens of millions of dollars. But is the spending starting to stack up? Here's a post that digs into that for today's Tech Check. Hey,
Hey guys, good morning. So Wells Fargo calls it Zuckerberg's Steinbrenner moment. Of course, that's a reference to the Yankees owner who famously spent whatever it took to win, signing the biggest names, writing blank checks, daring anyone to outbid him. Now, that's what Zuckerberg is doing in AI right now. He's not just buying GPUs, but people. And the latest comes from Apple. His name is Roming Kung, the researcher who came from Google before that. He led
a 100-person team that builds LLMs powering Apple Intelligence. Now, you could call this a pull from the minor leagues. Apple wasn't exactly seen as a hotbed for talent, but Zuckerberg saw something that the rest of the field did not. The rest of the league overlooked, and he paid up. A source tells me that Peng was probably the top guy, although not a household name. However, spending big doesn't always guarantee wins. Talent without cohesion can quickly become chaos, and Zuckerberg has brought in a lot of big personalities, the highest profile of which there's Alexander Wang, Nat Friedman, Daniel Gross. They come from the product side, not academia. But inside Meta's new superintelligence unit, they now outrank some of the most decorated names in AI. 28-year-old Wang, for example, he sits on par or possibly even above Yan LeCun. He is the founding father of deep learning and Meta's longtime chief AI scientist. The question now, though, isn't whether Zuckerberg can outspend the field. It's whether Meta still knows what it's building and why. Because the costs, they are piling up. Meta is earmarking CapEx of more than $70 billion this year. As
Apple.
a percentage of revenue, that is a growth rate far
Nice pivot on Apple.
Who have huge enterprise
Biota blocks.
Wall Street is
We need to see more biota blocks.
between $1 billion and $4 billion. Needham notes
It looks like Apple wants to keep going. Apple, let me do this again. Let me do another trade on Apple. Apple, put a stop underneath that B pivot. Apple, put a stop under the B pivot there. I got a little bit behind this one. It's already got 2 5-minute candles ahead of me. Apple, so it's a little bit more risky, but I'm going to go ahead and do it anyway. Okay. Apple, let's go. Do I want to go this week? These are pretty cheap. 212.50s.
Is really just throwing everything at the wall. Still to be determined whether there is strategy, whether this will all come together, guys.
It's interesting. I was thinking there's sometimes no
Apple.
for not quite matching their, say, CapEx guidance over the course of the year, coming in a bit under. I'm not sure that might happen this time.
Right, and it's unclear whether $1 billion to $4 billion in talent is included in total costs this year. So the costs keep rising, and I think the question. Mark Zuckerberg has been so disciplined, arguably one of the most disciplined big tech CEOs of the last few years, right? His drive for efficiency, his years-long efforts to be more efficient. Was that discipline? Does it allow for all of this spending, or is he losing the discipline that investors have rewarded so generously over the last few years?
And I was just going to say, Deirdre, I mean, what do you think investors are going to be expecting as far as timeline, the return on investment for some of these really big hires? These are not small salary numbers that are being reported here. If I'm an investor, I want to know that hire was well worth that.
I mean, you're getting at this sort of.
Okay, so you're looking at Path, Joel.
Right, ROI, return on investment. That is sort of what made the trade stumble earlier this
Path.
year.
Okay, so you got
The ROI, that's going to be difficult.
the 15 calls. Path. Yeah, I like it. I like it. Squeeze. I like it, Joel. Okay. August. Let me get out to August. What? August 15? August 15, you got the 15 call. Yeah, that could work. That could work. Going a little closer. They're only twice as much.
We'll see. There's a lot still to come. Dee, thanks very much. By the way, we're waiting on the president's cabinet meeting, where we thought perhaps he still might give some broadening out to his post about that August 1st deadline being firm. A little more in the minutes to come. In the meantime, let's get over to Post 9 and the judge.
Carl, thank you very much. Welcome to the halftime report. I'm Scott Wapner. Front and center this hour, the state of the rally as more street strategists raise their S&P targets today. We'll debate the road ahead and tell you about some new committee moves. Joining me for the hour, Joe Terranova, Jenny Harrington, Shannon Sakosha, BMO's Brian Belson.
Apple. Looking for the follow through.
Dow is lower. Everything else is in the green. We're reacting, of course, to those new tariffs.
Okay, we got Netflix looking very good. Netflix looks like it wants to go here. Netflix.
Wall Street necessarily believes that because the S&P is still positive territory. So, to my point, here come the strategists. David Costin, Goldman Sachs, raises his S&P 500 valuation and return forecast for 3, 6, and the next 12 months. 3%, 6,400, or 6 months, 6,600, and 60
Broadcom's about to go. There goes Meta.
So that's what you get from David Costin.
Meta. Meta's going now. It's got supply overhead. Meta could get through this supply. So I'd go out a couple of weeks. Meta. Let's see if we can get past this supply on Meta. Okay, so Meta, you got supply just overhead. Looks like they're going to try to take this out. 725 Meta. 725. That's a 48 delta by.
I would say this, that from a longer term basis, I think they're right. I think, they both have different constituencies who they talk with in terms of their different firms and things like that. But I think it's par for the course right now, especially given the fact that many of their clients on the institutional side have missed this rally, quite frankly. And so they probably beginning to perceive a lot of pressure to change that and be like everyone else. But at the
Okay, I bought some 725s Meta.
and it's par for the course to be raising after the market's already up.
Okay. Jenny, you agree with that? Bull market is here and well.
For 17 delta. 17 DTE, sorry.
I'm saying, like, what's tough about
my answer?
Yeah, go ahead.
Okay, so what's tough
I'm
about
trying to
it for me?
figure out what's so tough about
What's tough about it for me is the public.
Let her talk, damn it. Why does he keep talking over her? It really pisses me off. He is so freaking arrogant, this guy. He asked Jenny a question. She says it's tough, and he's just continuing to say what she's trying to say, and he's like talking to her. What's so tough? What's so tough? Let her fucking say what she's gonna say. Moron. God, he pisses me off sometimes. Do you hear him? He's like so combative. What the hell's wrong with him? He's got a mental issue, that boy. Okay. Okay, we got a lot of nice looking charts here. Okay, let me go over to the Dow Industrials. I know Farmer Jim, if you're listening, I'm going to look at the Dow Industrials to see what's up here. The components, Dow Industrial Components. Let me look at what is working the best. Boeing, dip buying on Boeing. We got Amgen looking good. Have a position in Amgen. Caterpillar, we're looking for the follow through. Inside day still. CRM, pushing above the 50-day, 20-day. Home Depot looking good. Home Depot looks good.
Means to me, then your expectations get messed up and then you start behaving badly. And that's when there's wealth destruction and problems ahead. So I'd rather, okay, I've actually worked on an analogy, which I'll probably screw up because it's the first time I'm trying it.
Well, if you worked on it, I hope you don't screw it up.
Well, we'll try because you know me, I don't really know sports. But I was thinking about it over the past couple weeks since we talked. Okay. And you know how you were giving me a hard time about.
Yeah, he's always giving everybody a hard time.
So negative on things.
He's a jerk, Jenny.
Negatives. I think it's like a football coach who comes up with a great play. And they say, if everything goes well, this play should work well. Right. But they don't then only look at all the things that should work well. They look at all the things with that play that could go wrong. And they say, if this goes
wrong, that's exactly the way we look at the markets too.
That's how I am with the market.
Yeah, but they still run the play.
And Jenny's smart.
A fully invested portfolio, which is what we have.
You tell him, Jenny.
Is still running the play. But you consider all the things that could go wrong. And that's why I'm always kind of coming with a negative.
Understand. So I guess the problem.
I can't get excited.
Okay, here's the Dow Industrials.
Lack of clarity from tariffs. The Fed chair getting the daylight.
God, he's such a jerk.
Interest rates.
I like when Frank is on. The black dude.
Valuations that are kind of stretched. Like, to me, nothing about that is exciting or compelling. Still fully invested because the smart thing to do is drive the market up.
Makes sense. I think we all
have
different strategies. It was well thought. We all worked on. Right? I didn't spend too much time working on it, but nonetheless, you delivered it well. We all have different strategies on the desk. Maybe the frustration that you're expressing.
Okay. Home Depot looks good. Home Depot looks good. Honeywell looks good. I believe Beagle's in that one, right?
Please proceed before you. But
but you're focused more on dividends.
I think Beagle's in Honeywell. CVX, Chevron. Okay, IBM was okay. 3M, MRK. Merck looks good. Microsoft trending. Okay, what else? What else looks good here? We got Verizon bouncing off the 20-day. Okay, CRM. Uber starting to go. Thank you. Thank you. Thank you, David. Uber. Okay, Uber, I have put credits, I believe. Uber. Okay, buyers at the low of the day. We're always looking for the buyers at the low of the day. Okay, Uber. Okay, here's Uber. Check out the buyers, okay? That's what you want to see. You want to see that A pivot, B pivot, C pivot.
Seeing something. Maybe it's seeing what's going on in the bond market. I asked the producers back in New Jersey if they could show this chart. If you look month to date, what a 10-year treasury has.
All right, D looks next. Looks like next. Okay, Uber. I have a credit spread, I believe. Let's see. Uber.
These bonds, you have German bonds, the long end backing up. So maybe the market's getting uncomfortable with the bond market once again.
Uber.
There is something in the early days.
Oh, I didn't buy Uber? Holy smokes. All right, thank you, David. That's going to help me out here. Uber. Uber. Let me buy some Uber. Uber. When are they? When are their earnings? Uber. Okay, I just want to check this before I take anything. Uber. Thought they had recently had earnings. August 5th. Okay, August 5th. Uber. August 8th is the closest. All right, so we'll buy some Uber August 8th. We got about a 40-cent spread. Okay, so 50 delta, 98. Let's go 100, and we'll go 105 maybe. 100, 105 vertical on Uber. That's 269 per contract. That's about a it's about a 2-to-1 risk reward. I'll go ahead and do that. Okay, so I'm going out to August. Okay, I'm doing August 100s. August 8th. 100 call, selling the 105 call for a vertical. 2-to-1 risk reward.
Despite the fact that we're at new highs and you have strategists raising their targets.
I think that's a fear of complacency, but I think the other thing to think about is that if you were looking for catalysts in the second half of the year, I think that there are clearly two that you can point to. One, a lot has been made of the big beautiful bill and the impact on
earnings.
Tax on tips. The pro business portions of that bill can actually be pretty transformative. And Scott, I would point to the fact that
Okay, here's Uber's earnings. 359% earnings growth.
From an industrial perspective.
Okay, so you're bullish.
So I would say we're constructive on equities. Yeah, I mean right now we're overweight global.
Okay, Uber. I don't think they're gonna back off on this earnings too much.
We think that there is still some vulnerability in some of the tech names.
Oh, hang on a second. How long have you been neutral large cap?
The whole time. Like the last number of quarters. We did
the whole thing then.
No,
It's been a large cap rally.
No,
So neutral does not mean you're not bullish.
We're overweight in large cap. So we're fully invested in large cap. And we went overweight in international, so we benefited from that.
Okay, nice move on Meta. Nice move on Meta.
Which is attractive, which we still remain overweight small cap companies.
This has been a large cap rally. Financials, industrials.
God, this guy is so combative. He comes across, I don't know, he just comes across as very rude. The dude is just too rude. It might be my southern upbringing, being from New Orleans. I hate when people talk over you. You try to make a point and you ask a question. As soon as you start to answer, the person starts talking over you. It's like, shut up already. He's really abusive to Brian Belsky. Brian Belsky is one of the best fund managers out there. You should really listen to what he has to say instead of talking over him. Okay. Watching Meta. Okay, watching Uber. Uber, nice follow through there. Good catch there, David. Thank you for the heads up.
Absolute performance in terms of our products were our SMID cap in the second quarter. And the reason is, from a fundamental perspective, we're talking about cash flow, balance sheets, and things like that. In financials, small cap financials, I think are really doing really well. So it's set up for exactly what Shannon's talking about. So you have had.
Thank you for letting me tell my story there.
It's fantastic. That's why you're here to tell your story. You have had some calls of late that, maybe are froth-related calls, if that's what the analysts are thinking. Netflix and CrowdStrike yesterday, right? Downgraded both to neutral. They've had massive runs. Datadog today to sell at Guggenheim.
I don't know. I look at downgrades and upgrades differently than he's coming across. Yeah, Netflix is at the highs, but who the hell is going to compete with Netflix? Disney? I don't think so. Hulu? Not really. Netflix is the only thing that's bigger than Netflix is YouTube, So you want to buy Google, right? Google has so much on the revenue side.
The areas that saw some of the biggest inflows in the first half of this year, and the areas that saw among the largest gains, as we're showing you on your screen right now over the past 3 months. Tech, industrials, and
Sorry, kitty cat. Didn't mean to scare you.
Leaders going to laggards.
Can't be scaring the kitty cats.
First few days of the second half of the year. It's Spotify, it's Axon, it's Netflix, it's CrowdStrike, it's all the popular names, Quanta Services.
Okay, let me tell you a little story about Google. Okay, so Google, everybody knows that the only platform that outshines Netflix in terms of viewership is Google, right? Google has a discount to fair value of 39% the last time I did this, which was last week. So it's probably a discount to fair value of about 36%, 37%. Its fair value is $276 per share. Now, this is using analysts' metrics to gauge future value based on earnings. Okay, it's got a 64% upside, Google. So where do you want to buy Google? Do you want to buy Google at the high? Or do you want to buy Google on the dips? Knowing what we could see. Now, I probably wouldn't buy it today only because it's pulled back to the 90 minute. I'd probably wait for the bounce tomorrow. But Google has YouTube, search ads. You've got Android and Pixel smartphones. You've got Google web browser, Workspace and Gmail. You got Google Cloud. You got Google DeepMind. They're shipping countless products, models. Gemini Live, research on Gemini Live agents. Okay. You've heard agentic AI. They're in the middle of agentic AI. They have the Gemini app. They have Gemini 2.5 Pro. They have an ELO score of 1448. Ironwood 7th generation GPU chips for large-scale AI inference modeling. The Ironwood 7th generation GPU chip. Okay.
It's also earnings. That's where the earnings have been. The earnings have been in these large cap names. The earnings have been in these mid cap names. We're waiting for the earnings and the profit margin expansion to show up in the small cap names. So I mentioned institutional level selling by way of that B of A note. The committee level, there's selling here on this desk.
Okay, so I lost my place here.
And restaurant brands. Those are large cap stocks. Why'd you do that?
Restaurant Brands was a name that we own in a lot of Canadian portfolios, so it didn't make sense to own in our U.S. value much. It didn't really work the way that we wanted it to work. We had a nice bounce in it, but we didn't see it. Nike had the big bounce. We talked about it when we were here the last time. We knew that it was up for selling, but we obviously couldn't talk about that until we published that. We replaced it with Lululemon because we think Lulu, from an opportunistic standpoint, makes a lot more sense. And we sold Prologis because we want to get a little bit bigger, Scott, in the OG utility names like Southern and Nextera, because we think those are better plays than REITs right here. So that's why we sold what we sold.
So as it relates to Nike and Lulu, so you think that the bounce back in Nike shares, which has been pretty dramatic.
Yep.
There's still a long way to go. Obviously, as you know, you debate whether the turnaround is going to take shape or not. There, you can see at the very end of your screen there, the move I'm talking about. So you think that's kind of done, and then if you show Lulu, maybe year to date, you think the worst is in.
I do.
We don't need an intraday on that.
Yeah, look at that. I mean, if you look at that chart and the turn here from the bottom at 15 times earnings and a growth stock that's a broken
Okay.
growth stock, you want to try to find broken growth names. And
I got to go to the White House. The president's been holding his cabinet meeting and is now taking some questions from reporters. Let's listen in.
If there's anything that you signal about your displeasure with them.
Well, just look, I'm very unhappy with that. There's no reason for this. It's turned out to be tougher, but it's only tougher. And I will say the Ukrainians were brave, but we gave them the best equipment ever made. We gave them the anti-tank busters that knocked out tanks. I mean, you just aim them in the direction of the tank, and the tank is gone. We gave them missiles, the latest and the greatest. They were able to shoot down a lot of things that would have normally wiped out. You know, probably would have been a very quick war. It would have been a war that lasted 3-4 days, but they had the benefit of unbelievable equipment. And Europe gave them too. We gave them
Okay.
more because.
So anyway, Google also has 90 billion in revenue. That's a 12% increase year over year. So Google is definitely something I'd be buying on dips. Tesla, nice bounce. You got Nvidia breaking higher now. Nvidia is turning out to be a good setup as well. Uber continuation, looking good. Uber. Okay, Nvidia, nice pop on Nvidia. So if you have some Nvidia, that's a nice trade, a little setup there on Nvidia. Apple's continuation. Persistent. We got a B pivot on Apple, continues to move higher. Broadcom looks like it wants to go. All the New York FANGs have turned, some more than others.
But if you look at our Patriots, if you look at our Tomahawks, if you look at our, well, what we do with tanks is you wouldn't want to be driving a tank. You would feel nice and secure. But they are javelins, they're called. And I gave them the javelins. Remember they said Trump gave the javelins and Obama gave them sheets, right? They called Obama at that time. Barack Hussein Obama, if you haven't heard, did a terrible job. But that was a war that should have never happened. And a lot of people have died. And it should end. And I don't know, we get a lot of bullshit thrown at us by Putin. Or you want to know the truth. It's very nice all the time, but it turns
That's the
out
second
to be
curse word I've heard him use.
Do you want to say something? Lindsey Graham's sanctions bill on Russia. Do you want to
I'm looking at it, yeah. I'm looking at
Meta, Apple, Nvidia.
Very tough sanctions, but yeah, I'm looking at it.
Did you sign that?
It's an optional bill.
Meta,
It's totally at my option.
Apple,
Totally at my option.
Nvidia,
Totally at my option.
Tesla.
And I'm looking at it very strongly.
Yesterday, you said you had such a
The Council of Economic Advisors released a new report saying that imported goods have actually decreased in price from December. Well, my question is, when the tariffs, well, if the tariffs is saying that tariffs are going to cause price increases, are the prices just not passed the Fed?
Yeah, but I tune in. I don't tune in for.
No, I think what's happening is everything's evening out. You know, when we charge him. See, what people don't understand, the other countries have been charged, almost every country charges us tariffs. We had deficits with everybody for years, for decades. And we were like this big model that made bad deals with everybody. We rebuilt South Korea, we stayed there. It's okay, we rebuilt it, and we stayed there. And it's very little for the military. I got them to pay billions of dollars, and Biden didn't cancel.
Hi, Took Alert plus 800.
I said to South Korea, as an example, we give you free military, essentially, very little. And I think you should pay us $10 billion a year. And they went crazy. But they agreed to 3. So I got 3 with a phone call.
Okay, new high. Nice trade. Nice go. SPY, nice one. Nice call, Frank.
They probably went to him and
Doc.
said, listen, Trump treated us terribly. And we shouldn't be paying anything. And he cut it down to nothing. So that's what happens. It's ridiculous. That's the other thing. We're talking to countries about contributing to the military, not only just paying more in NATO.
Yeah, I saw that.
We have 45,000 soldiers in South Korea. We have 45,000 soldiers in
All right,
Germany.
Tesla looks like it wants to go again. There goes Broadcom. Broadcom's starting to go. If Broadcom gets a move on, this could be an epic move. Broadcom. I already have a position in Broadcom, so maybe I want to add to it. Okay, we got supply just overhead, so it's a little more risky if you buy it now. Broadcom, I have July 18th, 280 calls, so we're only $5 out of the money. These are break even now, so I'm fine with Broadcom. Okay, let's see if that gets going.
Jerome Powell, who you've been pressuring to lower interest rates, he's facing accusations of lying to Congress, which is a potential crime about the
Well, he should resign immediately. We should get somebody in there that's going to lower interest rates. Why don't you go for his resignation?
Do you want congressional Republicans to investigate?
Okay with me. I think he's terrible. I think, look, I call him too late. Too late. Like 2 tall jumps for the Dallas Cowboys. Too late. He's always late. But he wasn't late with Biden before the election. He was cutting him like crazy. It didn't help too much, did it? But he was cutting them like crazy before the election.
Okay, Broadcom on the move, looking really good here.
He was trying to get them in, I guess. I don't know. He was recommended by somebody that could work for me. I like
Okay, Uber looking good. Okay, there goes Broadcom. Broadcom looking good. Broadcom. Mm-hmm.
Allegedly said for intelligence agency. So can you resolve whether or not he did, and also can you say why there was a minute missing from the jailhouse tape?
Yeah, sure.
Okay, there goes NVIDIA.
Are you still talking about Jeffrey Epstein? This guy's been talked about for years. You're asking, we have Texas, we have this, we have all of the things. And are people still talking about this guy, this creep?
Hi, Took Alert plus 800.
Do you want to waste the time and do you feel like answering?
I don't mind answering.
I mean, I can't believe you're asking a question on Epstein at a time like this where we're having some of the greatest success and also tragedy with what happened in Texas. It just seems like a desecration, but you go ahead.
Sure. First, to back up on that, in February, I did an interview on Fox, and it's been getting a lot of attention because
Smart lady.
I was asked a question about the client list.
Got nothing against smart ladies. I like smart ladies.
To be reviewed, meaning the file along with the JFK, MLK files as well. That's what I meant by that. Also, to the tens of thousands of video, they turned out to be child porn downloaded by that disgusting Jeffrey Epstein.
Extreme high tech alert.
Extreme high tech. Here we go.
To him being an agent, I have no knowledge about that. We can get back to you on that. And the minute missing from the video, we released the video showing definitively the video was not conclusive, but the evidence.
Microsoft turning also. Microsoft might be a trade there. You might want to think about Microsoft.
And what we learned from Bureau of Prisons was every they redo that video. It's old from like 1999. So every night the video is reset. And every night should have the same minute missing. So we're looking for that video to
Okay,
reflect that
NVIDIA
as
ripping
well,
here.
showing that a minute is missing. And that's it on its state.
NVIDIA's ripping there. Watch NVIDIA.
Extreme high tip alert.
Okay, extreme high techs. All right, looking good. NVIDIA. Cool. NVIDIA. I have next week's 162.50s NVIDIA. I got 162.50s.
And everybody pays. Everybody has to pay. The incentive is that they have the right to deal in the United States. If they don't want to, they don't have to pay. They don't have to deal here. But if they want to buy,
Nice trade there, Frank. Nice trade, Frank.
in the United States, they have to. You know, if you go back and look at some of the good presidents, our country was the wealthiest, proportionately the wealthiest, from 1870 to 1913. It was an all-tariff country. We didn't have income tax.
Okay, looking for that next wave. All right, so we're squeezing really tight on Tesla. Tesla squeezing tight. Okay, looking for this to take off to the upside. Bollinger Bands are nice and tight.
He was very, very strong. So to say, he made a fortune for this country.
Okay, watch for the breakout. Tesla, this could rip. I still have calls left on Tesla. I sold half earlier.
And he spent the money. And they said Roosevelt was a great president. And let's say he was a great president, but the money was paid by McKinley with tariffs. Tariffs are charged by other countries at levels that are ridiculous. And you know, I told those other countries to say, and every one of them is willing to give us everything now, by the way, just so you know. Sir, we'll charge you no tariffs, nothing. We'll give you everything. We'll give you access to our markets. We'll give you everything. Is that a correct statement, Scott? Yes, sir. Howard, would you say that's a correct statement? Exactly correct. It's like they just don't, because they're very spoiled, because for years they ripped us off and we didn't have a president that understood it, or Secretary of Treasury or Secretary of
Okay, Tesla looking for the breakout.
certainly Commerce Secretary was, you know, not doing their job. I don't know about Kelly's small business. We'll keep it that way. Okay? Small business is bigger than almost all big businesses.
All right, Tesla just sitting here. I'm going to save this 305. I want to buy some 305s, Tesla. I'm waiting for this squeeze.
But the deals are mostly my deal to them. We're picking a number that's low. We don't want to hurt that. And fair. We're picking a number that's lower than, in most cases, lower than what they charged us. But it's amazing when you all this
Netflix looking for that next leg higher. Netflix.
president that's a little bit different and a little tougher on this subject, willing to drop everything they've been charging us for years and years. I mean, we have countries going, we want, no, you don't have to pay any tariff to come and do this. They're giving us total access to the
Super Micro. Okay, CRISPR. Nice follow through on CRISPR.
We will give you total access and you don't have to pay any tariffs. But please
Nice follow through on CRISPR. Continues higher CRISPR.
the letters I sent them, or we have made some, because we can make a lot more deals. It's just too, so many. It's just.
I like CRISPR. I just want to buy a dip.
And we can do things over the years too, you know. We're
Okay, so Super Micro looking pretty super. Looking like it wants to go here. Super Micro.
started collecting money from countries that were ripping us off and laughing behind our back at how stupid we were. Okay, thank you.
So you talked about India coming, but then a couple days ago, you issued a new tariff threat to members of the BRICS countries for, if they align with anti-American
10%,
policies.
George.
That would be India, Brazil,
That's
Russia,
right, they have to pay 10% if they're in BRICS. Because BRICS was set up to hurt us. BRICS was set up to degenerate our dollar and take our dollar as the standard, take it off as the standard.
if you ever have a question about the U.S. dollar strength, even when it's pulling back, do yourself a favor. Get maybe you take an ebook, whatever. Check out the Dollar Trap. I'm telling you, this is like the best book when it comes to understanding the U.S. dollar and why it's tightened its grip on global finance. All right, the Dollar Trap by Eswar Prasad. Okay, Eswar Prasad. Very, very good book.
Smart president, you will never lose the standard. If you have a stupid president like the last one, you would lose the standard. You wouldn't have the.
I believe Yeshivar, right? If anybody's from India, I think you can confirm this. I think his name is actually pronounced Yeshivar, and that's actually God's name in Hindu culture. Is that right? Yeshivar? Or Yeshivar? Yeah. Yeshivar Prasad. I keep calling him Eswar, but it's Yeshivar Prasad. That's God's name in Hindu. And he's definitely got the setup for why the dollar is number one. Okay. And why they're probably going to stay that way for some time. I mean, you just think about the Chinese yuan, right? The biggest problem that China has is that number one, big corporations don't trust the stability and the ability to pay. Just a lot of negatives about the Chinese government currently. I mean, if they ever form a democracy, that would be different. But that's one of the main things about China. They want to be the reserve currency, but that's not going to happen. That's not going to happen. Okay, well, looking at Tesla, looking for it to break higher. Let's see, Uber did push higher. Okay, Uber starting to take a little profit taking there. Uber looking for a follow through. Okay, futures, a little profit taking on futures going into the 12:30 hour.
I could have been much harsher. I don't want to do that. I want to have relationships, but in every case, they treated us far worse than I'm treating them. I'm treating them very good. I could go higher with the tariffs, but I don't want to hurt them. That's why when you just read it, you come up with the number that's so incredible that prices are actually going down. Just so you know, when I got in, everyone said, "Oh, eggs are going through the roof." I was in for about 4 days, and they started screaming at me about eggs. I didn't know about eggs, but eggs went up about 5 times. You did a fantastic job, and we ended up shortly. In fact, for Easter, they said go out and buy plastic eggs. You can't use real eggs. Well, we bought 200,000 eggs for the White House for the Easter egg hunt that we have at the White House, and there were eggs. We had the price down, and now the price is lower than it was before. We did a good job with eggs, but we did a good job with groceries. Our prices are down in this country. A big part of it's oil. The oil. You had a couple of places last week. You had $1.99 for oil for gasoline. Nobody thought that's too bad. I want to get it lower if I can, but we've done a good job. You've done a very good job. Do you want to say a couple of words about that, you and Chris, about what's happening with energy?
Well, absolutely, but I would say on the pricing side, President Trump, the fact that you endorsed and supported a policy of energy dominance, that sends a signal to the market that we're going to have more supply.
All right, so we're waiting for the markets. Markets are starting to fade a little bit right now, so got a little ahead of ourselves, taking profits off into strength. Always a good idea.
Heading into the 4th of July, these were the lowest gas prices at the pump in 4 years. And again, for Americans, this is like hundreds of billions of dollars that stay in their pockets
because we lowered the price of gas at the pump. But when we lowered the price of energy, it lowers the price of food. It lowers the price of the clothes you wear.
It's the biggest thing.
It's the biggest thing.
It's like a big tax cut. When you get energy down, every 50 cents is like a massive tax cut, and we've gotten it down much below that. You know, we had great energy, great low prices, everything else when the election turned over.
Okay, watching Tesla for a bounce, watching Apple for a bounce, and Meta, Broadcom looking for bounces here.
Energy started going up, and it went up really bad, and then he went back to the Trump policy. The problem was they didn't know how to do that, and he lost it. He lost that sucker. That big sucker was out of control, and his energy prices went way up, and that's what caused it. But it was also stupid spending. They spent money like they used to use the term drunken sailors, but I won't use that term. Although it is very descriptive, I won't use that term. I refuse.
You just used it.
But they spent money at levels that nobody had ever seen before.
Just listening to this press conference.
Trillions of dollars wasted on the Green New scam, greatest scam in the history of our country, other than maybe Russia. That might have been. But the Green New scam was the single greatest scam in the history of our country, and continues to be. But it's weakened badly. It's hobbling along because people are they're finally getting it. But they spent trillions of dollars on the Green New scam, getting nothing for it.
Yep.
Devised by a couple of young people that weren't even good college students. You know, not even good students. Check out their marks. Yeah. Not for CNN.
The last job report, Mr. President, the last job report, the manufacturing jobs actually lost 7,000 jobs. When will the investments that you've been talking about have an effect?
Well, they're building the plants now. About 7 have started.
Okay, Netflix starting to turn, are looking for a higher high on Netflix.
Lee Zeldin, who may be the most important man in this room, I'm sorry. But he's the one that gets the permits, whereas he's the one that has to get the permits for the plants and the factories, and permits that used to take 5 years, he's getting in record-setting times. We're leading China a lot in AI. If we go with this, you know, I'm allowing the plants to build their own electric. I'm allowing them to become an electric.
Speaking of electric, if he starts talking about Oklo and nanonuclear, NNE, these were up yesterday, coming back in. So watching these, SMR, Lightbridge. Okay, Constellation Energy. Okay.
So we're supplying the grid with brand new electric sources. And you know, it's funny, when they came to see me, they never even asked for that. I told them about it. The reason they didn't, they thought that was an impossibility. You're not allowed to build your own electric. These are massive investments that are being made in building electricity for their plants. And they're going to have, I think, Doug, a lot of electricity left over. And that electricity is going to be passed into the grid and give us no more, you know, like you look at California, they have blackouts every week, and they're totally out of control. They have a really incompetent governor. Where's Chris? Is he here? You want to speak to the subject?
Yeah, I think a huge thing in the One Big Beautiful Bill, Mr. President, because your leadership, is the ending of these subsidies, as you call them, the Green New scam. That saves our country $500 billion over the next 10 years. But American taxpayers were paying twice. They were paying that money, $500 billion in the subsidies, and they were paying more expensive electricity price. If you subsidize something, you should at least lower the cost of it. But in this case, we were subsidizing something and paying more for it. So the One Big Beautiful Bill had two huge things: ending wasteful spending. Wind, solar, and batteries combined are 3% of U.S. total primary energy. 3% for $1 trillion, another $500 billion coming. It's just not a good investment, hurting our businesses, hurting our consumers. And that One Big Beautiful Bill also unshackled oil, gas, and coal development in the United States, onshore and offshore. Secretary Bergen has been working tirelessly on how, by getting the government out of the way, private businesses will develop more resources in the United States, lowering costs for American consumers and making much better leverage for the United States to help our allies abroad and reduce the power of our
Okay,
adversaries
so
abroad.
most positions right now are giving us pivots. All right, so we're keeping an eye on some of these, like Tesla, for example, watching these pivots. Tesla pivots. Let's just look at some of these. Okay, so Tesla looking for a higher high. This is CEG, Constellation Energy, looking for a bounce. Tesla just sitting here above VWAP. Meta, Meta, looking for a higher low this time of day, looking for a higher low. Why am I looking for a higher low? It's somewhat neutral to bullish, so I'm looking for a higher low. Watching stochastics turning, telling me to look for a close in the upper half of the daily range. So I'm looking for the low of the day and looking possibly the high of the day over here. So I'm looking for a close in the upper half of the daily range, hopefully above the above VWAP and above the high that we've seen today so far, 721. Tesla, we just looked at Tesla, right? Yeah, Tesla flat. Apple, looking for higher lows, higher highs. Tesla, Broadcom.
Because it's the only energy where you need subsidy. He said energy shouldn't need subsidy. You should make money with energy. So
We're going to continue to monitor the Q&A there in the cabinet meeting that the president has made some headlines in, and I'll recap for you. Obviously, at the very top, you heard some questions about Russia, Ukraine, about Jeffrey Epstein and the controversy around that. But specifically on tariffs, he did.
Okay, top of the NASDAQ 100, Regeneron. Okay, look at the difference between Broadcom, one of the New York Fangs, and Regeneron. Look at the difference between these two. Here's Regeneron. Here's Broadcom. Here's Apple. Okay, so these are less interesting, right? You look at Regeneron, boom. Big move on Regeneron. ASML was looking at this before. Probably going to do something with ASML. Vertex, CLAC, KLAC, CLAC. Okay, the semis look like they're going to start going again. Okay, SOXL looks good. Above the 200 days, probably going to bounce and follow through. You know what? I'm going to take some SOXL now. I took some profits on Thursday. We're back up to that level now. 3 days later, SOXL. Let me go to SOXL. Let me just look at SOXL. SOXL. I want to see buy order blocks. SOXL. I want to see buy order blocks. Okay, you got buy order blocks. 1, 2, 3. Okay, so this looks like it keep going. Now we could wait until a B and C, maybe a B pivot down here somewhere. So I'll scale into this SOXL. I'm going to go out. When is NVIDIA? When do they start to report NVIDIA earnings? NVIDIA. Okay, let me just see where some of these report. NVIDIA August 27th. What about AMD? AMD, they report July 30th. What about Micron? Micron. Reason I want to do this is I want to get something expiration-wise that isn't affected negatively. Okay, so end of July. All right, so let me go end of July for SOXL. And the 50 deltas are $1.84. All right, so I'm going to buy a few of these and see what we can get out of this. Some 27, some 27. Okay, I got filled at $1.80. I bought some July 25th SOXL. Uh, 50 delta calls, 50 deltas. 27 strike. $1.80 filled. Give it an 80-cent stop. It's trading back above the 200-day. Okay. SOXL. Okay, let's take a look at that. Okay, back above the 200-day on the right, daily. Squeezing now. Squeezing. Okay. Could wait for a B and C pivot. B pivot. Okay, so maybe this stays here. Maybe that's a B pivot right there.
When we went to the cabinet meeting, Brian Belsky was finishing his thoughts about the moves that he had made recently, including selling Nike, Prologis, and restaurant brands, and he bought Lululemon, to which I think I was asking you about. So you were thinking that the move in Nike was done and that the move in Lulu could be just ahead, that the worst maybe was over there?
It looks to us like Nike's got a little bit more work to do. We're very glad that we were able to take that bounce in Nike, but I think when you're looking at running value money and you see a broken growth name like Lulu, that we think from an operational perspective can get back to where they need to be faster than where Nike is right now.
Okay, CRISPR continues to push the highs. CRISPR's, what is IREN doing? IREN. Okay, that's off today. IREN. Okay. GDX.
In the near future, the stock is just not, certainly not year to date.
Right.
And you bought, is it at Vici property? Vici Properties.
So,
Take me through the trade. Sure.
So a couple months ago, we know Organon cut the dividend, the stock plunged, it was around 8. You guys were asking me why I wasn't selling it. And I said, look, the numbers were fine.
Okay, I'm going to take a 2-minute break. I'll be right back.
So they ostracized their entire dividend shareholder base. Now you need to see that changeover. But because I'm not an algo robotic trading program, I don't need to do that today. Stock was trading at about 8. I sold it closer to 10. So, you always look at here and nowadays. No, I didn't want to keep holding it, but I knew the shares were oversold. So I waited patiently and got a pushing 25% bounce out of that. So that was a sell. And then separately, we added a company called Vici Properties, which is really cool. It is a triple net lease REIT where they own gaming and casino properties. They have 93 properties, 54 casinos. So they own things that we all know, like the Venetian and the Mandalay, MGM Grand. They also own 39 experiential properties that are like boleros and golf courses. I will tell you, this is one of the best management teams that I've met with. Just professional, thoughtful, sober, serious. They're incredible. They also have a 5.3% dividend yield. They have 3% FFO growth ahead. They have rent escalators that are tied to CPI. So as inflation picks up, maybe that's positive for them. Because they're triple net lease REIT, which means the tenants pay everything, right? All the improvements, taxes. The tenants, and because of the type of tenants they have, who are companies like MGM and Caesars, they have 100% occupancy. They had 100% occupancy at the worst of the pandemic. They had 100% rent payment collection at the worst of the pandemic. So as we go into, as you all know, an environment that I think is kind of sketchy, I look at this and I can say I'm getting 5.3% from the dividend. I should get 3-4% FFO growth. You combine those together, I should have a 9-10% annualized return. That works for me. I first looked at this company 2 years ago. The same metrics ahead. It was pretty flat. But in that environment where I thought there was a lot more growth left out there, it wasn't compelling. Now, in what I think is a lower growth environment, it becomes much more compelling for the portfolio.
All right. And there's the stock, and we will follow it from here forward. Thank you very much for that. Brian, you bought Fifth Third, which you made a remark, I think, earlier on, that you thought some of the smaller mid cap banks were compelling.
Yep.
And this falls obviously into that basket.
It does. And I'm glad you used the term basket because we own a number of.
Thank you.
You're welcome. Well done, Scott.
Thanks, Brian.
So much love.
I'm humbled and honored. Yes, that you would say that.
Thank you.
I mean, in my 30 years of experience, nobody's ever said that.
I'm confused by the love.
Go ahead. Yes. Thank you.
So I think the best approach is, it's really weird. I think the best approach to looking at these banks, Scott, is to buy a basket of these regional mid-sized banks because I do believe as deregulation unfolds, I really believe that's going to be a major trend. I think we see consolidation. I'm not buying Fifth Third because it's getting bought out because I think you need to own a bunch of these in terms of the momentum from a fundamental perspective.
Hey, I want to ask you too, because I didn't get your view, and you own Tesla. Okay. I want your take on what's been going on, okay, with Musk forming a new party and this battle with President Trump obviously not going away anytime soon. And the fact that Dan Ives, who's been, I don't know, without question, I think the biggest booster of Tesla and Musk himself on the street, says he believes we're at a tipping point now and that the board must act. That was sort of the headline of his note. I'm wondering what you think as well as your shareholder.
Yeah, we're 100% aligned with Dan. We're worried. We don't like when we see these types of events. We're underweight the stock. You know, Dan still is a proponent of the stock and loves it and is overweight. But, you know, we're underweight the stock. We own it for more sectoral reasons. But we're going to hang with it for now.
Good. I mean, Adam Jonas at Morgan Stanley has also, by the way, reiterated his overweight rating. He has a $410 target, but does say that the political priorities, that's the wording that he uses, may add further near-term pressure to Tesla shares. Thus, you know, I guess why you would feel the way you do. On the other side of that, Uber's target was raised yet again, and it hit another high yet again today. Jenny, you want to give me a thought on what's been happening with Uber? Because it's an easy segue from Tesla to that.
Yeah, it's an easy segue. So, you know, we've owned this since $22 and we've trimmed it and trimmed it and trimmed it. And it's getting a little uncomfortable, but here's the bottom line for us. It still has a 4.8% free cash flow yield. And so for our disciplined growth strategy that it's in, there's to get into that portfolio, it needs a minimum.
Okay, Uber looking for higher highs.
Kind of compelling, even trading at 30 times earnings, even up 58% year to date. It's a great story. It's a great company. And so we're continuing to hold it. Yeah. But I'll tell you, like, it does make me uncomfortable.
Well, I mean, look at the chart since April.
Yeah.
Has been remarkable. What more can you say? Year to date up better than 60%. So we'll continue to follow that too.
There is one thing on that that's interesting, which is when we were talking about the big mega caps before, when you see these stocks up this much, they take up a lot of room in people's portfolios and they start to get uncomfortable. Mm-hmm. So I was talking to a client yesterday who said he has huge capital gains this year outside of us, obviously, because he's been trimming his NVIDIA. It just makes people uncomfortable to have those weightings. So you might see trimming because of that.
Okay. We'll take a break. We'll do finals on the other side.
Tesla starting to run the lower band in that squeeze. So watch Tesla. This could fade a bit. Okay. It's been spending so much time up here that it could fade a bit more. So I'm going to take a little bit more Tesla off, I believe. I have half a position left. Okay. I'll leave it alone. I'll leave it alone. All right. So I was thinking about Tesla. I'm going to let it play out. See if we can get up to a little bit more into the gap Tesla.
Vegas, having to buy the hotel. But if that's a casino, you know, less than an hour from their home, and that's, you know, a great way to spend an evening, that is definitely something that we've been seeing. And that's shown by the number of visitors, which is increasing to regional casinos, not the spend per visitor. So it really is a volume story.
I want to get to the stock you don't like before we get to win. I want to talk about NGM for a minute and why you think that one is not as well positioned versus some of those competitors. Does it have to do with that geographic exposure, or there are other elements here?
There's other elements is what I would say. So they do have more of that lower to mid end exposure, which has been where there's been a little bit of choppiness amongst the data. But the key for MGM, why we have a more cautious view, is they are going through a huge capex cycle. They are spending upwards of $5 billion on a Japan project, which won't open until 2030. So in the meantime, cash flow conversion is coming down. We think there's going to be pressure onto buybacks. And so we do see merit to that project. They will be great, but not until 5 to 6 years when it opens. And investors aren't patient for that. And in the near term, you have the choppiness of Vegas and cash flow coming down. And so that really is the basis of our view.
And then I guess on the flip side, you have Wynn, which it has invested, but it's closer to the finish line, I guess, or a near-term finish line. It's going to be opening a new project in 2027. What is that project and why are you optimistic about it?
It's a great point. It is the single most interesting thing in gaming right now that I think is being overlooked by investors. So Wynn is opening the first ever casino in the UAE. That is coming just in less than 18 months' time in the first quarter of 2027. There aren't going to be any gaming competitors in the UAE. They'll have a 4 to 5 year runway, and there is a huge target market for it. The number of tourists that visit Dubai every single year is about 14 million. So there's a real large target market there. It's double that of Singapore. And so we think it's really exciting and currently not being priced in.
Why do you think that is? Why do you think investors are not sort of paying more attention to that?
I think with gaming, they tend to be a shorter term time horizon. And so if you look over the next 12 months, that is really the focus. What is happening in Vegas? What is happening in regionals? What is happening in Macau too? But as we get closer to this being just a year out, we're 6 months from it being 1 year out, that's when I really think it will start to matter. There's also going to be an investor day later this year that can put some more numbers behind it. And so I think that's when it's going to start being tangible.
And then Lizzie, the other buy rated stock here is Caesars. That's more of a Las Vegas itself play. What do you like there? And certainly versus some of the other Las Vegas based competitors.
So as I said with Vegas, there's this bifurcation. I think what's interesting with Caesars is that if you look at convention and business attendance, that's still doing really well. That's growing double digits. And Caesar has the biggest exposure to that in the first half of 2026. There's several conferences that only appear every 3 years. Those are happening in the first half of 2026. And one of them is right on Caesar's doorstep in the hotel itself. And so we think there's an inflection point at Vegas, but more importantly, Caesars is in a CapEx harvesting mode. Their cash flow is about to inflect to over $4 billion over the next 3 years cumulatively. And so what has been a very levered stock, it's high 5 times right now, has a pathway to being under 4 times over the next few years, which we think is really going to be key.
Lizzie, thanks so much for joining us. Really appreciate it.
Thank you.
Coming up, we got full market coverage ahead in the second hour of Market Catalyst.
Okay, so Broadcom's trying to make a new high now. Broadcom. Apple's trying to make a higher low. So is Meta. Meta just produced a higher low, looking for a higher high now. Meta. Microsoft made a higher low, looking to make a higher high right here, right now. Netflix making a higher low, now about to make a higher high.
Welcome to Stocks and Translation. Welcome to Financial Freestyle. Welcome to Decoding Retirement. Welcome to Living Not So Badly. Welcome to Trader Talk.
Netflix looking good.
Big idea. Welcome to Yahoo Finance Sports Report. Welcome to Word Market. From Wall Street to Main Street to the C-suite, we're your daily life.
Tesla. Okay, watching that.
Is Yahoo Finance. Join us on YahooFinance.com, the Yahoo Finance app, your favorite streaming platform, and whatever get your podcasts.
All right, so Meta looking good. Broadcom, ditto. Okay, Microsoft. Okay, Netflix. These are all doing the same thing, looking for more upside. Snowflake. Okay, CORZ. Core Scientific. Okay. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday the 8th.
Hey, do you dread scrubbing away stubborn dirt and stains? I used to, until I found the Spinny Scrub. Let me show you why this little powder. You can also scan the code on the screen now and find out more. This is the Spinny Scrub, your new best friend when it comes to cleaning. It's got a powerful motor that rotates at high speed, so no more scrubbing.
Okay, so looking for that higher high. Meta's starting to push a bit more. Meta. Okay, Netflix looking good. Meta. Let's get Netflix to get going here. Let's get some Netflix going. Okay, we're making higher highs, higher low, higher high now on Netflix.
Scan the code on your screen right now and get yours today. You'll thank me later.
That's the dumbest thing. Some of the dumbass advertising I see on Yahoo Finance. I don't think the government is too involved in checking for false representation on a lot of these things I'm seeing on YouTube and Yahoo Finance. They make claims that I doubt really are supportive. My favorite is one with this college student reinvented the AC, portable AC market. He invented this device that plugs into an outlet on the wall, and it can cool your room from 80 degrees down to 60 degrees in minutes. There is no way in hell that that can happen. So I don't understand how they can advertise that. They sell this stuff to people. If people realize that it's false advertising, and you're sitting there with a $50-$100 product. What is Vinny talking about? I'm just waiting for the markets, and I'm just bitching about the advertising on TV these days. And they're like constantly repeating. The other one that really cracks me up is you seen the flashlight that's also a torch, and they show this guy standing there with a flashlight, and then he's literally using it like a torch to burn through drywall. There's no way. There's no way. No way. Another one is the shaver. It's like a little miniature shaver you can hold in the palm of your hand. It's like the size of half a deck of cards. And they show this guy, or they show men, shaving their face, and they have the camera positioned in such a way that you can't see that the face is already shaved in the location, and they pull the shaver down, and miraculously all the hair has gone down to the skin. I bought one of them just to see what it was, what the deal was. It was like 1995. Sure as hell, they were false advertising. There's no way that shaver can perform. I don't know. Just one of my pet peeves. All this advertising you see on YouTube and Schwab and Yahoo. Total BS. It's not so much Schwab. Yahoo Finance definitely, and YouTube. All right, just watching. Broadcom's about to go here. Broadcom about to blow. Broadcom's about to blow right here. ABCD. Okay, watching Broadcom. Looking for Netflix to go to. Meta next. Meta next. Okay, watching Meta. Watch these two. Meta and Broadcom. Meta's trying to push through here. So the squeeze is on. Broadcom. Okay, so Bollinger Bands are paralleling. You see the difference between Broadcom? You got supply right here, but you see the Bollinger Bands? Now look at the Bollinger Bands on Meta for comparison. You can see that Meta's Bollinger Bands are coming together. So that's telling you it's probably going to stay right where it is. What's Tesla look like? Tesla, I know that Tesla was squeezing. Look at the Bollinger Bands. Squeeze. Fair value gap down here below. Frank pointed that out. Okay, let's look at Apple. Bollinger Band's fairly tight. Now, let's compare this to Regeneron. Look at Regeneron. Look at the difference in Regeneron. Okay, this is starting to slip right now, but this morning, this was a good buy order right here. Nice follow through. Let's see. ASML. I want to buy some ASML, but I don't want to buy the high of the day. ASML. Okay, they have a new $400 million machine that produces chips, EV lithography. and they're going to report earnings next Wednesday. I got a feeling earnings going to be good. Let's take a look at a different chart. You could play SOXL too for all these chip companies that are going to be reporting. It's a little bit safer. All right, so I'm in some calls on this one. I had shares and calls. I took them off on Thursday, 26.72. We're right back to that level. So I was fearful that this might drop below the 200-day. Not the case. The trend is still developing, so I bought back into options. I just posted that in the room a little while ago. SOXL. Okay, ASML on the daily. Okay, this reports next Wednesday. You could probably wait, I guess. You could probably wait. But this is the potential waiting for us on ASML. Think about the AI technology, and they're constantly, like even more rapidly replacing chips. You got companies like Google and Amazon, Microsoft making their own chips. I don't know if they have the machines like this. I mean, I guess they could afford to buy a $400 million machine to make their own chips. And you have Cadence Design, which creates the software, right? Am I right about that? Cadence Design, I believe they have software that helps these companies make chips. Not that they wouldn't have in-house people that could do that. Cadence Design. Let's go take a look. Cadence Design, CDNS, Cadence Design. So all of these chips, AI-related names, they're all going to do well. Just don't want to buy at a premium. Cadence Design. Okay. Pivotal leader in electronic design, building upon more than 30 years computational software expertise. So they create the software. Okay. But you got these chip making machines. ASML produces. Okay, ASML, and they are going to report next Wednesday, the 16th. Okay, looking at their earnings growth, all four metrics green. I got to believe these numbers are going to be stronger for ASML. So I could see ASML higher. And then looking at ASML on the weekly time frame, look at the potential for ASML on the weekly. Okay, we're trading just shy of 800. So a 300-point move potentially. I think that looks pretty good. All right, so ASML holding at the highs. Okay, Broadcom trying to break higher. All of these are trying to break higher. Let's see, Netflix might get going here. Netflix. Okay, Netflix, watching Netflix. Okay, I got to take another 2-minute break. I just want to make my son and my daughter some lunch. I'll be right back. Dividends. Goldman Sachs was 33% increase. Most of the others were like 7 to 12%. So the return of capital and total return is important, and it's also confidence about their business. I think the Trump administration sees these large banks as really a linchpin to help stimulate the general economy, whether it be for commercial loans or other areas. So, and the last point is, these banks have durable, recurring businesses, which with higher market prices are going to have great results, and that would be asset management and wealth management. Both of these are key franchises, not only for Goldman and Morgan Stanley, but several of the other banks. Besides the two I mentioned, we also have a buy at Citi. It's always been more on the low, cheaper valuation curve of this group, and they're doing well in their restructuring.
Just quickly, Ken, what is the key thing that you think we need to hear on conference calls from those banking sectors?
I think visibility and their confidence that even with the tariffs that they're able to do business and also talk about in different areas of capital markets, the pipeline, the confidence that they have that we're getting back not to a crazy risk-on environment,
but a normalized environment. You have to remember, back in April, if I was on media, the world was coming to an end, and these banks were going to be in trouble because of the high uncertainty. We haven't seen that, so I think confidence, normalized outlook, stronger second half, I would stay the course.
And it's always great to see you. Thank you so much for joining us. And Mark, of course, is sticking around. Coming up, we got the latest read on small business.
Don't miss the warehouse clearance sale going on now at America's Furniture Warehouse. Save on living room furniture, bedroom furniture, and mattresses. Up to 70% off furniture ready for delivery. Visit our showroom located across the Coastal Grand Mall. 0% financing, lease-to-own options, and fast delivery. Everyone wins at America's Furniture Warehouse.
Celebrate Independence Day savings all month long at Bell & Bell GMC. Get 0% APR on the rugged Sierra 1500 up to $11,031 in total purchase allowance on select models. Bell & Bell GMC in North Myrtle Beach.
We've all been there. A dead battery, a flat tire, and no help in sight. But what if you had the ultimate emergency tool at your fingertips? Introducing the Flash Charge 4-in-1 Jump Starter Power Bank plus Tire Inflate and a roadside lifesaver. With wireless inflation, emergency ignition, LED lighting, and mobile power supply. The Flash Charge is compact, powerful, and reliable, designed to handle the unexpected. Order now and never be stranded again.
Small business sentiment held relatively steady in June, according to the latest read from the NFIB. Small business optimism came in at 98.6, down just 0.2 percentage point month over month, and just 0.6% higher than the consumer average. For a closer look at the data, Bill Dunkelberg is joining us. He's NFIB chief economist. Bill, it's good to see you here. So, sort of big picture, what stands out to you in this data, considering that the headline number was not much change?
Well, there are a number of aspects. One is, I'm surprised the index was that good given the level of uncertainty. We have an uncertainty index that is very high, and it's around 90, and it averages 65 over the last 50 years. So uncertainty is very high, and yet optimism is hanging in there at our long-term average of 98. So I was happy to see that it didn't take a dive.
Why do you think that is?
Oh, that's a good question. One is that the sales haven't been too bad. Real sales have held up reasonably well. And so that's a good thing. One of the drivers of the index this month was an improvement in profitability. Well, there's nothing to make you happier than having profits going up. So that was certainly helpful on that side as well. Negative on the index was inventory imbalance, and I don't know how to interpret that these days, because with all of the changes going on with our trading partners, I don't know where we are on that, but it suggests that we're not ready to accumulate a lot more right now. And so that would be bad news, of course, for GDP growth, since inventory investment is often a large part of the growth picture, since it's very volatile.
Yeah, on the subject of tariffs, I want to play for you a clip of an interview that we did yesterday with Payoneer CEO John Kaplan. Now, this is a company that caters to small and mid-sized businesses globally, and they did some survey work on tariffs. So I want to listen to what he had to say, and then get your reaction.
34% of international SMBs very concerned.
Low tick alert minus 800.
6% of U.S. SMBs concerned. So it's interesting. The U.S. business owners more concerned about the tariff environment than the international entrepreneurs. Most U.S. SMBs don't export. International SMBs start exporting from day one.
And one of the things that John suggested is that maybe some of the international small businesses are changing where they export to, they're adapting to the tariffs. Were there any sort of tariff specific questions in the survey that you guys do, or how do you sort of read through the lines to see how businesses are thinking about it?
Yeah, well, we don't have any tariff specific questions yet, although we're probably doing special studies on that starting now. But it is true that virtually none of the small businesses in the U.S. that we check with, NFIB's got over 300,000 member firms, and we take random samples of them and ask these questions. Virtually 1 or 2% of the most export anything. However, on the importing side, everybody's importing stuff one way or another, indirectly or directly. So that'll be the key driver for what they sense about what's happening with all these changes.
Also, because I know that the assessment of labor quality in the survey was at 16%, which is unchanged. But are you getting the sense that these small businesses are hiring either because they're seeing demand, or they're finding enough quality people to hire? What's your sort of assessment there?
Well, we ask them every month about the quality of their applicants, and that's been the number one problem many times in the past. It's really the applicants are unqualified. So most recently, we found that about 80% of those who tried to hire or hired said that they had few or no qualified applicants for the positions that they had open. And we have a lot of open positions. Job openings are very high historically. We have a lot of reason to hire. Of course, they're especially high in construction and manufacturing and transportation. But we've got a lot of opportunities for somebody to go to work. But finding people who are qualified for
Bitcoin on the move, Bitcoin.
That they address reasonably well can speak.
raising our hedges to this rate.
Yeah, your comments remind me very much of what he was kind of talking about as well, these concerns about overvaluation. But that said, we've come roaring back from the lows. Does that give you any pause? The fact that some of these, the mega caps are performing the way that they are, the earnings momentum they have, I mean, it does seem based on real solid fundamentals. And even some of the smaller names you mentioned, these are hardly like beaten up left for dead small caps. I mean, we're talking about Palantir and Circle.
Yeah, no, fair points. What I'll say this is not 1999. I think the productivity boom ahead of us is underappreciated and will be gigantic. And those companies are squarely in the middle of it. That said, I do think that a lot of these companies in the market, broadly speaking, have gone to levels far above fair value. The market, as we see it, has increasingly become GameStopified. In the sense that the resilience of the retail cannot be discounted. I think fund managers have to reevaluate the way they think about the market, valuations, momentum, and we've been doing so. We've been adapting to that, and things can certainly break. But for the moment, we think that the secular areas that are showing strength should continue to remain, and we think large cap, broadly speaking, will perform worse relative to that group. But Amazon is one of the few within the mega cap space, to bring it full circle, that we continue to like.
All right, finally, then, is there anything that would change, what would change your mind about that in terms of thinking, this is not necessarily the best place to park capital?
Yeah, I mean, look, 25% of our ETF is hedged. We're effectively a net zero in our hedge funds in terms of net exposure. We've been systematically adding shorts. We think that a correction of 5 to 10% is not out of the question. We're at 22 times earnings. The S&P growth rate expectations for earnings are 13% in the back half of this year, which is more than double what is expected in the second quarter. Yields, as Barry said as well, going in the wrong direction. And we're not sure that the 3 rate cut estimate that the market's pricing in with the Fed fund futures may be right. What if it's 2 cuts or 1 cut? So you have negative surprise potential. We're just riding this momentum while we can, but we're ready to pivot in a much harder way. But certainly cognizant of all the risk factors in the market.
Yes, you do see, kind of concern about if inflation is stickier than we expect it to be. Just like Barry was saying. James, appreciate it. We'll leave it there for now. James Check with Clockwise Capital. And well, speaking of inflation, the president holding a cabinet meeting at the White House right now after announcing more than a dozen countries' imports are set to face higher tariffs on August 1st. Megan Casella is in Washington with the latest. And Megan, he's continuing to make some headlines on the tariff front. What can you tell us?
Absolutely, Kelly. A lot of talk about trade in this meeting, which has gone for over an hour now, meeting with his cabinet in there. The biggest news we've gotten so far on the trade front is the president appeared to announce a few minutes ago that he will be imposing a new 50% tariff on all imports of copper. Take a listen.
And so we're going to be announcing pharmaceuticals, chips, and various couple of other things, big ones. We did steel, as you know, they're 50%. We did aluminum, 50%. Lumber just came out. Fortunately, that's copper. Now we did cars. And now today we're doing copper. I believe the tariff on copper, we're going to make it 50%.
What he's doing there, Kelly, is he's going through all of those investigations that have been ongoing into sectoral tariffs, saying the 50% copper could be coming as soon as today. And he also said those pharmaceutical tariffs could be as high, he says, as 200% on all pharmaceutical imports. But he did say there would likely be a
and some of that recovery in the more midterm.
It is kind of concerning that we are stuck at this level here and that the recovery has not been as strong as some of these other big tech names. I mean, Apple is such an important part of our market here. It's concerning somewhat, but for now, we are still on the verge of making another push to the upside here. Linear regression line, our line of best fit here, matching up with this smaller volume node near about 210. We have a larger volume node just below here, so a supportive point potentially near about 200 or so based on that. But to the upside, the point of control, the heavy trading area is right around 229, which is quite close to our +1 standard deviation channel and these old highs. So quite a bit to consider in that area. And when we take a look at our 5-year chart here, just very quickly, for the most part, still trending downward though, still within this broader downward channel. We had this anomalous price activity during the tariffs, but you can see if you look back at 10 years, these old highs and these lows, that's where we held on pretty firmly during that news shock sequence here. So perhaps that's a key point to watch going forward if things do continue to deteriorate.
Yeah, it's been amazing to watch the overall market's participation in this rally, even with the exception of Apple, really. And I know they haven't seen all down days, but I do think this speaks to the lack of really upside that Apple's provided the market's overall just indices that it's in. So great point there and great takeaways from a technical perspective. Rick Ducat, our chart master. Now, as we do look to trade Apple for example purposes, Alex, I mean, this data also reports, I believe, the 31st of the month. So we have a bit of time there, but perhaps looking to lean into more of the same and more of this somewhat neutrality that Apple is seeing.
Yeah, maybe earnings will shake it out of this rut, but until then, maybe, again, spinning its tires just a little bit kind of in place. It does seem it has plenty of headwinds, as well as the fact that it is one of the biggest companies in the world, a big part of passive investors and portfolios that are doing index tracking type investments that maybe works as tailwind. So as a result, maybe it's a bit of a tug of war, and maybe this 210 level can act as a balance point. Gave it a little bit of cushion, looking at selling an iron condor. 200 has seemed to be sort of a support level that it's based out at several times over the past couple months. At the same time, it's been struggling to get through 220. So selling the 210, 220 strangle, buying $5 wide wings, looking for a $1.25 credit. Expiration stays ahead of earnings, Jenny. So you mentioned it's at the end of the month. This is the week prior to that. If you get a $1.25, the break even would be $198.75 on the downside and $221.25 on the upside. 3-to-1 risk reward. You risk $375, chance to make $125. So neutral, not the most fun trade. Sometimes you got to root for boring, but it's a relatively short-term trade. It just goes out to that July 25th.
Hey, neutral is still conviction, because obviously things can always change in Apple as rapidly as they've fallen. So it's still definitely taking conviction, just looking for, again, more boring, more of the same for shares. Now, we'll leave it there for our Chart Master segment. Coming up next, though, it's time to dive into the latest with CoreWeave. After shares quadrupled following their IPO, we're seeing some analysts now turn to the sidelines, especially following that deal yesterday, of course, to buy Core Scientific. So we'll discuss more coming up next.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. Market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz. Actually, it's something from Schwab. Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical
Schwab, a modern approach to wealth management.
Accelerate market knowledge.
shift your perspective into full real-time example trades, a full hour of trading. I'm Tom White. I'm Kevin Davis. Next we have Fast Market. Weekdays at noon on the spot.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk the latest with CoreWeave. As this name was very frequently discussed yesterday, of course, following the acquisition of Core Scientific. Lots of cores in both of these company names. But joining us now is Marley Caden, of course, contributor here at the network. So walk us through some of the pessimism we're seeing, unfortunately, from the sell side today, as two downgrades right now on CoreWeave for another day of pressure. Although yesterday actually closing off of mid-session lows by quite a bit.
Yeah, and pessimism probably isn't fair. There are downgrades. They did come with price target increases. So short-term pessimism, long-term optimism is sort of the story here. The pair of downgrades come from Mizuho and Stiefel. They both downgraded them. Stiefel last night, Mizuho this morning. Mizuho's note was a bit more detailed, so we'll cover them a bit more. But both say that they view shares as fairly valued right now. For Mizuho, they downgraded to neutral from outperform, but they raised their price target to $150. That's up from $70. So a pretty substantial mark. We're now more than 2x. Now, of course, that follows that Core Scientific pickup.
Netflix looking for the next leg higher. Netflix.
And that's coming from two significant players in the AI world. So the acquisition itself is being viewed positively, despite the red we saw from both companies yesterday and these downgrades. It's just in the short term, there are some potential issues. So Mizuho does say they view it positively. They note that CoreWeave will allow them to verticalize the infrastructure supply chain while driving significant cost synergies and enabling more financial flexibility. But they do consider the risk-reward profile as balanced right now because they have a 300% stock price increase since the IPO. So just the last 3 months. So, they're pretty high up there right now. They also said that the price target increase reflects a recent appreciation in comparable company multiples, but also the growing demand for AI structure, which we continue to get more data on. And what Mizuho describes as, quote, a means of efficiently acquiring additional capacity at scale. So I know we talked about this a bit yesterday, Jenny, on the show, but they're going to have a lot more capacity at this point with this acquisition. So long-term positive, short-term some issues. Stiefel did cite those near-term issues more prevalently. They did their downgrade from buy to hold. They cited near-term challenges despite recognizing those potential long-term benefits. They raised their price target from $75 up to $115. And they did say the repositioning of the company as a vertical data center provider does change their valuation structure. Adding they do think they're fairly valued, but short-term there are some potential issues. Macquarie and Barclays have not changed their ratings. Macquarie has a neutral rating, $65 price target. Barclays equal rate with $100 price target. So pretty wide swing right now from the analysts.
Yeah, that Barclays note obviously kind of reflects consensus.
Tesla fading.
Majority of the analysts, 73% of those who cover it. And the average price target of the 19 or so compiled by Bloomberg is right at $100 a share, which is their price target. But I think Greg Moskowitz of Mizuho really highlighted what I think makes this so difficult. I do not, and we were talking about this with Circle earlier. We're talking about a growth stock, not a lot of trading history that moves around a lot in the near term. He highlights this, said, hey, this is a highly volatile stock. It's going to have risks to the upside. It's going to have risks to the downsides. But they're trying to figure out what is it worth and where will it maybe be trading a year and a half, 2 years from now, a year from now. And as traders and as market commentators, we get stuck in today. And today the stock's at 150, and we're hearing you just moved your price target up to 150, and we're there now. Moving it to like 120, and it's like these are both neutral strategies. These are both neutral, but it just reflects how volatile the stock is.
And it's interesting too. You're talking about the valuation. It's so hard to value. It's only been public for 3 months. They've had 300% growth in that time. It's very hard when watching the stock price to have any idea. But right now, they're trading at significant premium multiples. They have an EV/EBITDA ratio of more than 58 times. So not an easy task for these analysts trying to figure out how to price out this company and this stock. But I guess the overall message is some potential short-term issues. We could see some volatility in the price, but long-term, across the board, everyone seems to view this as a positive acquisition.
especially because right now, if you look at the revenue, it's heavily concentrated. They have about 72% of their sales derived from Microsoft alone in the most recent March quarter, which is wild in itself. So, well, it does optimize work. And I mean, Microsoft is not a bad partner to have. It also then tells you diversification is going to be critical here as we move forward and see a more hopefully signs of mature company as it does expand its life here and continue to trade with more duration than just 3 months. So with all that being said, now as we do look to trade the thing, the difficult job of sort of gauging then some of this volatility, I mean, it has had a pretty brutal week now just over the last 2 sessions.
Yeah, I think there's one last thing to highlight too. This hasn't been public that long, and there's a lot of people in investment banking where we make a lot of money to make sure 300% returns post they go in public doesn't happen every month, because that essentially means all those insiders and those who are in the private investment space just sold their shares pretty early to allow for this to go public, and so they want to value it as close to market value as they can. And so it goes to show just how momentum driven the stocks become. All that said, I hear the analyst calls. I see, maybe what those road shows value the stock at. It's a momentum stock. This is FOMO. We're looking at an upside play here for this particular example trade. It's a call calendar spread. Most importantly, it's risk defined. And you think the stock has another run, maybe back to those highs, or at least on its way up to those highs, and it stops at 170. This one would have a chance to make some money. Looking at selling the July 18th 170 call, buying the August 8th. So it gives you about a month's worth of time for that long option, and about 10 days or so to that short option. The idea here is looking to reduce the debit overall down to 250. Means your total risk on this trade as is $250, but it gives you that upside exposure, Jenny, where that mountaintop risk profile peaks out of the strike. It's customizable. But if this stock is at 155 now and it starts running its way to 180, 185 again over the next couple of weeks, along the way, it's potentially see 170, it maybe give a trader an opportunity to manage this position if they so chose. But most importantly, if it never goes to that, it just goes straight down to 100, like some of these analysts think, or even lower, your risk going in. It's going to be limited to that $2.50 debit per spread for $250.
Which I think is so important. This name, as we've all discussed, I mean, not one that is bold. Part of looking at example trade. We'll leave it there, though. Appreciate that, Marley Keaton, of course, for all of that insight. And now, coming up next, though, we will stick with
Market's really quiet right now. Not much volume, just momentum traders. We need to see institutions step up.
Continuing to make actually a pretty decent session today. NVIDIA up about 0.8%.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with the education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network. Welcome back to Next Gen Investing. It's now time to talk some of the Mag 7 news. We'll start off with, unfortunately, one that's underperforming the rest, and that is Tesla. Although today actually performing the rest. So just goes to show any given trading session could effectively
Regeneron. Regeneron.
He is stressing because he was a huge enthusiast behind Musk leaving Doge, of course, a few months ago.
Yeah, Elon Musk already responded on Twitter. This is a quote. Shut up, Dan. Dan has actually retweeted this. for a Tesla XAI merger. And he said it would be designed to keep Musk as CEO through at least 2030. So he doesn't believe in Musk's leadership. The second recommendation he has guardrails on the time commitment to Tesla. He thinks that Musk's compensation should include time allocation requirements to Tesla. That's been one of the concerns that's been hovering around Tesla and why Tesla faced some pressure for a chunk of this year because of Elon Musk's ties to the Trump administration, working on Tues, et cetera. His side project, if you will, side hustle, if you will. Establish expectations and accountability to reassure shareholders is underneath that second point. The third point he mentions is just oversight on Musk's political activity. He thinks they should form a special oversight committee to monitor and
All right, so it was an enjoyable lunch. Some sliced steak. All right, just watching the New York Fangs. It doesn't appear there is a lot of interest at the moment. We'll have to wait for institutions to come in. That usually happens after 1:45, 2 o'clock, 2:15. All right, so we're looking for institutional volume. Futures were higher this morning at about 5 o'clock in the morning. We're up at plus 20. We're currently down 5, down 6. All right, so we're red by 6 at the moment. Looking for a rally. We've been trying to get back and stay above these levels. S&P. Been trying to stay up here near 6240 or so. We're just in a sideways range, basically ping-ponging around. S&P not doing much. The Qs choppy. IWM making some progress. IWM. We have buy order blocks continue. You can see these buy order blocks continue. Pre-market, after the open, midday, mid-morning, at around 11 o'clock, we got 11:30, we got another buy order. Looking for this to continue. Russell, most heavily short it's been in years, from what I understand. All right, watching Netflix. Like to see Netflix go here. Okay, Netflix is about to go. Looks like it wants to go. Squeeze, 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 squeeze. Watch for cyan bars to start showing up again. On the 5-minute, you can see it right there. Okay, squeeze, 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 squeeze. Okay, the daily. Okay, watching that as well. Daily. Oh gosh, listen to you two. Jeez. Okay, watching Netflix here for a pop.
Thank you so much. Mark's going to stick with us. Gil, always great.
Netflix looking for a pop here, coming off the 20-day moving average. We came right down to the 20-day. Buyers stepped up. It got a downgrade. I have a feeling the downgrade was to get prices a little bit lower. So institutions that were looking to buy could get in at a lower price.
Reportedly coaching a key Apple AI researcher for tens of millions.
Okay, trying to get the squeeze, the trigger. Netflix. Volume is much lower than it was on this drop this morning. On the buying, on the move higher, the volume picked up. Okay, we're watching that. Let's go look at hedging flows on Netflix. Hedging flows tweaking higher with price. Excuse me. Okay, watching NVIDIA too, looking for NVIDIA to pop. Looking for NVIDIA to pop up a little bit more.
And now the latest is from Apple, a name that most people outside the model community they haven't heard of, but a source tells me was probably the top guy at Apple. Now Zuckerberg, as Kelly said, reportedly paid tens of millions of dollars for him, not hundreds like for some other recent recruits. But
NVIDIA.
altogether, Zuckerberg's hiring spree has encompassed researchers, operators, founders, PhDs, and some of the new hires are now outranking some of the most decorated names in AI.
Okay, Netflix watching for hedging flows to tick higher.
Is this the beginning of a coherent strategy, or is it second system effect? That's a pattern where after a successful first build,
Netflix.
overreach on the next.
All right, if this starts to turn down and prices start to move higher, that'll be indicating some profit taking.
Meta was, developed and was open source. So the numbers for investors, they're certainly adding up. It's spending more in capex as a percentage.
Bitcoin with a higher low printing right here. Bitcoin still trading at 108, right below 109, 109, 109, 109. I think of Snowflake turning up. Snowflake looks like it might get going. Okay. Tesla dipped a little bit, maybe taking out some stops underneath, filling some fair value gap below.
Way more expensive than that. Plus, this has the added benefit of undermining all of these competitors. Look at Apple, right? We constantly bemoaning what's happening or not happening on the AI front, and here comes their big person over to Meta. Right, and for Apple, right, this is way more consequential because it doesn't have the same kind of bench that OpenAI or Google or Amazon.
Okay, NVIDIA's starting to move. Watch NVIDIA. NVIDIA getting jiggy.
He came from Google. He is legit. He may not be a superstar at the level of an Alexander Wang or an Ilya Sutskever, but still, he was a really important researcher that Apple had on its team.
Okay, there goes NVIDIA starting to move. All right, so maybe we get something going end of day. All right, so Microsoft doing the same, trying to tick higher. There goes NVIDIA. Okay, let's get going there, NVIDIA.
Coming up, shares of Uber hit a record high just yesterday, and Bank of America is staying bullish, thanks in part to the One Big Beautiful Bill Act.
Netflix starting to tick up. Okay, you can see the hedge flows are starting to turn up on Netflix. Netflix is responding. Netflix is starting to respond. We got a cyan bar on TTM on the 5-minute. Watching the daily, we bounced off the 20-day. NVIDIA also bouncing. NVIDIA looking pretty strong here. Okay, NVIDIA is taking out the highs. NVIDIA, there goes NVIDIA. Trying to take out the high right here, NVIDIA. If we can run up to 160 would be good. 160, 161, 162. Maybe take out yesterday's high. NVIDIA. Okay, NVIDIA, Uber. Thank you, David. Thank you. NVIDIA going. Okay, NVIDIA. Let's go. LETSGO. Let's go take a look at NVIDIA's hedging flow. Okay, let's look at NVIDIA's hedging flow. NVIDIA, we want to see this up and to the right. The hedging flows, the blue line. You can see the blue line on NVIDIA. All right, blue line, NVIDIA. Been rising all day. All right, so although volume is a little bit slow, momentum is slow. We're looking for a follow through into. Get over there, you. Okay. Looking for a follow through. Do, 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 do. NVIDIA, there goes NVIDIA. Okay. Giddy up, let's go.
Welcome back. 3 Republican senators have introduced legislation that would make it easier for companies to offer gig workers benefits like health care. Let's get to Emily Wilkins with that story. I forgot that Congress has like a lot of other things it might be trying to do now, Emily.
I know, Kelly. It's like we were finally coming out of the cloud of the mega bill, and it's like, okay, there's actually other stuff Republicans want to get done when they have a trifecta. And this is one of them. So, look, you got a bunch of companies out there with gig workers, like your DoorDashes, your Ubers, your Lyft, and they want to up their bids to get some of these gig workers to work for them. And they're seeking to offer what's being called these portable benefits. Basically, these companies would contribute part of a contractor's pay to a savings account that they could then use for various things. But all those companies, they're worried that with those benefits could come a challenge to whether their workers are contractors or employees. So we're seeing a new effort. Senators Bill Cassidy, Tim Scott, Rand Paul, they're introducing a package of bills that they say creates a safe harbor for these companies by updating
All right, there goes NVIDIA.
to allow gig workers to get certain benefits while keeping their independent contractor status. Now, DoorDash's head of global public
All right, looking good.
that an increasing number of gig workers means that it's
NVIDIA.
time for the federal government to update their labor laws.
An important policy innovation that ideally would happen at the federal level is a piece of legislation that would say, hey, you're not going to be penalized. If you are being responsive to workers on your platform, you are giving them access to benefits that they need, we're not going to hold that against you.
Some of these companies, including DoorDash, have actually had some pilot programs in various parts of the country. And one DoorDash program in Pennsylvania found that a third of Dashers who got those portable benefits used them to take more time off. Another 20% used them for emergencies. Dashers earned roughly about $400 over a year through the program. And look, right now there aren't any Democrats that are backing the bills, but the senators are pointing out that they hope to get some on board, noting that several Democratic governors have either signed laws or pilot programs for portable benefits in their states. And so, Kelly, now, of course, that mega bill's done, turn our attention to certain things like this and see if there are able to get some of that support.
I'm trying to think of what the downsides would be, but it seems to really make a lot of sense. Emily, thanks. Emily Wilkins. Let's turn to the latest piece of legislation that could also have a big impact on the gig companies. Bank of America upping its price target on Uber today, not just on.
There goes NVIDIA. Okay, big move on NVIDIA. Woohoo! There we go, NVIDIA. Thank you.
Justin Post is BofA's internet analyst. Justin, I love as the dust settles figuring out how to connect some of these dots. So what do you expect will happen to Uber here? Welcome.
Sure, great. Thanks for having me. So basically, it's a pay bump for drivers. We think driver earnings on Uber can increase by about $1 billion by not having to pay taxes on their earnings. So, and in fact, it could add to some driver supply and make Uber's operations a little bit better. So net, it's a benefit for drivers and also for Uber's network.
Do you think it will affect the way that people pay their drivers? Will there be any
Excuse me.
sort of like, maybe Uber cuts prices, but then you tip a little bit more, stuff like that, or no?
Yeah, I think Uber is probably going to let this just pass through to drivers and be a nice benefit for them. I don't think they'll try to cut driver pay or anything like that, but it will make the job more attractive, and that certainly can improve driver supply conditions and make the service levels better. And I think that's how they would view this opportunity.
I have to imagine the same would be true if these portable benefits gain momentum, as Emily was just detailing, right? I mean, that would also make people, I assume, more likely to want to do the job. For the gig.
Certainly, Uber has signed agreements in several states for independent contractor benefits, and I think they would really like the certainty of this legislation, and certainly it would make the job more attractive for people and kind of get a regulatory overhang further removed. It's already been partially removed in the stock, but further removed and really drive some certainty in driver pay and certainly make the job more attractive for some drivers.
Okay, I think 14% of their earnings. That's how you can kind of get to that $1 billion in savings, equivalent to like a 2.5% pay bump. So it is significant. Would Uber potentially have to do more in the long run to keep drivers on the platform, or do you think these moves would do that. I mean, look at there's 45 buys in the stock, 12 hold, 0 sells. The stock is at an all-time high. So a lot of things are working in its favor right now.
Yeah, certainly the AV overhang and the progress in the AV industry has been a big positive. So the demand signals look really good for Uber right now. We expect strong delivery results for 2Q. So a lot of things going well for the stock. We think it's definitely a long-term beneficiary of AVs. That'll lower the cost of rides and increase demand. And I certainly think drivers will also be around for 10 plus years. And it'll be a nice hybrid model. We have AVs and drivers filling in during peak periods.
Okay, we got buy order blocks, second buy order block on NVIDIA.
Waymo is rolling out to more cities. We think Uber has an opportunity to expand their partnership with Uber, with Waymo and Uber. So expect more things to come on that partnership front. And some of these markets, I think you will see Waymo EVs on the Uber network.
Does Uber benefit financially from this right now? Do we know?
Right now, the take rates are not disclosed. We would assume they're lower than their current model, but I certainly think the model will evolve and those take rates could go up as the cost of the vehicles come down. So that's an impediment to more rapid rollout today. But over time, as those vehicle costs come down, I think it could lower the cost of Uber service and drive more demand.
Okay, so we got buy order blocks on NVIDIA. Big volume coming in. Big pop on NVIDIA. Looks good.
Appreciate your time. Justin with Bank of America. That's it for us. Thanks for watching The Exchange. And Dom Chu is in for Power Lunch. We should also be joined by the Commerce Secretary, Howard Lutnick.
All right, nice little move there. Okay, NVIDIA, nice move so far. Okay, Netflix looking for the push higher. A little shakeout on Tesla looks like. We'd like to see that push a bit higher. Meta's pushing higher as well. Meta pushing higher as well. Okay, looking good. NVIDIA, nice move on NVIDIA. That was a good one there. Pop, nice pop on NVIDIA. NVIDIA, speedy Gonzalez, follow through. Okay, looks good. Looks good. Okay, top 10 on the NASDAQ 100 continue. Regeneron, Synopsys, ASML Semiconductors. They produce the machines to make the semiconductors. CLAC, KLAC, Tesla, number 6. Tesla, number 5 now. Vertex, number 6. Vertex Pharmaceuticals, FANG, Diamondback Energy, number 7. NXPI Semi, number 8. Micron, number 9. And Analog Devices, ADI, number 10. Continuing down the list, Adobe, Applied Materials, Amgen, Biogen, Texas Instruments, AMD, in descending order, Cadence Design, Old Dominion Freight, CDW Hardware Software. They're an online source for buying hardware software. At least that's what they were in the beginning, back in the day. I don't know what they do now. I think they're still doing the same thing. On Semiconductor, Microchip, MicroStrategy. Ooh, what else? Global Foundries. Is that Global Foundries? Yeah, Global Foundries. Sometimes I can't see with my eyesight. GFS versus GPS, Gap Stores. M-Chip, Microchip, following through. Palo Alto Network, all of these in descending order. All of these are up on the day. Palo Alto, ANSYS, ARM Holdings, Team, Atlassian, Meta, NVIDIA jockeying for number 25 and 30, 25, 26. NVIDIA, Qualcomm, all these looking really good. Okay, there goes NVIDIA ripping higher now.
Mr. Secretary, thank you so much for taking the time to join us.
We saw a lot of the conversation that happened within that room, but we want to hear for the record from you, the Commerce Secretary, about just where you think we are with regard to trade negotiations as a whole as we approach that previously stated July 9th deadline for tariff deals.
So you saw 14 letters went out yesterday.
Broadcom turning back up. All right, let's see if we can get Tesla back above 303. 303.50 would be good.
Setting down tariff lines for the key driving countries. And then we'll set out a general letter to the balance, sort of setting out where they're going to be. The president is setting these tariff lines. The president is driving this agenda. This is his agenda. He knows how he wants to play it, and that's what's happening. So we'll be setting those tariff rates, and then they go into effect on August 1st.
Mr. Secretary, the president may be driving the entire negotiation and conversation, but that doesn't mean that folks like you and Treasury Secretary Scott Bessent aren't out there trying to execute the plans along with U.S. Trade Representative Jameson Greer. What do you get as a sense for how these negotiations are going with these multiple parties? Do we feel as though there's going to be a more long, drawn-out, contentious conversation, or do we feel like we're in the 7th, 8th, or even 9th inning?
Okay, NVIDIA, nice pop there. Nice volume. Looking good.
What's happened is many of these countries have made us offers to finally open their markets. You know, they go slowly, they go with it, and then finally they come to the table at the very end and they start to open their market. And the key is the president wants to balance our trade deficit with the fact that these countries are finally opening their market. You have something like Vietnam where they say, okay, we'll really open our market. Then the president decides, okay, this is the rate we'll do. If you're really going to open your market to our farmers, to our fishermen, to our machines, to our tools, to all of these things going into their country, then okay. If you're going to give our people that opportunity, I'm willing.
SBET is on the move. SBET, SBET. I see Joe K has been talking SBET, SBET. Some of in the room have been mentioning it as well.
We've got these huge trade deficits. It's time for you to pay the tariff to trade with the United States of America. Unless you're really going to open, that's how it's going to be.
And it's Kelly, Mr. Secretary, and I snapped to attention when I heard the president saying 50% tariffs on copper, 200% potentially on pharmaceuticals. We understand it, so the Commerce Department looks through all those sectors, right, and make your recommendation. How close to final would you say the recommendations in those two sectors are at this point for 50 and up potentially 200%?
So copper is finished. We're done with our study. We've handed the study over to the president. The president knows that he has the ability, since we've studied the market for copper, to set tariff for copper. He announced it today at the cabinet meeting that he intends to go to 50%, which will be similar to steel and aluminum, which are both 50%. So copper will be 50%. And the idea is to bring copper home, bring copper production home, bring the ability to make copper, which is key to the industrial sector, back home to America. We need that kind of production in America. It's important. So that'll be out today. You'll see the president will truth about it this afternoon. We'll sign a proclamation as that goes through the ordinary legal process within a day or 2 days. That will come out, but then copper will be set, likely to be put into place the end of July, maybe August 1st. So that's copper. With pharmaceuticals and semiconductors, those studies are being completed at the end of the month. And so the president will then set his policies then, and I'm going to let him wait to decide how he's going to do it. He said if you don't build in America, they're going to
Okay, Apple turning back up too. So is Microsoft. All the New York fangs looking much better. Google's the only one that's kind of dragging its feet. Amazon's trying to get something going. I guess Google's trying to get going too. There goes Tesla. Got another green candle. All right, so on that dip, Tesla. On that dip, okay, that's what Tesla looked like. Tesla.
Your remit, figuring out that trade relationship. I'm left a little bit confused confused as to whether we have reached a trade deal or not. I think the president made some remarks in that direction in the past couple of weeks, but it was unclear what ended up happening. So with rare earths as well, there still seems to be a little bit of confusion on whether those rare earth magnets are coming in kind of decent amounts and everything there. Can you just bring us up to speed? What is the trade situation, and is that an open or closed negotiation at this point?
Okay, so we are settled with a 30% increased tariff. And then during President Trump's first term, he had a 25% tariff. So on much of China, they're paying 55%. And on the balance, they're paying 30%. And that's where we've settled things for the time being. Now, they've agreed to approve our licenses on rare earth magnets. And to their credit, they've been doing it swiftly and expeditiously. We decided we were
All right. All right. Apple turning back up. Apple might be a good trade there. Tesla.
Software products to them and airplane parts and things like that we're sort of balancing our relationship between the two of us. We're in a pretty good place now. I think we're going to meet in early August, and we're going to start kicking off a bigger trade conversation between the two largest economies in the world, China and the United States of America. So that's going to be kicked off in early August with myself, Secretary Desson, and Ambassador Greer. We'll all be going together. We'll be meeting counterparts from China, and we'll have a bigger start the process and the bigger conversation. I think that's going to take some time, but at least we're beginning the process of having a bigger conversation.
There's also, Mr. Secretary, more of a conversation now built around the European Union. Our own Silvia Amaro out in Europe was speaking to some of the top diplomats out there, and she had made at least reference to this idea that they are saying progress is being made, that there's still a ways to go, but that there might actually be carve-outs or certain concessions there as you work towards an overarching trade deal with the European Union. Can you take us through how you feel those negotiations are going right now? It is a massively significant trade relationship. We're talking not just about beverage alcohol and airplane and auto parts, but also many different goods that go between our countries and the bloc over there across the Atlantic.
So Europe is our biggest trading partner, and we have a $235 billion trade deficit, meaning they sell us more than we sell them. And that's because they block us on cars and they block us, they don't pay for pharmaceuticals, all those topics we need to settle. And it wasn't going anywhere for a while. The president then put out a truth that said, look, if you're not going anywhere, you can pay us 50%. Their leaders called President Trump and said, no, we'll get down to brass tacks and do it. And then they started making us real offers. The European Union, to their credit, has now made significant real offers, meaning we're going to take down our barriers. We're going to open our markets to American farmers, ranchers, fishermen, really open their markets and let Americans finally, American entrepreneurial spirit, finally get to sell to Europe. The president's got those deals on his desk, and he's thinking about how he wants to play them. And this is very tricky because they have a huge trade deficit, so they've got to pay, but they're really going to bat, trying to say, look, we want to open our markets to you. We want to create a more balanced and fair relationship. Please, Mr. President, think about it. And that's what's on his desk right now. And that's really, really tricky, but he's thinking about it.
Lastly, we've had a couple of people point out, as we put these tariff levels back on, should the markets be reacting the way they were on April 2nd? And maybe there will be a delayed reaction, or maybe it's, you know what I mean? Can you kind of wear a little bit of both of your hats here, both as a market maker and also as somebody working on optimal policy, theoretically? Do you expect any more weakness as we churn through the effect of what these higher tariffs now will be? And it's odd that we had a huge panic, a couple months ago, and now we seem to be taking this in stride.
Well, I think the market should be taking.
All right, looking for our markets to continue higher. Okay, a little pop there on NVIDIA. Now it's starting to look for a higher low. Tesla trying to go now. Tesla's trying to go next. Skier was right when he mentioned that you got to be quick to take profits. It just seems like the markets have these nice spurts, and you capitalize on the push higher. This little dip came back down. Okay, this dip right here came down to this fair value gap, okay, which is good. So that makes sense why it would do that. So we're watching how this goes. We got a buy order block right there, which is good. Okay. And now Tesla's starting to go. Tesla's starting to go.
He said, if you change the way you treat America, we'll listen and we'll think about it. I think what you're going to see is rates will be a little lower than they were on April 2nd because these countries are opening their markets. And then some countries will come forward with such good deals that they'll literally change their rate. But that's what we're doing every day. We're talking about the offers. We have piles of offers in his office on Monday. Piles of offers saying, what do you think of this offer? What do you think of that offer? What do you think of this offer? And the president's deciding what the rate is because he's called it dead right up until now. And I think he's got the bull by the horns, and America's going to be so much better off, hundreds and hundreds of billions of dollars better off per year. So if you wanted to bet on anything, you bet on President Trump and you bet on America.
And we'll see if the market continues to agree with that, as we get closer to August 1 and beyond. Secretary Lutnick, thanks for making the time and joining us after that meeting today. We appreciate it.
All right. Well, the president was making a wide array of comments on other things on tariffs in that cabinet meeting as well. So let's bring in our Megan Casella in our Washington bureau to outline some of the broad strokes and even details in what happened during that big cabinet meeting televised for the entire country and world, Megan.
A whole lot of news in there, Dom. It was well over an hour, close to 2 hours, that the president was in there with his cabinet and talking primarily, I would say, about trade, or at least making a lot of news on it. So a big day for trade news. Not only are those country-specific tariffs now postponed to the end of the month, but of course the sectoral tariffs that Secretary Lutnick just spoke about moving forward clearly, at least on copper and pharmaceuticals. The president said in that meeting that a flurry of deals will be coming in the next 24 hours. But he said, I want to be clear, a letter means a deal. He spoke about how you can't meet with all 200 countries. So they're sending these letters out, Secretary Lutnick saying 15 to 20 more in addition to the 14 sent yesterday, coming today, where they'll lay out the rate that countries will have to pay unless they lower their tariffs between now and August 1st. President Trump also being very firm today on the August 1st deadline, saying he will not be moving that again. That's the deadline for the country-specific tariffs to kick in. First, it was April 9th, then it was July 9th. Now it's August 1st, and he says he will not move it any further than that. He also spoke specifically about the European Union, saying they've been the toughest to deal with. They're so tough on our companies. He named Apple and Google. So he says he's about 2 days out from sending the EU a letter. And on China, he says he's had a great relationship with them recently, that China's been very honest on the trade deal. And you just heard Lutnick announce that trip to China, kicking off new dialogue in early August alongside Secretaries Bessent and the Trade Representative Greer. So more to watch.
Okay, Tesla going.
The president did sort of reiterate the threat we heard earlier this week about an extra 10% tariff for BRICS countries. He was asked about that, and he said, yes, that will be coming pretty soon. So nothing set in stone there. We have to see an executive order, but he says he's serious about it. Guys.
All right, Megan Casella with the latest on the president's cabinet meeting. Thank you very much for that. We've got lots more to come here on the show. First, it's Amazon in its prime. Get it? We're going to speak to an analyst who is super bullish. Plus, NVIDIA's.
All right, Tesla. Do we have more Tesla? Yeah, we bought more Tesla. Good. Okay. Cool. Tesla. We bought more Tesla. A little closer to the money. And those are, yeah, for the 18th. Okay, so Tesla, I bought more at 312.50. Okay. Okay, Tesla. Okay, Tesla pushing a bit more. Trying to get back up to the high of the day. Tesla. All right, so let's get some follow through. It's 216 on the East Coast, 216. A lot of times this time of day, we see institutions come in and show their hand. If they're interested in buying, we'll see them show up. It's not across the board, everything. It's just that we look for stocks that are showing signs of some buying. NVIDIA Coming back down to earth here, a little profit taking on that rip. So day traders quick to take profits. Okay, Tesla looking for the follow through now. Tesla looking for the follow through. Mm-hmm. Mm-hmm. Okay, Tesla, nice little pop. Trying to get back up to the high today, 304. We hit 304. See if we can get through that and get shorts to cover Broadcom. Didn't follow through. Broadcom, a little profit taking back down to 273. 77 at the moment. Snowflake turning back up. Meta's trying to make higher lows and higher highs. Trying to make a higher low right now. Tesla trying to make a higher high. Trying to take out the morning high. Okay. Candle 3. Candle 2. Candle 1.
All right, welcome back to Power Lunch. Turning back to the markets now, which are mixed as investors react to those fresh headlines coming from the White House on tariffs in spite of the uncertainty. A pair of well-known Wall Street strategists are striking more of a bullish tone. Bank of America's Savita Subramanian raising her year-end S&P 500 target price to 6,300 from the prior 5,600. And then Goldman's David Kostin raising his target to 6,600 from a prior 6,100. Our next guest is also in that more bullish camp. She's calling for the S&P 500 to end the year at a whopping 7,000. Marianne Bartels is Chief Investment Strategist at Sanctuary Wealth, a woman who has been assigning target prices to the S&P 500 for a number of years now. So, Marianne, thanks for being with us. Can you please take us through what exactly in your models and assumptions is driving a 7,000 price target for the S&P 500 by the end of the year?
Well, really what's driving this is not new. It's really the technology of AI that we've been talking about, blockchain, robotics, crypto, Web3. This is the
Okay, Tesla going here, Tesla.
innovation of our lifetime. It's like the internet on
Okay,
steroids.
July
And we think this is going
2006.
to drive corporate profits. Now we're
Year.
going into second quarter earnings.
5,
Expectations are pretty low,
2026.
so we think expectations
Okay.
come in much higher. We think corporate earnings are going to be stronger than what the market is actually looking for, and that can actually boost stock prices. We're well aware that the valuations are high, but if our analysis on earnings is correct, maybe the market is not as expensive as people anticipate. In addition to that, we've seen interest rates come down. We think the trend in interest rates will continue to come down. We think the Fed will eventually be able to lower interest rates, and that could also boost the markets. And the other thing is that the sentiment of the market is still very bearish. As you can see, people are still raising their numbers. There's still some skepticism. So that also makes us bullish on the equity market.
Marianne, is when you refer to the idea that growth is out there and that technology advancements, AI will drive corporate profitability, is it going to drive corporate profitability across, say, the entire S&P 500, mid caps, and Russell 2000, or is it going to drive profitability for, say, 10 or 15 tech, media, and telecom companies that will then make up the entire move?
Well, when I look at the secular trends, the secular trend is really biased towards mega cap. There might be select companies in the mid to small cap, but they're not in a big bull market at this time. So we believe it's going to stay in the mega caps, but you're seeing some
All right, Tesla. All right, nice little pop on Tesla.
makes this very bullish. You need a good, healthy, stable financial system. You recently saw the stress test come in favorably, and many of the large banks raised their dividends. And you're seeing industrials do extraordinarily well this year. Again, the infrastructure play of all of this AI. So it's broader than people actually realize, but I do believe
Tesla.
it's going to stay mega cap.
Marianne, can you give us any more kind of? We had Barry Bannister last hour. He was bearish. He thinks inflation and kind of constrain the Fed here. That's not really being priced in right now. Other guests made similar comments. How would you address those concerns? And also the concerns. Another issue raised was that earnings estimates for Q4 are like twice what they are for the more upcoming.
Okay, Tesla looking for more upside.
Too high? Could inflation constrain the Fed on the rate?
Snowflake.
What about those worries?
All right, Nvidia coming right back down. Nvidia.
No impact from tariffs. They're already anticipating a modest impact of an uptick around 3% in the core PCE. We don't think that derails the equity market, but certainly pauses the Fed. In terms of
All right, Tesla. Let's go some more.
Profitability and productivity enhancements from all of this new technology is really not priced into the market. So we think maybe the earnings numbers are a little bit off. We think earnings can come in much more powerful than the market is anticipating. At least that's the bet that we're making.
All right, and Marianne, before we let you go, you're in a position now where you can actually look at some of the individual industry groups and even companies that you think are the best ideas. What do you?
All right, that's me taking a little profits on Tesla on the half that I had left over from this morning. Tesla. I have some July 25th calls now, the 312.50 for July 20, the 18th, sorry, July 18th. Another week beyond. All right, so looking for Tesla to continue. Okay, Meta just sitting here doing nothing. Nvidia pulled back a bit. Snowflake turning up. Broadcom pulling back. All right, it's 2:24 on the East Coast. Looking for more signals from institutions. 2:24 p.m.
$4 trillion watch for Nvidia, believe it or not, after the rally it's had. In order to surpass that and break Apple's previous closing record, Nvidia had to hit or close at $160.47, and we are close, friends, about $1 away. We'll also dive into the outlook for the tech space in the back end of May.
Webcasts, articles, courses, and more. All crafted just for traders. And with
that you hear about that people like getting into? Is it gold? I mean, is crypto's kind of a hedge sometimes?
They used to say it was a non-correlated asset. I don't believe that. Or look at the stock market and look at crypto right now. Kind of march to the same beat, and that beat is risk on, right? But what does well? Well, sometimes short-term treasuries do well. We saw a big move to that trade earlier this year during a lot of tariff madness. So a lot of people moving into the short-term paper. That makes a lot of sense. But also utilities do really well in an environment like that. They kick off nice dividends. We always pay our utility bill, right, every single month. So you saw that doing well, and staples did well. Now you're seeing the reverse of that, right? Now you're seeing aggressive growth do pretty well again. Momentum do very well again. Cryptocurrency doing pretty well again. So anytime you see fear, you see the safety trade back on, and gold has been a big part of that. There were multiple record highs for gold going into just this month.
I want to switch gears to a segment that we like to call Lost in Translation, where we get our guests' takes on what the market might be misunderstanding, and something that you find people are not quite getting right is tokenization. So talk us a little bit about that.
Yeah, tokenization is happening across the capital markets. And what do I mean by that? Well, in cryptocurrency, lingua franca, tokenization basically is creating proxies for actual assets in cryptocurrency or in crypto tokens. So last week we saw an announcement.
Okay, looking for Tesla to make another punch to the highs. Okay, so we got some buyers here. Okay, we got buyers. Let's go to the 1 minute chart. Okay, 1 minute chart.
If you listen to my good friend Rick Edelman,
Okay.
Truth About the Future, you know that all companies are moving towards tokenization in their physical assets. So soon, when we get 24/7 round the clock stock trading, it'll be based on the tokens of these stocks.
Okay, we got buy order blocks.
The proxies for these, and all that will happen on the blockchain. So
Okay, the second buy order block here,
shares of your favorite company, you will have tokens that represent
with
the
greater
shares of your
volume.
favorite companies.
Okay, so that last move was pretty pronounced. All right, we were looking for that breakout. We got it.
All these announcements about
Tesla.
Bitcoin adoption, allowing stable coins, the Stable Act, allowing stable coins into our banking system, that paves the way.
Bitcoin at the highs, coming back in again. Bitcoin's just been jockeying around for the last few weeks. Below that 110, 112 zone.
Right, and NFTs, because there was really nothing beyond that. You know, if you bought a work of art, you didn't even have the rights to display it necessarily. You basically own the rights, but the rights are not as important as having something that can be transferred into fiat currency.
All right, Tesla turning back up.
Especially with Bitcoin, but other cryptocurrency holdings, we're seeing lending institutions that I'm talking about, established lending institutions, allowing you to borrow against your crypto holdings, right? You can now borrow to buy a house against your Bitcoin holdings if you didn't have basically good credit necessarily, or you didn't have other means to raise the cash that you got into Bitcoin 10 years ago, and you're sitting on a few $1 million. You can borrow against it for fiat currency, put a down payment on a house, or even buy a house outright. So it's in our system right now. Tokenization is just the next step where all of a sudden nothing's quite real anymore. We're just trading the token manifestations of our favorite asset class.
All right, the token manifestation. Good to know here. Caleb, thank you so much for joining us. And we're winding things down here at Stocks and Translation. But make sure to check out other episodes of our show on the Yahoo Finance site and mobile app. We're also on all of your favorite podcast platforms. So be sure to like, leave a comment, and subscribe wherever you get your podcasts.
All right, Bollinger Bands are coming together. That's telling you, look for a squeeze on Tesla right here. What's up, bro? What? Oh, that's a good question.
Pull that out for her birthday. Let's see. Maybe on here. Stay tuned for a special free offer on the Flash Force Tactical Flashlight. With its powerful telescopic zoom, the Flash Force Tactical Flashlight gives you a sustained light over 2,000 meters. Oh, here we go.
Put it where I wouldn't. Put it where I wouldn't find. Wouldn't forget where I found it. Put it. Which one? One of these is. Two of these are for her. Okay.
Thank you.
Mm-hmm.
This marble prices.
Okay. Okay, so Tesla's starting to come back in as well, a little bit. Microsoft rolling over a bit. Futures pulling back.
There is some idea of what the tariffs might be now. Remember,
Apple.
this was taken a few weeks ago, so before yesterday and today. So we'll see kind of
what the July report looks like. But they also noted that the calming of the tensions in the Middle East helped prevent
All right.
the geopolitical and kind of tensions, and then also the risk that we've seen in DC in terms of passing of the big beautiful bill,
Tesla.
in terms of kind of the tariff and trade policy. As that starts to normalize, you're seeing less and less fear of volatility, and you're seeing the options market too. I mean, look, we got a VIX trading at 1670 today. You would think with all of the things that are going on between now and say that April 1st expiration of trade and the tariffs, boy, you would think that people would be buying protection. They're just not doing it.
Historian geek, and I've just studied history. Throughout history, bull markets are fueled by inventions and innovations that revolutionize our lives. So you go back to the 20s, railroads that got us from New York to LA faster than walking there. So whether it's airlines, whether it's television, internet, smartphones, all of them, what they all have in common is increasing productivity. So AI is the new invention, innovation that's leading this bull market because it's obviously increasing productivity. And I think this can go on for another couple of years.
But if
That's
we're
Joe Fahmy
at
talking.
Near record highs, and it's all about AI. How do you actually make money in the market? Because I know like you could go up a lot, but I thought you're supposed to buy when markets are down. So when everything is golden, how do you make more money than the next person?
Well, hopefully you just had an opportunity with the tariff scare to get in a little bit lower, and hopefully people have been in for a while. But one thing I've learned from almost 30 years of doing this, I'm 108 years old. In case you're wondering.
You look great. What's your skin hair? Not a day over 85.
Thank you. One thing I've learned from doing this for a while is moves in the market go on way longer than we can expect. So in other words, just when you think things can't go higher, they usually do. And just when you have nasty bear market corrections, just when you think they can't go lower, they usually do. So my point is, I'm not afraid to buy a little bit.
And I'm curious too, I've been speaking with some analysts about this. Do you think heading into this year, we had maybe a positioning problem where people thought they were too overexposed to tech? They were moving to defensive plays. They had a lot of cash on the sidelines. And that's part of the reason why we're seeing this move higher in the tech trade.
Yeah, and also the tariffs, look, the headline scared a lot of people. There are a lot of, if you look at the statistics, a lot of institutions are underinvested right now. That's why when you have the Iran scare over the weekend, everyone's like, oh, the market's going to crash. But beneath the surface, institutions have to get in when things are dropping. So there are a lot of institutions right now that are offsides. And I think that's what's keeping this underlying resilient bid to the markets.
And I'm curious too, if history is any indication, we look back at 2022, right, where the recession that was supposed to happen never came.
Yeah.
So our markets may be thinking, well, if the market's going to continue to be resilient, the economy can withstand all these changes, maybe we just stay and see what happens, because right now the hard data is pretty solid.
Yeah, the data's great. I always say if you're worried about a recession, just leave your house. I mean, just look around. You can't get into some restaurants.
Yeah.
The airports are busy. I look at Booking, which is the old price line. It's an indicator of travel, not just airfare and hotels, but cruise lines. Always, if that's near a new high, that's a sign to me that things are okay. Now, of course, you're going to have scares along the way and slowdowns along the way, but overall, the economy is still strong.
What do you like in the tech trade right now? Are there specific names, plays you have for people?
I mean, I do like a lot of the AI plays that we recently had a growth scare, but Microsoft and Meta's recent earnings, they said, no, full steam ahead. We're still spending money and, CapEx expenditures, still putting a lot of money into AI. So it's not just AI, but I'm noticing some space names with a lot of great themes, but that's like another 2-3 years down the road. Some retail, not just apparel, but restaurants. I've seen like Texas Roadhouse and Shake Shack and Dutch Brothers. Some of these are near new highs. So there's not just that, but energy as well as a play off of the demand for the energy grid for AI and data centers. So there's a lot of sectors.
And you're alluding to the fact that we've seen this broadening out of this market. And within tech in particular, we always talk about NVIDIA. We're trading near records. Do you think this is still an undervalued stock at these levels?
Well, I think it's made a big move, and the big move it made, call it from split adjusted, whatever, 10 to 140. And when stocks and the markets make big moves, they kind of need to digest a little bit. Just like after a big Thanksgiving meal, you kind of need to lay sideways on the couch for a little while, sometimes longer. But my point is, it made a big move. It gets to be overcrowded. And a year ago, June, it was 140 something. And now it's, just cracking through 140, 150. So it made a big move. It's consolidating. And I still think it still has more upside.
Do you recommend buying? Because I'm always curious, like for people who are more passive investors, if buying the actual stock is the way to go, or simply investing in an ETF, either a chip ETF or Tues, just something to follow exactly the markets. What do you think?
It depends on your personal preference. I always say do what works for you. Some people don't want single stock risk, so SMH is one of the main semi ETFs. 21% of it's Nvidia, and then you get 10% Broadcom and Taiwan Semi. So that gives you great exposure to that trade. If you don't want single stock risk, then use an ETF or the Qs for, as you alluded to. Or if you want single stock risk, you can take along, I would just say manage risk. So even though I might be bullish and optimistic on things, when things, turn against you, you have to always have some sort of a risk management in place.
And if Jared was here, he would tell you. I sit next to him and I ask him every day, is now a good time to buy Nvidia? What are the technicals showing you? Because it's one of those trades where you do have FOMO if you're not in the market.
Yeah.
And you talked about the AI productivity boom. Do you think that's being underpriced at the current moment?
I think that there are people way smarter than me, and I know that's a large sample size, but there are people way smarter than me saying that this is bigger than the internet. Like Mark Andreessen, for example, 2010 or 11, he wrote a piece called Why Software is Eating the World, and he was dead right. And now he wrote a piece a couple of years ago about AI, how it's going to change our lives. And there's so many smart venture capitalists and smart minds that are talking about this is going to be like, there's still a long ways down the road. So I think it's there's still a lot left to this move.
I'm curious, as a portfolio manager, how you find the next big stock. I know that's what everyone wants to know. And if we all knew it, we'd all be rich. But like, what is the next Nvidia, or what are the indicators that you look for in a stock similar, so in the chip space, that makes you think that's going to be the next breakout star?
It's a great question. I study, as I said, I'm kind of a market nerd, where historically what causes a stock to go up is earnings and sales growth. It's almost like a simple concept, but people forget, like, if you are growing your business, you start a small business and you go from $1 million in sales to 10 million in sales, guess what? Your small business is worth more. So it's the same concept. So if a company historically, they looked at McDonald's before it was McDonald's, and Microsoft and Home Depot, and what caused all of these huge moves was earnings and sales growth. So I'm looking for something now that has very, very strong earnings and sales growth. Because as long as the market's cooperating, for the most part, that'll help their stock appreciate.
And we need strong fundamentals in the economy in order to support that earnings growth.
Correct.
So from your clients, what are their biggest concerns? Do they talk to you a lot about the tariff uncertainties, inflation uncertainties? Do they have a lot of excess cash on the sidelines that they're waiting to deploy until later this summer, when potentially we can get a little bit more clarity on the state of the economy?
Yeah, some people, look, I keep the news on because you need to know what's going on in the world, but a lot of it's fear. And it's not that I'm complacent. I just try to encourage them, think, with some of these names longer term, you're going to have corrections along the way. But as I always say, you don't turn on the Weather Channel when it's 75 and sunny outside. You turn it on when a blizzard or a tornado or hurricane's coming. So my point is, the news is designed for the most part to scare us for ratings. So I take it all with a grain of salt.
How do you then know when a news has?
All right, Tesla looking for this push to the upside. Tesla. Okay, another buy order block right here. Another buy order block.
And then stock closed in the green on Monday.
Yeah, that's the line. It's not the news; it's the market's reaction to the news. So when things
that looks
started to
good.
break down in 2020, where we weren't sure if COVID was going to be a big deal, if it's going to spread, where when it really starts to break down, that's the market's.
Okay, this is
when it breaks certain.
This is that volume right there. Buy order block. No follow through yet.
That's when you have to heed.
Nvidia bouncing.
In the case of the recent Middle East crisis so far, the news has been miserable, but the market's resilient. So that's an example of the market's holding support.
So how do you train your mind then to be that investor that doesn't get scared, that stays in it when it's tough? Because the mental toughness element of it is scary.
Yeah.
Trust the tips. Yes.
if you're a trader, you have, I don't know, you have a few choices. You either turn off the news, except for you guys, because you can keep you guys.
But that's actually a thing right now that people are talking about, that you're better off not looking at the news.
Yeah. Yeah, or to use your expression, mental toughness.
Mhm.
That's another option. It's say, okay, I can keep social media on, I can keep the news on, and
Okay, Tesla pulling back in now.
or your other option is blame your parents for raising a wimp. Those are your other options.
I think what you're saying too, and we've seen a lot of aggressive dip buying, especially on the part of retail traders, that when the market goes down, to view it as more of an opportunity.
Yes.
Nvidia bouncing, Nvidia. Somebody took a little profits right there, looking for a follow through.
What's that line with the market's the only place where when things go on sale, people run. Otherwise, people usually go for sales and stuff. It just all depends on your time frame. With the indexes and the ETFs over every 10, 20, 30-year period, they go up. They're designed to go up because they take out the weaker stocks and put in the stronger ones. But with individual stocks, you do have to be a little bit more careful because they don't always come back. So it just depends on your time frame and your strategy.
This might be an odd thing to ask, but are there any pullbacks you are anticipating in the next few months? Any events that investors should watch out for that could cause a pullback?
I wouldn't be surprised this summer to see a pullback. August and September, again, being a historian, August and September traditionally two of the weaker.
That's true.
So a lot of people go away, Hamptons, all that stuff. So you tend to see a lot of institutions might sell and just take some time off in the summer.
What should people say? I mean, we have Jackson Hole in August.
Yeah.
Maybe have a Fed cut coming in September.
Yeah.
How much of a catalyst?
Again, it's the questions you're asking are awesome.
I know.
It's just impossible to answer because if you tell someone who's dollar cost averaging in ETFs over 30 years, it doesn't matter. But if someone's actively managing a portfolio and things have been strong over the past month or two, then maybe going into July, you could take a little bit off.
Notice the Bollinger Bands are coming together, so it's telling us to look for a little bit more consolidation. Doesn't mean we'll stay here, but we're pulling back into that fair value gap from 30 minutes ago.
Right there. We will need to take a short break. We'll be right back with Joe and more thoughts on translation next.
One thing that I will say that's been encouraging to me has been the broadening out of the rally. Meaning, while we've taken a little breather.
Speaking of broadening out, let's go take a look at breath and see what that looks like. Breath. Okay, yesterday breath had turned back down. Okay. Today we're trying to hook back upward. Okay, so you can see NASDAQ, small caps, mid caps, and the S&P in the top panel. S&P, mid caps, small caps, NASDAQ in descending order. S&P is trying to turn back up after a dip yesterday. That was mostly profit taking yesterday. Looking for these to all turn up. So mid caps and small caps look pretty good. Breath wise. S&P 500. Equal weight index. Okay, so we got a little bounce in the equal weight. Removing the weight of these laggards from this morning. These were all lagging this morning. Some of them caught a bid like Tesla and Nvidia. Netflix, watching Netflix for a higher low. All right, the number of stocks above the 20-day have dipped a bit. Okay, they're off the hot level. So we're back to 72, 74%. 74% of stocks above their 20-day. So we got 26% that can still get back above. Some tailwind, if you will. Let's look at the New York Stock Exchange. When in doubt, you always want to check out the New York Stock Exchange. Okay. Breath, the McClellan volume oscillator has turned upward over the last 2 weeks, 3 weeks. This is week number 3. Remember, we were looking for a consolidation. So yesterday we got 1 day of consolidation so far. New highs, new lows. New highs, new lows. All right, so this backed off from what we saw on Thursday, yesterday, and today. We backed off a little bit. Red histogram. Advanced decline, trying to make a higher high. It did over the last 2 weeks, made higher highs. It dipped yesterday. Now we're starting to bounce again. And we got the second blue elder stick. So that's telling you to look for consolidation. Still looking for consolidation. In the big indices, what about IWM? IWM trending the 9 and 21 day crossing up through the 200 day. The 20 day, 21 day will cross up through the 200 day probably by tomorrow or Thursday. So that momentum looks good. There's nothing here that says look for a major new low or even a sizable pullback. Let's go take a look at what the hedging flows. Okay, you see NVIDIA, the hedging flows dipped a bit. Okay, we're looking for that to turn back up. Okay, Netflix, that one had rallied quite a bit. That one's taking a break right now. Netflix, you can see it rose from about 11:30, 11:15, all the way into 2 o'clock. Okay, Tesla hedging flows. Okay, that made a new high and then dipped back in. A new high in the evening session. Okay. Okay. So over here this morning, I made a new high. Dipped until about 1:30, and then we started to see flows turning back up. So Tesla trying to regain this upper level. Let's see what the S&P cash is doing. S&P cash. Okay, hedging flows are just sideways. Okay, we got this iron condor that we were talking about earlier. Okay, iron condor. So we're staying between these levels, 61.90 and 62.60. Okay, 61.90, 62.60. So we're just kind of hanging out right between. So Captain Condor, successful trade as long as we stay right here. Iron Condor is looking for sideways or neutral price action. We do sell Iron Condors from time to time, mostly for earnings. So earnings is coming up again. So we'll be selling some Iron Condors for earnings. That's a good way to take money out of the markets without taking a lot of risk. You sell a 20 delta above and a 20 delta below, and then you buy like a 10 delta above and below that for wings. And a lot of times you can make $200-300 per contract, somewhere between $150 and $300, depending on what deltas you choose. I generally choose a 20 delta for Iron Condors. We'll be doing that during earnings season. For my benchmark is usually I want to see a stock that has a 10% expected move. That way I know implied volatility is going to be high enough that I can sell premium, sell a 20 delta, have an 80% probability of a winning trade. A lot of times you can take a Wednesday trade that expires on Friday. Earnings come out on Wednesday. Then you got till Friday to adjust or to take profits. And you'll get implied volatility to collapse. So we collect that premium. All of that's coming up soon. When do the banks report? Let's see. Usually Bank of America and JP Morgan are first, right? JP Morgan reports. I have it on the watch list. I just want to do it here. Okay, JP Morgan reports next week. All right, JP Morgan next week. What about Bank of America? Bank of America. That is Wednesday, the 16th. Goldman Sachs. Okay, so this starts earnings season again. July 16th, Wednesday. Okay, so Morgan Stanley, the 16th as well. Wells Fargo, Tuesday, along with JP Morgan. Citigroup, also on the 15th. So you got Citigroup, JP Morgan, and Wells Fargo all on the 15th, Tuesday. So next week we'll start earnings.
What do you see happening in the second half of the year? Because as I mentioned, we've had some positive tailwinds as far as a sort of more crypto-friendly White House, as I mentioned, that there's sort of more mainstream adoption as well as the institutional participation too. So can you give us a sense of what comes next?
Yeah, so continued work on the regulatory front. Yes, progress in the United States after some progress in Europe over the last year, but a lot of other markets, Canada, the UK, Australia, still a lot of work to do to get to a place where the regulatory regimes for stablecoins are clear. I'd also say the next big sort of topic on the agenda is going to be yield. If I'm holding a stablecoin and I have access and I'm holding it in order to pay for things, to save. I'm also expecting to be earning yield off of that. We're starting to see the first set of stable coins, the Global Dollar Network or others more on-chain like Athena, which are offering yield back to users. And I think that's to users, to businesses, basically anyone who wants to hold and use stable coins instead of using fiat directly. And I think that's going to be a big part of the next year ahead and continuing to see that growth grow. Yes, in the US, maybe it's a little bit easier to get yield on your US dollar. But if you're in another
Okay, Meta just fading. Tesla looks like going into power hour. We could see one more little surge higher. New York Fangs are mixed at the moment. New York Fangs are mixed. Okay, looking for a bounce. S&P looking for that bounce. Okay, Reddit. Okay, let's see, Boyd Gaming, BYD, Boyd Gaming. Okay, that's trending, Boyd Gaming. Lots of volume over the past few weeks, Boyd Gaming. Okay, I took a trade on this one, I want to say Wednesday. Thursday was a little higher, came back down yesterday. Boyd Gaming, Wynn Resorts, all of the casinos look pretty good. Las Vegas Sands, looking for a bounce on Las Vegas Sands. We got a gap up instead. Penn Gaming, flat. Caesars, that's trending. Very slow though. It doesn't give you much ATR, about $1 a day. So on a great week, you might see $5 on this one. So you might get 10% out of this one if you can get $3 or $4. Back to the 200-day. Caesars looks pretty good. MGM. Okay, let's see. MGM. Okay, that looks good. Golden Entertainment, GDEM. We talked about this one yesterday. Golden following through. The Solar's also looking good. Solar's pushing higher. Did gap down today. So in phase. Okay, those are all taking one step back, 2 steps forward, 1 step back. Texas 2-step.
This morning about Bitcoin treasuries as well, but I do want to pick up on something that you said, Mark, too, about some of the regulation. I mean, clearly over the years we've seen that crypto is investable, even without some of those guardrails. But no doubt some of the barriers being removed would offer even more of a tailwind. But just want to get your thoughts on prices right now. I mean, as far as Bitcoin trading today, 109 levels, in the face of a pretty quiet all day of equities and what we're seeing in other asset classes.
Yeah, so I think much like Andy said a little bit earlier, I think we're probably in for a little bit of a flat summer across Bitcoin and across other markets as some of the tailwinds lose steam from earlier this year in the United States and new tailwinds are added. I would say continue to actually watch the stablecoin space as stablecoins continue to pick up as they gain market share. Expect to see more interest in Bitcoin as well. And especially among institutions. And more traditional
Bitcoin at the high here. Looking for Bitcoin to break out one of these days in the near future. So if you're in Coinbase or something like that, let's take a look at Coinbase. Coinbase flagging, looking for a follow through. Coinbase. Been looking for institutions to show interest. They don't seem to be interested. Not seeing a whole lot of follow through. Whole lot of nothing. Let's see. We've got SMCI. That's having a good day. SMCL, the ETF, the 2-time long. SMCL, that's looking pretty good. SMCL. Okay, that's up quite a bit today.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Okay, I kept expecting that the markets were going to give us more pullback than we've seen thus far. Doesn't mean we can't see something this week, but markets doing pretty well. Market's doing pretty well. Okay, a little flag of doji inside day, harami, however it's pronounced. Harami. Okay, so we know we're probably we look like we're starting to trend. Okay, so the last time we finished the handle on this cup and handle pattern, last time we finished the handle was kind of an ascending handle. We tagged the 21-day and we broke higher. Now, I'm assuming that we're going to just continue trending along this path higher. Now, next week, we have lots of data. So this is what I would be doing. This is the way I would be thinking. I'm not talking about investors. Investors, you don't have to worry about. You don't have to worry about next week. That's, the normal gyrations in the markets. But for day traders and short-term swing traders, what I am doing is I'm taking intraday dips, and I'll continue to do that throughout the week. But next week, I'm going to be a little bit more cautious because the data that's coming out next week could move the market. Okay, that could move the market. That was pointed out in the last 2 days in Brent's updates. Okay. So here we go. Next week, we think could be a turning point with data. You got OPEX, you got end of the month FOMC, and then 8/1 tariff deadline, which I believe he rolled forward, right? All right, but he's not looking for a point which the market drops sharply. Conditions will be ripe. Okay. Second half of July issues. Okay, so July tends to be a pretty strong month for seasonality. So, like Skier was saying in the trading room, I think you're right about that. You have to be quick to take these, especially if you're trading options. You have to be quick to take profits. Don't let profits just sit there and deteriorate. Like Tesla's pulling back a little bit. That had nice profits at the high. So if you were taking profits, that's great. Next week, we could suffer some retest of the 21-day. Okay, so we could come back to the 21-day next week. Okay, 9 EMAs right there. I got these backwards. I just noticed I had those backwards. Okay.
A new pay package, which gets us to about 25% voting control.
And that is red. No, it's this color. Okay. Elon. Okay.
The note from Wedbush, just to dive deeper into it, was called basically the soap opera must end. So
Okay, let me just zoom out a little bit here.
that we've seen with the autonomy element as well as the robotics future now on the doorstep, knowing the company cannot have Musk spending more money or time, frankly, on right now the political agenda, which requires just countless energy as well as the overall focus of Tesla fundamental story. So I think that he's not alone in this thinking, but amazingly so,
8
they
months.
still have the highest price target among analysts at $500 a share.
Okay.
You know, it's so interesting because we talk a lot about ANIs, obviously, but I feel like when I saw this headline, the very first thing I thought was he used his first name. He acknowledged that he knows who he is. So I'm sure we're going to hear a lot more about this coming up. But you said an interesting thing. It is
Okay, so we had a 30% gain off of the April low. Now, considering the S&P 500 averages over the last 2 years was like 25%, I guess. Annual gains. If you were to just if you started buying April 7th, April 8th, and you took profits now and just took the rest of the year off, you're probably going to do pretty well, you know. If you're looking for more upside, like I am, after summertime. Okay, so let me show you something. So after summertime, I'm looking for that. So let's take a look at this. Okay. So the first half. Okay, the first half between January and June 30th, we got pretty positive earn. If it hadn't been for the tariffs, we wouldn't have had that dip in February. But seasonality wise, February March period isn't that great anyway. It's only 4%, 5%, which is good. But and then the period between April and May 15th, usually about 15%, and then May 16th of June, another 1.5% there. But we're looking at the second half now. Okay, second half, Q3, we tend to have a very good July into August 15th, and then after August tends to be pretty sketchy. So if you're an investor, you probably want to be taking a little profits off, reducing your exposure into August, looking for potential for the markets to come back in a little bit and start investing towards the end of September into the fourth quarter, which tend to be look at the two numbers here. Let me just turn this off. Turn that banner off. Let me turn this off. Okay. And take Tesla off the screen. Okay. So look at the period between October and December. Okay, you got 33% in the fourth quarter. The reason why this works out, these numbers come from analysts that meet with management. They'll meet with the Jensen Huang and his management teams about 2 weeks prior to earnings, and they get a sense of what earnings are going to be like. They know before everybody else does, and they start to position. They'll take, make some stocks. They'll give some upgrades and downgrades, and they'll look to position into the last quarter. So we're only in quarter three, and we're looking at an 8% average over 20 years. We average about 8.4% during the months of July and August to the 15th. That's an average. So we're looking for the markets to continue to move higher if you're investing. This is what you want to be paying attention to. You can take a screen cap of this if you want. So yeah, and the fourth quarter tends to be really strong. Okay, because that's when people come back from vacation, from Labor Day, and kids are back in school, and vacations are done, and investors become more interested in putting money to work in the fourth quarter. So that's what we're looking for. Okay. Okay, how do I get rid of this now? Okay, banners. Okay, turn that off. Okay, so that's what we're looking for. Could be a little fade to the 9 EMA. Nice little consolidation of recent gains from 2 weeks ago. We broke out above 6,025, 6,020, if you recall. And we started to head towards new highs, new all-time highs. RSI looks okay. Volume looks okay. Stochastics embedded. This could turn back up very well, like it did over here. Turn down, turn back up, turn down, turn back up. MACD is one I'm more interested in, MACD and RSI. That's starting to show signs that maybe we pull back a little bit more into next week. Tesla pulling back a bit. Tesla. Okay, we're moving into the 3 o'clock hour.
The tariffs issue settle and the Fed breathes suddenly starts cutting and it moves about 50.
Tesla pulling back. Tesla.
So you think the Fed coming in and cutting is because they can, not because they have to?
That's right. I think the easiest way for the viewers to understand is Europe uses the thing called HICP as their core inflation, harmonized inflation, which excludes shelter. It's running at 1.9%, and they have a 2.5% ECB rate. If you use this,
like 10 times.
Correct. And if you use the U.S. measurement the same way, excludes shelter, because Europe's core inflation excludes shelter. U.S. core inflation is 1.9, and the Fed's at 4.5, 200 basis points higher than the ECB.
You hear that? You hear that? Excluding housing, the Fed's at 4.1 or whatever. Fed's at 4.1. Inflation, excluding housing, is 1.9%.
Okay, maybe I'd say if I looked at where the 2-year was, like which Jeff Gunlock cites, the Fed is like 3 or 4 cuts behind. Yes.
Well, how many do you think we're going to get this year?
Well, I think the market's pricing in 2.6. So, like, let's say 2 is likely, but that still doesn't seem like enough cutting given where inflation is tracking.
So if we're 6,200, we'll call it today on the S&P. What's likely for the end of the year, do you think? What's reasonable? Not likely. You don't need to make an exact number call for me. What sounds reasonable?
Tesla pulling back.
So I would.
Okay, we'll look for a bounce tomorrow to gap up on Tesla.
Because we had 6 black swans, and the market has proven the resilience.
Going up to what? We're like, what are we, 22 times now, aren't we?
21 and a half.
Sorry, I overestimated by a half.
Yeah, but the median is only 16.8.
But that speaks a lot to what got us here in the first place. You've had this massive, large stock rally, right?
Yep.
So
I might say, hey, why not the other 493 get a 2 turns multiple increase, and you'd be 6,800-ish.
Can you do that if there are questions about the resilience of the economy at this point?
I think so, because financials, industrials are interest rate sensitive, so I think they would actually reflate on the idea the Fed would be cutting. And there's a lot of tech that actually still has reasonable multiples, and of course we know the cyclicals and the semis would still rise. So yes, I think a lot could rally.
One of the knocks on the rally itself is that many stocks, as we're talking, it plays right into that story, outside of the S&P 500 are not hitting new highs. This record-setting rally would have you believe that everything is going up, when in fact it really hasn't, and certainly not at the same pace, and not even close.
Yes, well, people always find quibbles with new highs, but we also know that for an institutional asset manager, it is not really excusable to be bearish when the market makes a new all-time high. So in other words, the institutions now have to start adding risk too. If we're making all-time high, because it's a new bull market.
Oh, okay. So we're gonna get FOMO. That's gonna be the next leg, is the FOMO trade.
I believe that is driving capitalism. Yes. So a component of it is FOMO.
But I mean, if you said institutions, hedge funds have been more negative.
Okay, Uber.
Right?
Let's see what Uber's doing. Uber.
So presumably that negativity would turn itself as the fear of missing what could be in your
Uber,
mind,
nice follow through, nice buying today at the low. Uber.
And it's merely a reorientation of perception because the market's only up 5% year to date, but we could be up 10. So only half of the full year gains have been realized. So if someone had fresh eyes on the market and knows there's Fed being dovish and tariff risks are abating and multiples could expand, I think people could find many stocks to buy.
Okay, well, you stay with us. We will expand the conversation now and bring in New York Life, Lauren Goodwin, and Charles Schwab's Kevin Gordon. It's great to have you here. You heard it right here. You sat right next to Tom Lee, and he was espousing his bullishness right in your faces. You agree with it?
I am less constructive on the policy backdrop for this market. Now, I expect that for the next quarter, especially here in the next month as we have earnings reports.
Costco looked like it was gonna maybe hang in there. It's hanging in there. Just thought maybe we'd see maybe a little push back to the highs. That said, Bollinger Bands do say that we are consolidating and will likely continue to consolidate until we see a pickup. This is Costco. Until we see a pickup in price action and Bollinger Bands open up, looks like we'll stay contained between these levels, 1010 and 970. So Costco Bollinger Bands are saying we're going to stay right where we are right now. What's that stock you guys were looking at yesterday? ASST? ASST? Okay, looking for a follow through. What's Core Scientific doing? Core Scientific. CORZ. CORZ. Core Scientific. Okay, big bearish candle today. Snowflake.
I mean, a couple things. One is
Okay, Snowflake grinding.
a long time from now, and many people are saying they're expecting tariffs and prices to rise and consumers to think that's inflation. But one thing to keep in mind, a tariff is actually a tax because it is paid and received by the government, which is then recycled, which is different than an inflationary cycle, which is a charge of higher prices to consumer is then recycled by companies as profits, and it creates an inflation cycle. I would probably be more in the camp that even if goods prices reflect some bump from tariffs, and there's a lot of uncertainty whether that's going to happen, it's not going to be viewed as inflationary. And it's no different than us kind of seeing this as there was a tax levied, it's one time, and
even if that's true, you could still have a negative impact from the tariffs themselves on the
Okay, Tesla dropping off here. Okay, Tesla.
Well, again, but the one thing to keep in mind is the movement in gasoline has already offset the amount of the tariffs. I mean, right, gasoline's down huge. So I'm just saying that
Tesla, big move lower.
Using a one model and says this is tariffs, it's 20 billion. It's missing. There's been a lot of changes in commodity prices, and more importantly, you even see it in the ISM surveys. There's a lot of pushback. I think a big chunk of it is being absorbed by the exporter, which means it's not being taxed on the American yet.
Okay. What about you?
I think that from an inflation perspective, I mean, you're actually already starting to see a lot of it show up on the good side. It's just being overpowered by services disinflation and shelter disinflation. I mean, even if you look at the durable goods portion of something like the PCE price index, the increase that you've seen year to date, if you were to annualize that, it's one of the fastest increases you've seen since the 90s. It's not that it's egregious and it's back to, what you saw during the, 2021 to 2022 supply chain shock. But I would say that, it's already starting to show up, but it's not necessarily overpowering all of the indexes and making inflation, at the headline level go higher. So from that perspective,
are you as bullish as Tom?
Well, for inflation, I don't have as much of a worry as I would for the market. But for the market, yeah. I mean, I think that when you look at the sort of the fabric of the leadership of the market over the past couple of months, but that ties into the growth story that has been relatively resilient, but also the inflation story that hasn't been nearly as worrisome, makes a lot of sense as to why we are where we are in terms of not just one sector or one industry leading, but really the market sort of taking its cue from the fact that the economy has, generally held up better to the points that both Warren and Tom were making. You know, economic data have looked relatively resilient. It's the what's coming from here clearly that nobody knows, but I think that just keeps you in a low conviction environment until then.
I mean, how much higher do you think the stock market can go from here?
I mean, if you have a lot driven by multiple expansion, then you've got quite a bit, to go, especially on the tech and the mega cap growth side. Because if you looked at, a forward PE for the NASDAQ or the NASDAQ 100, you still have pretty considerable upside if you were going to compare to where we've been in prior cycles and beginnings of bull markets, I would say, where you've got a lot more room to push higher. I would say the onus is more on the earnings growth side. Not necessarily whether we get positive or negative, but whether that rate of change continues to keep up and you see momentum build into the third and the fourth quarters. And that comes from guidance that
But the note we have on the screen right here from you in the middle one, go put that back up.
Yeah.
Let's put that back up, please, so I can see it again, because it said stretched valuations. Stretched valuations.
Yes.
But you're talking about multiple expansion while arguing that they're already stretched.
Yeah, but stretched valuations, I mean, it can stay that way for a while. And that's typically at these parts of the cycle, that's typically what, powers you higher. And then you get the earnings growth to accompany it after. I mean, for us, valuation is more of a sentiment indicator or an indicator of sentiment. So we use it to say, yes, people feel good about the market, but also they're using that as a reason, particularly on the retail side, which is really more of the world that we sit in. For the average retail investor, retail trader who's looking at stretch valuations and using it almost as a sentiment gauge to push stocks higher, that's typically what we see at these points in the cycle. Does it mean that you still have risk to the downside, maybe more so or more protracted in the case that you get a negative catalyst? Yeah, absolutely. I mean, that's what we've seen in the beginning of this year, whether it was everything DeepSeek related. You could bring it back to even the beginning of 2022 when you started to see a lot of really poor breadth divergences and valuations were stretched. There are points where it can be exacerbated to the downside, but it's also a reason that many traders, investors, as we've learned over the past several years, it's a reason that they've used to push stocks higher.
Lauren, when you look at that, do you look at the current price of stocks and say they're just too expensive relative to all the concerns that you still have for what's to come, right? You're buying stocks based on what you think is going to happen in the future, not where you think things are today.
I agree that valuations are stretched and that here in the next couple of months, there are, let's say, potential volatility catalysts, but this has not been an incredibly macro-driven market in recent months. This has been a market that's driven by recovery, just trying to digest different policy announcements that really the market has no more visibility into than you or I or others. And so my expectation is that we will continue to see valuations edge higher here in the near term, but that this is an investor's limbo, where the policy risks, though they're visible, they're not present in the data. And I think it's important that the impact of sort of price changes and starting to bear out in the market as well, the impact of tighter immigration, less labor supply, could create I'll agree with what Tom said earlier, temporary inflation shock. But when it comes to Fed policy and it comes to market reactions, even a few months worth of inflation moving back the other direction is really important.
Okay, so what about what we're showing you right here, Tom? Yields, which have been backing up again, right? Lately, anyway. I had asked the question a week or so ago to people whether the bond market was going to have yet another flex, whether after the bill passed, the bond market was going to say, okay, I'm going to show you again what I think about these rising deficits and your lack of taking them seriously enough. Is that going to happen one more time, to say the least? Are you worried at all about a backup in rates and the stock market not dealing with that well?
Yeah, I mean, I think as a little perspective, at the start of this year, I remember a lot of folks saying 5% is where we're going to see the 10-year, or maybe even 6%, and people were talking about numbers that were, even possibly double digits. So 4.4% to me is a huge win. But I do think one of the things that investors have to be mindful of is that the CBO does not count tariffs in their budget forecast because it's not legislated. So when you have the $240 billion a year in tariff revenues, which is $2.4 trillion without inflation over that budget period, that's not even in the calculation of the $2.8 trillion being added to the deficit. So I actually think that the bond market is saying the tariffs are actually keeping the bond market in line.
Bond's a good buy here.
we're maintaining our credit exposure in the short end of the curve, not because it's particularly well priced, but because on a, let's say, 2 to 3 year time horizon, that's a corporate backdrop that is still really healthy in the US, and I'll buy and hold that all day and clip the proverbial coupon. We're not taking big directional bets in duration precisely because every element of the 10-year pricing, the Fed funds rate, inflation expectations, and the term premium are all in play.
Kevin Gordon, lastly to you, of all of the sectors that have lagged to start this year, right? Let's get away from tech, let's get away from industrials and financials, comm services. Which one do you think has the best chance for the most upside over the remainder of the year?
Oh man. Well, I will say the split that you've seen in what is considered traditional defensives with healthcare staples and utilities, utilities having pulled away from that pack, not just year to date, but over the past couple of years. And they're not a leader, year to date by any means, but I think that some of the strength coming from that and the fact that they haven't been super well bid when you go into these really strong downdrafts, but also they've acted differently than staples and healthcare face a different set of tariff risks and geopolitical risks, are a little bit more insulated. And you add on to the fact there's probably more of a secular, AI related theme in terms of power generation. I think that move over the past couple of years, and just the strong breadth profile of that sector this year, I think has been a pretty good standout for the sector.
I enjoyed that. That was fun. Thank you guys. We'll see you soon. Thanks, Scott. Kevin, Lauren, and Tom. Right here, Post 9. To Christina Partsinevelos now for a look at the biggest names moving into the close. Hi there.
NVIDIA pushing.
Let's start with Moderna shares soaring today. There is a certain vaccine, a flu vaccine that is entering phase 3, so that is helping it. Also, it just comes at about 8% higher. Comes a day after several leading medical groups sued HHS Secretary Robert F. Kennedy Jr. over his COVID-19 vaccine policy. And then you also have President Trump threatening pharmaceutical tariffs today of up to 200%, but that hasn't changed Moderna shares up 8%. Meantime, FICO shares plunging after the Federal Housing Finance Agency director did say that the mortgage lending giants Fannie Mae as well as Freddie Mac will allow lenders to use VantageScore scores in determining credit risk for borrowers. It's part of an effort to really stir up competition and bring down costs in the credit scoring ecosystem. And when competition increases, FICO shares come down about 12%. Scott?
All right, Christina, back to you in a little bit. We're just
All right. Tesla did pull back. Tesla pulled back.
Does that mean even better things are ahead?
NVIDIA.
You will tell us after the break.
NVIDIA. Looking for a follow through. NVIDIA. When they go to the 5-minute NVIDIA. Okay, flows have been pretty bullish on NVIDIA all day. Flows have been pretty bullish for NVIDIA. Okay, NVIDIA just, that's interesting. The flows just dropped. No, sorry. Flows pushing higher. The other one was Tesla. That was Tesla. Tesla flows. Dropping off there. Tesla flow. Okay. Broadcom, new low here. Tesla, NVIDIA. NVIDIA trying to make a new high here. Okay.
Why it isn't great for our business as journalists to have many CEOs come on and be very boring and cut and dry and not share any sort of views beyond what the latest quarter's earnings look like. Give Musk credit for not being one of those CEOs, but this was a company, remember, it used to be that like Tesla drivers, it was the liberal elite on the coast, the Larry Davids of the world were the ones driving Teslas. Then it became something that maybe wasn't the MAGA car of choice, but Musk became a MAGA person, and he fully embraced it for maybe a little bit longer than Scaramucci did, but not much. And now here we are. He's probably alienating the MAGA fans because now he's very vocalized anti-Trump. You just have to not talk politics if you're a smart CEO, unless you want to be one day. And by the way, he can't run for president unless you change the constitution.
That's correct. Next time we have to get on the show is like, that's what Paul is. Yeah, okay. Well, thank you, my friend. Now time for today's trending tickers. We keep an eye on Boeing, Robinhood, and Datadog. Let's start with Boeing, which is reporting the highest quarterly delivery since 2023. The 150 airplanes for the second quarter, 60 planes last month alone. CEO Kelly
Hey, Robinhood was looking good. All of a sudden, I guess it got knocked down a peg with something to do with the EU. Okay, it was looking really good this morning, Robinhood.
It's encouraging to see Boeing have this.
Okay, and then we had to sell off, looking for a higher low now.
Kelly Ortberg was tasked with. It's been almost a year now that he's been on the job. Unfortunately, for the company, you had another tragic crash involving a Boeing plane, an Air India plane, and that is something that the company now has to deal with.
Okay, S&P is flat, down 5 at the moment.
Markets picked up with several companies seeing strong debuts. Is it a sign of even better things to come in the months ahead? Let's ask Rick Heitzman. He's the First Smart Capital founder and partner, and he's with us here at Post Science. Good to see you, man.
Hey, thanks.
What is this, like an awakening? Finally.
Thawing. There was a gradual thaw. Last time I was here, I said, hey, there's going to be about a half dozen things in the first half across industries. We saw
NVIDIA.
health and healthcare. We saw China and financial services. We saw the beginning of AI.
Tesla dropped $6
And the market's starting to be functional again.
from the high.
All right, what's it mean? Like, where do we go from here? Is this the start of what?
Okay, Tesla dropped $6 from the high.
The IPO market. Also, M&A is providing a bit of tension in these markets in that we saw a pretty strong M&A market. We talked last time we had about 10 company sales in Q4 and Q1, and then a complete pause in the market in the beginning
NVIDIA,
of Q2 around
Tesla. Let's see what Tesla's doing here. Tesla pulling back more. Okay, so Musk keeps doing something here.
consumer side, which we haven't seen as much stuff. StubHub and SeatGeek, they're going to get ready to come out. You're going to start to see some more crypto.
Okay, 1 hour ago.
Those guys have filed, and then you're going to see
1 hour ago.
healthcare side of whether it's Sword Health, Row Health, or Function Health as that kind of next wave of digital first healthcare.
Oh yeah, Row Health. You're some of the first money in there, right?
Yes.
When are you taking it public, man?
I don't know. We got to talk to our friend about that, but we're hopefully we're getting closer. The company's hitting all its metrics and really becoming a leader by partnering with both Eli Lilly and Novo Nordisk.
Healthcare as a group, is that the one of the? I know it's one of, but it's super hot space as it relates to AI. Is that how you see it? And you think you're going to see a number of AI related healthcare companies go public?
You will. You'll see a number of, because you have a great macro, right? It's the biggest part of the GDP. It's the fastest growing part of the GDP. But it's actually been a laggard in digital disruption. So you're seeing direct to consumer healthcare as consumers are taking more control of their own health. They're going to higher deductible plans, so they're more on the line for value. And you're seeing both AI and digital providing a better consumer.
Tesla's still pulling back. Well, that sucks. We had a really good day today on Tesla. Gave it all back.
Beyond that, I think we're seeing a decent macro. I think we're seeing our
Okay, NVIDIA.
AI companies or consumer companies are seeing pretty good fundamental demand. Days where the tariff crosswinds happen, we're unsure.
NVIDIA trying to take out the high. Tesla's price action just shows you that you need to take profits if you're at the high of the day and you're 100% ATR. Very easy to check your ATR. If you don't know what the ATR is, just ask me. I'll tell you. You can enable it on your chart. You can see Tesla. All right, here's Tesla. Okay, you can enable Tesla. You can enable ATR on the stock. $16 is the average true range. Okay, so it was up much more this morning. Gave back $6 presently. Okay, looking forward to get back into this gap tomorrow, hopefully, for another trade. NVIDIA, same thing. You can check your ATR. So if you start off the day, 375 is the ATR, so it's up $1.62. It dipped a little bit into yesterday's price action. Okay, $1.62. So we could see some more upside on NVIDIA. Grinding higher, NVIDIA. Trying to break out in today. Buy order blocks.
Okay, lastly, you mentioned crypto. Circle, that's went public. Does that lead many others to the
Google's starting to turn end of day. Looks like shorts covering Google. Shorts covering on Google.
Stablecoin is the first really good use case for crypto. I mean, the stored value that folks have seen in Bitcoin has driven some, but now all of a sudden you're seeing, hey, in stablecoin to be able to convert crypto and use it as a better, cheaper, faster way to transfer money is a real use case with a real ROI, and I think that's why folks are filing.
You're saying that you know of other crypto firms that are filing, but they're filing confidential. You can't say who they are. Okay, well, we'll watch for them. We'll see. We'll see. Rick Heitzman, thank you again. All right, up next, American Century Investment CEO Jonathan Thomas is with us. He'll tell us where the opportunity is for the second half of the year.
Okay, watching NVIDIA pushing a bit higher. NVIDIA pushing a bit higher. See if we can't take out the high of the day. I would be remiss if we didn't take some profits off into this push. If we can get a little bit higher, I would do that. NVIDIA. Okay. So we presently have a nice position on NVIDIA. That's up right now. I have the 162.50 calls. I sold some calls earlier. It was a limit order to sell. Okay. Hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Tuesday the 8th. Next week, we got a lot of data. We got the FOMC and other data that could affect price action. We've dipped from the all-time highs the last 2 trading days. So a lot more tame than I anticipated that could be. I was anticipating that we would see fairly tight price action, but there was a possibility we could test the 9 or the 21 day. And presently, we're looking at the S&P 500. Looks like this with a little fade off the Thursday's high back into Monday. We got close to the 90, maybe 21 days there. So maybe next week, there's a possibility we come back to the 20-day. I'm not looking for a big pullback, but RSI is strong. MACD stochastics already look fine. Okay, so here goes NVIDIA. NVIDIA going. NVIDIA running. NVIDIA. Okay, NVIDIA. Google turning back up. Okay, there goes NVIDIA. Nice move on NVIDIA. Okay. Let's Tesla's still dipping there. Tesla's still dipping. Okay, we're right back up to the top Bollinger Band. Okay, so can we get some more follow through? It's 3:35. We only got 25 minutes to go. Are traders going to take profits here? I'm going to take some profits. I'm going to take profits. Could run more. That's okay. I'll take profits and call it another day tomorrow. Okay. All right, that's me taking profits in NVIDIA.
Welcome back. Stocks still have enough momentum to run into the fall.
Jonathan Thomas is the American Century CEO. Joins us now to tell us what he thinks. Good to see you again. I wish I was there. It looks beautiful as ever.
I wish you were here as well. I think we got Dom sneaking out here for a day or two, but you got to get out here, Scott.
Yeah, he's a lucky
Looks like
man.
Torrey Pines is at. Where is he?
What do you think about this market? You feel like we've really had a V-shaped recovery, as I've already discussed with our guests. Does it continue?
Yeah, it's been pretty incredible. Obviously, if you weren't paying attention in April and you just went away for a little bit, you think nothing happened. The good news is if you weren't paying attention, you probably didn't do anything stupid with your portfolio and panic in the meantime. But yeah, I feel pretty good. I think as an organization, we are marginally bullish on equities, cheating a little bit towards non-U.S. developed markets, and market rally continues. The breadth of it has expanded as well. So we're also over-indexing a little bit into small caps.
I find it interesting that you're still inclined to lean into the non-U.S. trade, which obviously had a nice run. Some of the commentary that I've been reading over the last few days suggests that, okay, that's great, that's done. Now, because of, the tariffs aren't going to be as bad as thought, deregulation, the tax bill, economic growth is going to be good, the Fed's going to be cutting. Now you should lean into the U.S.
Yeah, the non-U.S. markets have a little bit more accommodative monetary policy, but I'm not suggesting abandon the U.S. I am always all in on the U.S. and our resiliency. And you're absolutely right. The soft data, if you think about it, Scott, for months has been incredibly negative. Surveys and sentiment and whatnot. The hard data, the actual the economic metrics have actually been incredibly resilient through this whole period, and I think they'll continue to be that way. The other thing that people don't talk all that much about, but President Trump cares about the markets. He doesn't care so much about the really short-term volatility, but he pays a lot of attention, and I think if we do get into some unexpected volatility, you'll see him back off a little bit, as we've seen in other instances as well.
Oh, so you're still a believer in the so-called Trump put?
100%.
Yeah. And what about the Fed put? You think they're cutting this year?
Yeah, I mean, I think I wish President Trump wasn't hassling him so much. I think he'd be a little bit more free to do what he wants. But I do suspect we'll see a cut or two later in the year, as we continue to see some pockets of softness in the U.S. economy. And everybody at the end of the day,
NVIDIA. Okay, so I took some profits there.
Want the same thing. Everybody wants full employment. Everybody wants low inflation.
Tesla did wind up taking a little profits off, looking for a dip. I didn't think we'd dip this far, but you never know. Tesla.
What does your client appetite look like these days? We're trying to figure out
I still have some 312.50s left, 312.50s. Would have been a lot nicer had we not pulled back 6 points from the high, 8 points from the high. Wow, that's a pretty decent pullback in Tesla. NVIDIA, a little profit taking on NVIDIA.
The intermediaries, where they're getting advice from advisors at Morgan Stanley, UBS, Wells Fargo, they're always focused a little bit more on a steady diversification plan and building long-term portfolios. And your institutional clients are very focused on, just getting sector exposures with the opportunity to get a little excess performance that comes from active management. So it varies by channel. You generally find that the institutional players, though, over time have a little bit stronger returns. They're less reactive to the market changes.
Let's talk about the reason you're in Tahoe and you have that backdrop in which you do. That's for the American Century. Of course, you're the title sponsor of this event yet again, which, by the way, is owned, operated, and produced by NBC Sports, and we're going to broadcast it, obviously, over the weekend. How's the field look this year? Because it looks amazing every year.
It does. It's amazing what this has turned into over my 20 years at American Century. This has evolved from a kind of a hot dog and potato chip event to a world-class, the world-class celebrity golf tournament. We've got about 90 players in the field. 20 active athletes, 15 Hall of Famers, 8 MVPs, 4 Heisman Trophy winners, and 2 reigning champions, and Alex Caruso from the Oklahoma Thunder and Matthew Tkachuk from the Carolina Panthers. So it's a diverse field of a variety of different athletes or celebrities overall, but everybody's super pumped up, and the competitive spirit among all these people is just palpable. And while not everybody's really in a position to win the tournament, we maybe have a dozen guys that could win the tournament. There's a lot of side competition going on here and a lot of money moving around as they compete against one another.
Crazy things tend to happen there too, don't they?
Okay.
I can't get out of my head seeing Steph Curry hit the hole-in-one in the year. I think that he went on to win the event a couple years ago, right?
Yeah, 2 years ago, he took a year off to go get us a gold trophy in the Olympics last year. But yeah, he had that hole-in-one, and then on top of that, on 18, he did about a 3-point look away putt that dropped it right in the middle. And I think he's going to be in the hunt again this year. He's feeling pretty good about his game.
Yeah, that's why he's Steph Curry. Jonathan, be well. Have a great event.
Okay, Palantir turning up. Palantir. Watch Palantir.
We'll see you on TV.
All right, look forward to it, Scott. Take care.
All right, be sure to tune in, by the way, to the American Century Golf Championship. It's this weekend, live
Okay,
coverage
Palantir.
on the Golf Channel, NBC, and Peacock. Up next, we track the biggest movers as we head into the close. We're right back on the bell.
Palantir. Okay, Palantir. Okay, Palantir. Palantir.
Copper is a crucial component in a variety of goods, including electronics and machineries in cars. Tariffs on coppers could potentially make those goods more expensive for Americans. The U.S. imported $17 billion worth of copper last year. That's according to the U.S. Commerce Department. Chile was our largest foreign supplier of the metal, shipping $6 billion worth of it to the U.S. last year. So no word on when these might take effect, when they possibly could take effect, but they did surge to that all-time high as he plans to levy tariffs on that red metal. Copper futures were trading as much as 15% higher on the day. And coming up, we will close out our market session and get the big picture from the team over at Charles Schwab. Stay with us.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus
Palantir pushing a bit higher.
all designed for investors like you, with unlimited ATM fee rebates for cash
Okay,
withdrawals.
Palantir doing well. Okay, Tesla. Tesla is disappointing. I still have some calls left on Tesla, but maybe we'll get a gap up tomorrow. Save the day. I have next week's call, so I'm not really that concerned about it, but it's disappointing. I'd love to see everything move higher. Unfortunately, market gods have something else in mind sometimes. Okay, Palantir looking really good. Okay, Palantir. Nice follow through. Okay, if you look at Super Trend, you can see a buy signal here. Tesla, Super Trend. Palantir, Super Trend, you got a buy signal there. Okay. Looking for the breakout, Palantir. Had a big day yesterday on Palantir. Volume was really nice. We only have 15 minutes to produce the same amount of volume as yesterday or more. I don't think we will surpass yesterday, but Palantir looking pretty good.
All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
no noise from bell to bell and beyond. Available anytime, anywhere, any device for free. Schwab Network.
Welcome back to Market Close. We have just a few minutes left in our trading day today, so that means it's time for the big picture. For that, let's welcome in our team from Charles Schwab. Joining us today, Cooper Howard, the Director and Fixed Income Strategist for the Schwab Center for Financial Research. Cooper, always great to have you with us. Thanks for being here.
Thanks so much for having me on today.
Of course. Now, a relatively quiet day.
Okay, Google with the turn here. Do I want to buy some Google? I already have a Google position, I believe. Let me see what I got here. Google. Yeah, Google's turning the corner. Seems like it seems like they threw this one away today. Google. I take a shot at it. I already have a position in August calls. Google. Okay, Google. Let's see what we get. Something going here. Google. No buy order blocks down at the low. Could be just shorts covering for now. Google. 180.
Like you mentioned, if you look at the movement in terms of yields today, it's pretty light. We're not seeing much in the movement of the 10-year or even on the short end of the yield curve. And I think that that's just attributable to the fact that we didn't really get major market moving data this morning. Obviously, yes, we're getting a little bit of tariff data, but that's going to be back and forth. So for now, I think we're in a little bit of a holding pattern until something can break us out one way or the other, Marley.
Absolutely. And, you mentioned the Fed, and once we get some more jobs data to reveal what really is underlying in the labor market, but we do get the Fed minutes tomorrow. Is there anything specifically that you're expecting or anything that you think could potentially change the thinking of the street as it stands right now?
I really don't think that there's going to be really anything that changes the thinking of the street. I think all likelihood is that July rate cut is off the table. Our expectation is that we are going to get 1 to 2 rate cuts this year, depending on how the data evolves. And probably September is shaping up for that first rate cut. But in terms of looking at the minutes themselves, I think what will be kind of interesting is to see how the Fed kind of pieces together the diverging views. So if we go back and think about it, when we got the dots plot, there were a number of Fed officials that projected 2 rate cuts this year. There was also a very similar number of Fed officials that projected no rate cuts this year. It's kind of a barbell approach of what Fed officials believe is going to be the likely outcome this year. So I think it'll be interesting to see if they make any sort of a mention in the minutes to try to bring together those diverging views.
And it's funny you mentioned.
Okay, Tesla's starting to bounce. Shorts covering Tesla.
Wider spread than has ever really been seen before, and quite vocal public action from some of those Fed heads saying, "I want to
Tesla shorts covering.
Now the bank's analysts.
Okay, noticed it too.
Their base case is now 0 cuts. What would have to happen for that to actually transpire?
Allowed 1 a week.
Continue to see the economy perform relatively well, like we have seen. I think that pairs back the number of rate cuts that we would expect to see. Also, obviously, big tariff news is what's happening today. Those were pushed back to the August deadline. So I think that that's going to be a notable thing. What happens ultimately with tariff?
Okay, futures ripping here.
After that April 1st deadline. So if we do get higher than
futures are ripping here. Okay.
And that drives up inflation, maybe causes a slowdown in growth.
Futures ripping off the low there. Pow. Shorts covering.
Probably put them in a pretty difficult spot because you would see higher inflation, slower growth. So that's not a stagflationary environment that they want to be in.
Absolutely not. And as we think about, what that sort of looks like for the yield market, which seems, bonds so responsive to all of this, what are you expecting, as we move through the summer in terms of what we're seeing? You mentioned it's a quiet day today, but that certainly hasn't been the case in the last few months.
Yeah, you're right. We did get some fireworks. So not just 4th of July fireworks this year, but we have seen some fireworks. So our expectation, Marley, is that we should see the yield curve steepen as well. So being led by lower short-term yield. So again, our view is that the Fed is going to cut interest rates this year, but it's dependent upon, it's a matter of
low tips alert -800.
So if we do see
right back down. Okay, so right back down.
we should see lower As far as longer term yields, we think
Rotation looking good. Microsoft popping off the low.
the term premium.
Microsoft popping off the low.
Additional compensation for holding longer term bonds relative to rolling over shorter term bonds. That's moved up and it's still above where it has been post pandemic averages.
And Tesla, this is squarely stock here.
Also, if we
All
look
right.
at global yields, those have moved up. So kind of puts a limit on how much lower longer term yields could go. So that's one of the reasons why we do think that the yield curve will likely steepen later this year.
Well, Cooper, we really appreciate you joining us this afternoon. Cooper Howard from the Schwab Center for Financial Research. And we did just update you on that news about copper hitting its all-time high. So it is time for us to dive right into metals now. For that, we welcome in Joe Tony, the Chief Market Strategist for North America from the World Gold Council. Joe, thank you for being with us. Oh, we're glad to have you, and especially on a huge day for copper, spiking to that new all-time high. President Trump, of course, announcing this 50% tariff. Did you see this coming?
To be honest with you, respect to tariffs and respect to critical minerals or strategic minerals or any metals or ore that's going to be vital to the future of the U.S. when it comes to defense, energy, etc. I think anything is on the table. Anything is possible. Did we see this coming?
Google, volume coming in, Google.
This administration has made it very clear that the dependency on foreign nations to source critical minerals or other assets is vital for them to address it. So
Google volume there.
action speaks volumes to it.
Okay, what's Intel doing? Intel. Intel. Intel.
Everything is possible, and I think that the deadline being moved out to the August date is just that. It's just moved the date. And I think he's very serious, the administration is very serious about dealing with how we source and where we source our minerals from.
So you said it's been favorable to gold, because there hasn't been much impact. Do you expect there to be any changes moving forward with gold? Will the administration look at gold as a potential metal to put a tariff on?
Everything is possible, but right now what the signaling is that we're getting is that right now gold is being deemed predominantly as a monetary metal as opposed to a critical mineral. Defense applications, telecommunication applications, those aren't areas where gold mainly plays a role in the economy. It plays more of a role in savings. It may play a role in terms of growth, in terms of portfolio holdings, central bank reserves, etc. So it's strategic in nature, not on the critical minerals list as deemed by the administration.
Low ticker minus 800.
All right, right back down to the low. Markets are squarely right now.
Cause logistical challenges. So we're keeping a close eye on what and how these tariffs are developing. We had an earlier move in the gold price, which was very momentum driven, related to gold.
Okay, super micro pushing a bit higher. Super micro. New high of the day. Super micro looking good. Okay, so we're pushing a bit higher. Super micro looking good.
Nothing's final until it's final, so it could change.
We have seen so far this year. Now, gold holding pretty firmly.
Tesla, nice reversal so far.
That 3,300 level. Not a ton of movement despite some trade talks easing and some easing geopolitical tension. Do you think that indicates that the market might be a little cautious?
Okay, coming into the closing bell. We got 5 minutes to go. 5 minutes to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. I hope you had a good day today. Hope you had a good day. Okay, here is Super Micro pushing a bit higher.
So what moves gold on the tactical side is momentum and opportunity cost. We see the Fed moving
Super
rates
Micro.
in the year. That opportunity cost is going to be good for gold on the short term.
Okay, looking good. Super Micro.
On the tactical side, people are moving quick to try and assess whether or not momentum is going to move the gold price. For us, we look strategically at what's happening with the gold market right now. And we need to see some real fundamental changes for us to break out of this range bound where we are. We're up nearly 25-6% year to date. And that's very aggressive versus kind of annual expected levels of return closer to 8%. So yes, we've run up. There's been reasons for that. But right now, I think we're going to hold out until we can get some bigger, stronger signals to what's really playing out from the economy. Fed's going to behave. What's going to happen to dollar and dollar-based assets going forward. And that's what's going to move us more strategically.
Okay, Microsoft, nice pop. Apple with a nice pop. 4 minutes to go. 4 minutes to go. Meta turning back up. Tesla. Tesla's almost $4 off the low.
Seen for the last few years, still growing at that 2.5% rate on an annual basis. Mining companies, while consolidating in the large scale end of the market, still making good opportunity to take advantage of the higher prices and still performing above the all-in sustainable costs. Right now, I think what we're thinking about is
Tesla.
the smaller scale
$4 off the low and trying to push more. It's not acting really healthy, if you will. It's been gapping around the last week or so. Netflix is turning up. Netflix.
So for us, we think large scale mining looks good. Growth at about 2%. It's that small scale mining space that we're keeping a close watch on.
Hey, Google looking for that to push higher. Google. Google looking for more upside in Google. Okay, maybe tomorrow we'll get some more upside. Okay. So it's been a good day. It's been a good day. There goes NVIDIA. NVIDIA looks like it wants to go some more. NVIDIA, okay. Looking good. NVIDIA pressing the highs of the day. Looks good. NVIDIA.
Well, they are about 20 to 25% of the annual consumption of gold in the last going on to 4 years. Now it's been
Okay, NVIDIA, just rip it. Just rip it already. NVIDIA. Meta following through on the push higher. Meta.
Central bank space where we talked to 73 different central banks around the globe. 95% of them are saying gold's going to play a key role for all central banks. 50% of them are adding more gold to their reserves over the next 12 months. And ultimately what it's telling us is that they're looking at their reserves. They need certainty around how assets will perform. We expect them to be at the table. And our gold demand trends report, which we'll be releasing in a few weeks, will give you the second quarter total number. And you'll probably see that to be another strong quarter for central bank demand.
Joe, we appreciate you joining us this afternoon. That's Joe Capitone from the World Gold Council. Coming up, we've got the closing bells, and we're bringing in our closers panel to break down the session and more next on Market on Close.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge and shift your perspective.
Okay, NVIDIA trying to push more. NVIDIA. Okay, Microsoft is ripping here. Microsoft going pretty nicely here. The S&P has been pretty choppy. S&P pretty choppy. Still a spinning top inside day. So the rule is whichever direction the markets take tomorrow, that's the direction you should play. Okay, so inside day of a large candle price action. Look for tomorrow's candle to give us the direction up or down or sideways for that matter. Okay, so I got a hard stop, folks. Have a great evening, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell, Tuesday, the 8th of July. Enjoy being here with you, giving the play-by-play. We had quite a few nice trades today with NVIDIA back to the highs. We had Google coming off the low, thanks to Corey. We had Uber. What's Uber doing? Uber. Okay, Uber. All right, Uber back to the high today. Uber back to the high today, thanks to David Percy. Okay, so that was a good one. Yeah, pretty good looking market today. Have a good one, everyone. Take care. We'll see you tomorrow. Ciao.